Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Supply chain team, they became unsung heroes of our pandemic timeframe, where they just came forward with all kinds of creative workarounds, risk management, diversifying our supply chain.
Let's take a look now at where European markets trading as we head to a close. You can see we're seeing a bit of pressure on the FTSE, the DAX and the CAC 40. The figures, of course, talking about inflationary pressures. Look, we had some earnings. There were some disappointing, some better than expected. I know Deutsche Bank, one of the biggest fallers. And of course, what we look at is some of the inflationary pressures, especially in the UK. We'll have the market close shortly. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
stocks finishing up the day in Europe trading, and this is what we're seeing across the board. A little bit of pressure that you can see here on the FTSE after the UK budget, down some 0.3%, although, for example, we're getting supported for some of the pub stocks. Overall, there's a worry about inflation. If you look at some of the groups that are selling off the most, it's really energy and mining. So they're leading the retreat overall in the Europe Stoxx 600. I have to say, it's not bad news altogether. We did have some earnings beating estimates, and if you look at the equities as a whole in Europe, it's the 7th consecutive quarter of gains. It is also, they're also on course for the best month since March. Now, this is what we're seeing overall for the European Stoxx 600. Again, it's mining and energy because, for example, we saw iron ore close off. The picture for earnings is a little bit mixed. It really depends on where you're looking at. There was a lot of pricing pressure, for example, from some of the luxury stocks. If you look at some of the other ones, not so well. I know some of the technology stocks in the U.S. also filtered through Europe and some of the concerns there. All right, we have utilities, real estate, chemicals on the up. If you look at basic resources, banks. Now, banks is an interesting one because we keep on hearing that banks is a good way of playing inflation. We're seeing inflationary pressures. The Bank of Canada reminded us of this just 40 minutes ago. And despite this, bank's down some 1.2%, I suspect. It's also Deutsche Bank. So let's look at some of the individual movers. We have, for example, some of the UK pubs. This is because we're expecting taxes to be raised by the Chancellor here in the UK. Not so. So we're seeing a nice little lift to some of the stocks like JD Wetherspoon, the biggest pub operator here in the UK, gaining some 5%. SEB, this, if you use, Alex, for example, a cooker, it might be by the appliance maker in France, SEB. They actually raised guidance, one of the biggest gainers in today's trading session, 12.4%. However, Deutsche Bank, so this was a disappointment in the markets, although they said that everything was okay in the various units apart from equities because they exited that. Deutsche Bank down some 6.7%, weighing on banks in general.
Yeah, definitely sort of not participating in the same way that some of its peers had in that equity business, although trading down 12% was relatively in line. The problem becomes really, what's the catalyst for Deutsche Bank? Well, Bloomberg's Maria Tadeo sat down with Deutsche Bank CFO James von Moltke, and they spoke about how monetary policy response to inflation concerns is actually helping the bank.
The current rate curve is already beginning to help the banking industry. So as we see rates go up, in our case, the current curve is worth about 150 million in revenue terms, more for us next year than we thought a year ago. So that's a help. And that rises to about 500 million euros in 2025. In fact, more than that on the current curves. Should inflation rise further and rates move up further, more benefit from the banks. And that's very helpful after a long period of low and negative interest rates. Now, the economy, going to the front of your question, look, when we talk to clients, corporate clients, they see inflation in their supply chains, and they are looking for ways to pass through those inflationary pressures in their pricing. And we are seeing in the debate about how other things like wages would adjust to those pricing pressures feeding through. And so there is, of course, a risk that it isn't transitory.
You were able to attract a lot of money in there. It does seem that your target that you were hoping to get by 2023, you're far ahead of that, and all the targets will be met. So how much appetite is it from the investment community and the inflows that you're seeing, particularly on the ESG space? The
appetite is very strong. So in our asset manager, DWS, revenues were up 17%, assets under management up over 20 billion, and that reflected inflows of 12 billion, including 5 billion, to your point, in ESG products, which is very strong, sort of record growth in that product area. On the Deutsche Bank side, we've been measuring sustainable financing towards a target that we'd set initially for 2025 of 200 billion. We brought that forward to 2023, and at this point we're at 125 against that measure. So we see sort of growing appetite for these products and a growing acceptance in the market, and an increasing sort of product areas where green ESG sort of rules and taxonomies are in place and are working really well.
And what about fixed income? I mean, that's usually the unit that people look at Deutsche Bank. You're competing with big U.S. banks. How are you going to stay competitive on that?
Absolutely.
It does seem the market is a little bit, perhaps, crowded.
And there, I think we performed in line with the market, which again is good against what was an outperformance last year in fixed income. And it demonstrates that we're really consolidating our market shares. We've continued the progress, I think, since 2019, since we announced our transformation, our restructuring. We've focused the business on core areas where we could be competitive. And as we're seeing, the client engagement, the momentum, the progress in the business is really showing through.
Oh, that was Bloomberg's Maria Tadeo with the Deutsche Bank CFO, James von Moltke. I have to say, we were a little bit surprised by some of the violence of the share price swing on the back of those earnings. So for more on Deutsche Bank's results, joining us now, Alison Williams from Bloomberg Intelligence. She's senior analyst for banks. Alison, great to have you on the program. I was surprised by the amount of which the share price has fallen, because actually earnings were a little disappointment in certain units, but otherwise in line with estimates.
They were, and I would say that also, the share price to me, obviously, we don't do buy, sell, or hold in Bloomberg Intelligence, but it is a tough day for the stock. I would point out that the backdrop often does matter with the banks, and sometimes just depending on what's happening with the macros or the stocks, that can really sort of exacerbate the pricing action, and the stock has been a good stock until now. Now, all that being said, yes, earnings were better, and we think that it's been quarter after quarter of better than expected FIC trading. That's really, the area that people were worried about, and it's coming better than expected. As you mentioned earlier, it's not the spot where Wall Street is making money, and so I think even though the earnings were better, we know with the banks a lot of times people don't get too excited about investment banking surprises or loan loss provision surprises, which is where the earnings surprise was for Deutsche Bank, because they're not sure how repeatable that was.
Exactly, so Alison. So I guess the question is, what is the alternative source of growth? Like, other than higher yields at some point, like what is it?
Well, I think so. It's two things. So higher yields obviously is great for the banks overall, but for the other banks that are heavily involved in equities trading, that have bigger M&A and IPO franchises, that business looks like it's going to sustain. I mean, perhaps not today with the tape that we're seeing for IPOs, but I think that that's sort of where we're getting the momentum going forward. And so I think for Deutsche Bank, it's two things. So one is where is sort of the revenue catalyst, but the other thing, and I think this is the important thing that where people are disappointed today, is capital. And so capital is something we haven't talked about in a while for Deutsche Bank. Initially, years ago, the issue was they don't have enough capital, but I think people may have been getting excited over in recent quarters, hey, they're doing better, they're going to start returning capital next year. The last 2 quarters, we saw Deutsche Bank set aside about 575 million euros towards paying out that capital. This quarter, their capital ratio came in, lower than expected. Part of that is rule changes, but also very marginal, about 65 million euros. So we went from like 575 to 640. So you can see that incremental increase. And so those people that might have been getting excited for a payout and the money setting aside for payout are less excited today. And, with some of the headwinds that we just discussed on profits, that part of the story, it might be a little disappointing for next year.
Alison, when does Deutsche Bank catch a break? I feel like, every time we talk about a bank, it's not going as well as they think it is.
Well, I think they have caught a break. Ironically, the pandemic, over the last year, fixed income trading has been strong. And so if you look at the several years for Deutsche Bank, which I believe you're alluding to, for so many years they had these restructuring and the environment worked against them. The environment actually has generally worked for them in terms of fixed income trading, but now we're starting to get to a place where it's normalizing. So still good, still above 2019, but just not that extra lift.
Hey, Alison, just before we let you go, cost cutting has been sort of a feature for Christian Savings. Then we had sort of unexpected expenses due to some issues at Deutsche Bank. And then at the same time, there is a massive competition for talent, even highlighted more so because their deal-making fees were just not as good as the other big banks. I've been anecdotally talking to a lot of guys in the industry, and it is crazy out there. I mean, it's so much activity and so much competition. How do they deal with that?
Yeah, and so I would say 2 things. One is they did have an increase in the non-core cost, which is the first thing you spoke of. They had flagged this last quarter. They quantified it a couple of times in September. It was mostly in the numbers. So I think that even though that was sort of a step up in the non-core costs, they're doing what they need to on the other side of things, and they had sort of done their best to flag that. But I think it's your second point that is a little bit more worrisome when you have this record, as we said, record IPO environment, record M&A, really strong environment, and you have these leaders talking about J.P. Morgan, talking about raising comp costs, et cetera. It is difficult for someone like Deutsche Bank increasingly to compete for that talent.
Yeah, it's like definitely a catch-22 in that respect. Allison, thanks a lot. Always good to chat. Allison Williams of Bloomberg Intelligence. Thank you very much. All right, coming up, you're competing for talent in big banks, but what about competing with Amazon while also dealing with supply chain constraints? Well, we're going to talk about that with an exclusive interview with Fiji Simo, Instacart CEO, coming up next. This is Bloomberg.
Technology. How should we be looking at big banks and technology?
Technology is our friend. So it's helping us transform the bank fundamentally. And in fact, we're speaking, I think, as we speak, to our shareholders around what we've done and how we've transformed the bank. We also see technology, and technology companies as partners. So some
not
of our
rivals.
We know that there are big parts of what have been our business historically that will be absorbed into convenience platforms. And by convenience platforms, whether that's Amazon or Facebook or Alibaba or Tencent or something like that, those are platforms that are just very convenient for people to conduct their day-to-day financial affairs. And it'd be very difficult for a bank to compete with that. Now, in some cases, I'd say, let's say in Africa, we are setting up a competing platform to the convenience platforms. And we're working with technology companies and mobile telephony companies and others to create a platform of our own. But for the most part, we're going to be playing on somebody else's platform.
One day on Bloomberg Television and Radio.
We are on the verge of a disaster.
Join us live from Glasgow for coverage of the COP26 Climate Change Conference.
People are beginning to build some momentum, I think. The question is, will it be enough?
We'll speak with global leaders, keep you up to date on progress and setbacks, and analyze what it all means to you.
We're going to need to see some real action.
COP26, the UN Climate Change Conference. Special coverage on Bloomberg Television and Radio.
The growth story in cannabis remains very strong, even after the sort of loosening of the pandemic. There was a worry that there might be wallet spend competition, but so far the cannabis sector seems to be holding up very strong.
Let's check in on the Bloomberg First Word News now. I'm John Hyland. In the UK, Chancellor of the Exchequer Rishi Sunak said the economy is on course to post the fastest growth rate since 1983. One forecast calls for the economy to grow 6.5% this year. It contracted 10% in 2020. Sunak delivered a budget that he says will help the UK bounce back from the pandemic. He says he wants taxes to go down by the end of this parliament. And in Germany, economic growth is expected to be much weaker than predicted this year. The outlook for 2021 has been cut to 2.6% from 3.5% in April. The German economy minister blames a scarcity in some raw materials and rising energy prices. The government expects a boom to take place next year and has raised the GDP forecast from 3.6% to above 4%. And the chairman of the Joint Chiefs of Staff, General Mark Milley, says China is the greatest geopolitical threat to the United States. He's calling China's recent missile tests significant and concerning. General Milley spoke on the latest episode of the David Rubenstein Show, Peer-to-Peer Conversations.
Well, what you saw, and I don't want to get too much into the classification of what we saw, but what we saw was a very significant event of a test of a hypersonic weapon system. And it is very concerning. I think I saw in some of the newspapers they used the term Sputnik moment. I don't know if it's quite a Sputnik moment, but I think it's very close to that.
Don't miss the full conversation with General Mark Milley on the David Rubenstein Show, Peer-to-Peer Conversations, tonight at 9 p.m. in New York. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm John Hyland. This is Bloomberg. Francine?
John, thank you so much. Now, online grocery giant Instacart is stepping up competition with Amazon as the grocery delivery market heats up. It added 2 new board members and is making its biggest acquisition yet in shopping cart technology. Now, the food business has not been immune to supply chain issues, and the Instacart chief executive, Fiji Simo, spoke exclusively to Bloomberg's Emily Chang about how the company is tackling these challenges as she makes her first 90 days as chief executive.
We are already certainly seeing issues with finding products on the shelf. We have 500,000 shoppers in the aisles of our grocery stores every day. And as a result, we get a lot of data from them about what's not on the shelves. And so we send that data back to retailers and they realize that it's out of stock and that they need to act on that. And so that's also really important data for them to be able to take action, not just for things that are on Instacart, but also for the management of their stores more generally.
As food prices continue to increase, does that mean Instacart is going to get more expensive? And what does that mean for the retention of your customers at a time when more people are starting to shop in store?
So we're doing a lot to make sure that you continue to get a lot of value from Instacart. In particular, we are really highlighting all of the deals that we have on the platform. And that's also when advertising comes in, because we are building this advertising business. It is also helping customers find better deals because advertisers like to advertise the deals that they have on specific products. We're really focused on making sure that despite the current environment, we are developing products that take prices down or just offer better deals generally.
There's the supply chain issues that are causing advertisers to pull back. There's also the Apple ad tracking technology. Is Instacart feeling the squeeze of ad budgets yet? Is that trickling down to you?
We are seeing advertisers be concerned about advertising during this supply chain disruption. But the thing that's interesting for us is that we only show ads to consumers when we have a very high confidence that the product's going to be on the shelf. So we can give advertisers some confidence that when they spend ad dollars with us, they're not going to spend dollars that are going to go towards consumers that will not find the product. But we are certainly seeing a lot of advertisers worrying about that for sure.
You're also announcing 2 new board members, Meredith Levien, CEO of the New York Times, and Lily Sarafan, co-founder of Home Care Assistance. What do they bring to the table that Instacart doesn't have yet?
So in the case of Meredith, she has seen an industry in transformation, and she has taken an incredible brand and made that digital transformation at the New York Times. So I think she's going to help us tremendously in understanding how to take, some of our, grocery retailers and help them through this digital transformation and be the best partner we can. She has also built an incredible subscription business Express at the New York Times, and we are seeing Instacart Express become more and more important to our business. In the case of Lily, she has built, an incredible business in a highly complex industry. And so she brings that perspective to the table, as well as the perspective of someone who has advised a lot of local marketplaces and worked with frontline workers for many years. So really looking forward to understanding our ability to bring these businesses to scale and welcoming them to the board.
That was part of Bloomberg's exclusive interview with Instacart's CEO. And make sure to catch the full interview later today on Bloomberg Technology. That's coming up at 5 p.m. in New York and 10 p.m. in London. Francine, I'm always interested. So here in New York, you got like local delis and stuff, but you want like a huge grocery order, definitely delivering from like the Whole Foods or Instacart makes a lot of sense. Do you guys do that over there or no?
Yeah, 100%. So here we also have a listed company actually called Ocado. So it's changed providers over the last couple of years. It's doing okay depending on the provider, that it chooses. And then you have companies like Deliveroo. I think the also bigger question, right, for regulators, and I know there's been some questions on Instacart and how they treat their gig workers, is what rights do they have? So there's been this huge movement, I think, across the world, maybe starting in the U.S., in saying, well, I'm a Instacart shopper. It gives me great flexible hours. But then there's been this huge movement of asking customers to delete the app just because they're, not doing what they should in terms of worker pays and holidays and the like. So I know it's for not only the companies to figure out, but possibly the politicians and sometimes the regulators maybe to step in, possibly.
Yeah, it's so interesting. It is quite expensive. And as overall costs are rising anyway, I feel like I've really felt the increase in grocery prices. And when we have things delivered from Whole Foods or Instacart or something like that, I feel it now. Like that extra $10 or whatever it is, I don't know if I'm going to wind up paying that, to be honest. So I just wonder then, do they pass that on? Is it a margin story? Or does it really continue to entice users to buy on a consistent basis, which then helps sort of their ad revenue?
Yeah, and again, it depends on where we are in the winter months for the pandemic, right? This is really services that boomed during the pandemic because everyone was at home or didn't feel comfortable enough to go to the grocery store. I kind of like going grocery shopping. I don't know whether it's like an Italian thing, because I like to feel the tomatoes or the avocados or whatever. And people may go back to it. I don't know whether it's a trend that gets accelerated or we move into grocery shopping and that's it. No aisle 5 milk spillage anymore.
Yeah, no, I don't think that's happening. Like a specialty or it's going to be e-commerce. All right, really interesting interview. So catch the full interview later on today at 5 p.m. This is Bloomberg.
China is a gigantic part of our economic life and will be for a long time, for our lifetimes. But that does not mean that we should be naive in the way that we look at our critical national infrastructure, the way we look at, you mentioned nuclear power, you mentioned 5G technology. Those are all legitimate concerns that any government, many other governments around the world have. But I've said this many times, it's worth repeating, I am no Sinophobe, very far from it.
Do you think you're the last Sinophile in the cabinet?
No, I expect there are lots of... look, China is a great country and civilization.
What about wind power? Would you let them buy offshore wind power? That's infrastructure.
I think you'd have to
railways.
You'd have to look at what was you're defining as strategic or critical.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Well, we have a lot more on Rent the Runway. If you look at the fashion site Rent the Runway, we're raising some $357 million in the upsized IPO. Now it's opening at $23. The IPO is at $21, so it does seem to be oversubscribed. That just coming in, it's the top of the range. And again, it indicated the price shares at the top of the range. At the moment, $21. We'll have plenty more on that. Coming up, Jennifer Hyman, Rent the Runway Chief Executive and co-founder. That interview coming up at 1 p.m. in New York, 6 p.m. in London. So let's check in on what's moving in the U.S. markets. Bloomberg's Abigail Doolittle has the latest. Hi, Abigail.
Hi there, Francine. Well, hopefully Robinhood, Rent the Runway, does not go the way of Robinhood, which right now is down sharply on a disappointing earnings report below its IPO price. But we do have a couple of transportation movers that are going the right way, starting off with Harley-Davidson. Shares are up 6.2%, a blowout quarter. They beat earnings estimates by 48%, passing along successfully higher prices to Americans who really want to go on their motorcycles. Norfolk Southern, the railroad, also higher off the highs, but up nearly 1%. They beat 32% growth for net income. General Motors, it's interesting. They beat in a big way by more than 50% on profits. The fiscal year earnings forecast is up, but chip shortages remain, so investors focused on that. Microsoft, another all-time high, continuing to beat profits, earnings for since 2016, so for a fifth year. Alphabet, a strong quarter, up 4.9% despite a small adjusted earnings miss. Beat sales, ad strength is certainly there. And then Twitter and Visa, those are the tech laggards you can see, Alex. Twitter missing the mark. Analysts pretty concerned out there. And then Visa, they beat, but the forecast not great. Some price targets taken in.
All right, Abigail, thanks a lot. Super appreciate that update. Bloomberg's Abigail Doolittle joining us there. Still coming up, there is a lot. You get earnings from eBay, Ford, United Rentals, all after the bell. We have a Brazil rate decision, Bank of Japan rate decision tonight in the U.S. and Thursday in Asia. And Francine, that's just sort of the appetizer to tomorrow in the ECB.
Yeah, the appetizer, because tomorrow it's a big one, ECB rate decision. Then we have U.S. GDP, earnings from Lloyds Bank, Airbus, Amazon, Apple, much more. And then big oil executives also testify before a U.S. House panel on climate change. That's all before Glasgow in 5 days.
That wraps it up for Francine and myself. Coming up, Ralph Schlotstein on Balance of Power. This is Bloomberg.
Проходим опасный участок, ответственный. Вот там поднимаете на Жумаре, шерпа страхует.
Очень много думал о том, что я сделал, и понял, что сделал какую-то нереальную вещь. Не знаю. Я до конца как бы внутри себя даже не могу поверить, что я через это прошел. Состояние, наверное, организм истощен, потому что очень много физической работы. своим вот этим поступком хотел сказать, что только через действие в этой жизни достичь можно абсолютно всего.
Fauci and his team shared data about mixing the vaccines. The vaccines can be mixed safely, and that's very good for people who got not Moderna vaccine, but want the Moderna vaccine for a booster because it's of a higher dose.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
From the world of politics.
If you believe in infrastructure, it's not just water and sewer. In broadband, it's building a foundation.
To the world of business.
The market is recovering much more rapidly for commercial aerospace.
This is Balance of Power with David Weston.
From Bloomberg World Headquarters in New York to our television and radio audiences worldwide, welcome to Balance of Power. We begin today with a very special guest. Ralph Schlosstein again exceeded expectations. He announced that he will be stepping down as of February, turning the reins over to John Weinberg, his co-CEO for the past few years. We welcome now Ralph Schlosstein back to Bloomberg. So, Ralph, congratulations on quite a run. Thank you for being here. Go back over those 13 years, more or less, and include the earnings today. How has the Evercore changed over that period of time?
Well, it's changed in a number of ways. The firm I joined was a genuine boutique, $180 million of revenue. And so just from a scale point of view, on a trailing 12-month basis, our revenues exceeded $3 billion and our earnings exceeded $15 a share.
And where were they when you started?
19 cents a share and $180 million. Wow. So it's grown a lot in scale. But there's so many other things that have happened. We've globalized the business. That first year, we had $5 million of revenue from companies outside of North America. Today, a third of our revenues come from companies outside of North America. We've broadened dramatically what we do for clients. We were an M&A and restructuring firm in 2008, and today we have the number one independent equity research platform. We do equity underwriting. We have the number one practice in activist defense. We have the number one practice in corporate restructuring, split-offs, spin-offs, et cetera, et cetera. So what we can do today is we can advise clients on literally anything that they want to do in the financial markets. And that means we have a greater share of our clients' wallet. And then the other really important thing that is happening at the firm is we've become a talent development company. And, when I joined, less than 10% of our partners were promoted from within. Today, 40% of our partners have been promoted from within. And that's the stock. If you look at the flow the last 3 years, it's around 50%. So that's a big thing.
And you've shown that you can and do compete with the big boys. I mean, I know you pay attention to the league tables.
I pay attention to the M&A league tables, but I pay more attention to what each firm has in terms of advisory revenues. And as I said, we started out at 180, and on a trailing 12-month basis, we're around $2.5 billion. Over the years, we passed all the European firms about 8 or 9 years ago. We passed Citi about 6 years ago. In 2018, we passed B of A, Lazard, and Rothschild. And so we've been number 4 since 2018 behind Goldman Sachs, JP Morgan, Morgan Stanley.
So what comes next in this business and for Evercore in particular? I mean, what does John Weinberg have in front of him?
Well, first of all, it's worth noting that the firm was founded 27 years ago by Roger Altman. He was the CEO for the first 14 plus years. And then we had a very smooth transition to myself, and now we've had our second extraordinarily smooth transition. So it's worth noting that that doesn't always happen in investment banking. But beyond that, we have huge growth opportunities, filling in the white space, both geographically and by industry, adding to our product capabilities, and also, we call it the four techs, clean tech, real tech, biotech, and fintech. Those are sectors of the economy that are growing very rapidly, and where the total addressable market, even though we're adding people, is growing faster than we're adding.
Well, that's the big question. I mean, a famous movie studio head once said you want to choose your predecessor carefully because, in fact, you want somebody who wasn't all that successful. You've left quite a track record behind. So where's the upside for that? You talk about white spaces. Is it by sectors like biotech? Is it some sectors where you are now?
It's in building in those areas, and also, we're much smaller in Europe than ultimately we should be. And by the way, John, he's been at the firm for 5 years. He was executive chairman for the first 3.5 years of that, and my co-chair and co-CEO for the last 15 months. But from the moment he joined the firm, along with Roger, we've been managing the firm together. So I don't deserve all the credit for at least the last 5 years or even before that.
Why'd you decide now is the time?
Well, I'll be 71 in February. I'm stepping down February 25th. I will have been doing this for 13 years. There's some chance that my wife might be moving, and so,
I've heard rumors to that effect.
So I'm the idea of having a little bit more flexibility and not waking up every single day worrying about how is Evercore doing is very appealing to me at this point in my life.
Talk about the culture at Evercore and how it has evolved and how you expect it to evolve. I know you have your first female CFO, for example.
Yes.
Has it changed already? What do you expect in the future?
Well, Roger started with a great culture, which was very collaborative and with great values. The very first presentation that he made to his very first client had 2 words on the first page: quality and integrity. And so that was the absolute start of the culture of Evercore. And we have a very collaborative culture. I often get asked, what does it take to be a really good Evercore partner? And I say 3 things. You have to be inarguably A+ or A at our craft. You have to have the highest integrity, and no jerks. And no jerks is really important because investment banking is a team sport. And Roger and John and I are yelling at our partners all the time, bring the right team, make sure it's much better to win by 20 than by 2. And if you're encouraging people to collaborate and work together, they have to all be super qualified, because nobody wants to bring a less qualified person to their client. And B, they have to be pleasant to work with, and that's where the no jerks rule is really important.
Evercore has had quite a run, but I must say investment banking right now overall is pretty much on fire. How much of it is because you run faster and jump higher, and how much of it is actually the field you're playing on, particularly with the extraordinary degree of monetary and fiscal stimulus? The cost of capital is pretty low right now. That encourages people to make deals, I suspect.
There's no question that right now is about as good as it gets in our business, and that we have a wind at our back, affected by the whole market. But if you look at the last 13 years, we've gained market share every single year. So Evercore has thrived, obviously today when the markets are very strong, but we also thrived in 10 and 11 and 12 and 13 when M&A was essentially flat and half the level that it is today. And each of those years we grew by double digits by taking market share.
Ralph, you've had a long and distinguished career here in New York in the finance area. You also, though, have made a mark in Washington over the years. You've spent time down there in policymaking positions. Talk to us about what's going on down there right now. And let me pick one subject right now that's very much in the news. That's the so-called billionaires talks that I guess Senator Ron Wyden has come up with. Senator Elizabeth Warren sort of likes the idea of, which as I understand would tax people's accretion of value in assets before they sell them. What do you make of that?
Well, first of all, I've said on this show and other places before that I have tremendous empathy for the idea that the well-off and even corporations should pay a bigger share of the tax burden. And I think what we're doing from a fiscal policy point of view in the long run is unsustainable, and we're either going to have to close that gap. We can't operate forever with deficits like we have, even though right now it's okay. I think the billionaires, so-called billionaires tax, I have enormous empathy for the objective. I don't think it's a particularly effective way. I don't even know how you would do this. The IRS has no information on people's net worth. They only have access to public securities. I would worry that this, if you're not taxed on your privately held gains and you're taxed on your publicly mark-to-market gains, what effect will that have on the desire of companies to go public? One of the great strengths of our economy is our capital markets. So this is one of these things that I think sounds good as a soundbite, but the actual implementation of it, I think, would be very challenging. Having said that, I have enormous empathy for what is trying to be accomplished here.
Well, and in part because you and I have talked about it before, you think there are some things we should be investing in this country at the government level that we should get some money for. But one of the things that appears to be the case right now is the Democrats came into office, into power, saying we want to do away with the Trump tax cuts, as they're called, from 2017. It looks like there's a lot of resistance to that. Having spent that time in Washington, is it basically an axiom right now that once you give people something, you can't take it away, whether it's the Affordable Care Act or tax cuts?
I think it's a challenging proposition in both directions, and I think some of the elements of the legislation that's being talked about right now is reflective of that. The idea that we'll give you a benefit for 2 years, and then once it's the foot is in the door, nobody will dare mess with it afterward. And so the whole budget scoring process here where, we'll just put something in place for 2 or 3 years, and then, of course, it'll disappear. That's not exactly how Washington has worked historically.
And finally, Ralph, it's just today you've announced you're stepping down. You don't step down to February. And then, as I understand, you're going to be chairman emeritus of Evercore. But have you given some thought to what comes next for Ralph Schlosstein? You've got a lot of energy left.
Well, I'm certainly not going to stop. I'm not going to stop working, or I am not going to stop working. And, I've committed to my colleagues at Evercore that I'll stay as chairman emeritus. I'll work with clients. And if somebody asks me, I'll certainly be there to proffer advice to them. I enjoy bringing new talent into the firm, so I'll certainly be involved in that. So we'll see. I've just come out of the closet today.
So to speak. Well, let us know how it develops. Thank you so much, Ralph, for being here. Really appreciate it. That's Ralph Schlosstein, Evercore co-chairman and co-CEO, joining us in an exclusive interview. Coming up on the eve of the Virginia gubernatorial election and maybe a deal in Congress on president's economic plans, we talk with famed pollster Frank Luntz about the mood of the nation and of Virginia. This is Balance of Power on Bloomberg Television and on radio.
it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Engine number one was able to do on the Exxon fight. It opened a lot of people's eyes to, I guess, the power that smaller investors can have. And I'm curious as to how other people can sort of look at what you did and use that is either a template or maybe just some sort of guide as to how they can sort of approach their relationships with other companies.
We founded the company in Engine Number One on the idea that we take the data, not ratings and rankings of ESG of the past, but we actually take the environmental, the climate, the social, worker data, and we simply use it to look at the valuation of companies and look at it over a long period of time. And so if you think about it that way, you own these companies. Everybody that owns the company, whether you're a big institutional investor or you're a small retail investor, you own the company. You have a voice, you have a vote every year. Yeah. And so our approach is to use the vote and engage with these companies over time.
But that's always been the case. I mean, at least in theory.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. For Bloomberg First Word News, we go now to Mark Crumpton.
David, thank you. The chairman of the Joint Chiefs of Staff, General Mark Milley, says China is the greatest geopolitical threat to the United States, and he's calling China's recent missile tests significant and concerning. General Milley spoke on the latest episode of the David Rubenstein Show, Peer-to-Peer Conversations.
Well, what you saw, and I don't want to get too much into the classification of what we saw, but what we saw was a very significant event of a test of a hypersonic weapon system. And it is very concerning. I think I saw in some of the newspapers they used the term Sputnik moment. I don't know if it's quite a Sputnik moment, but I think it's very close to that.
Don't miss the full conversation with General Mark Milley on the David Rubenstein Show, Peer-to-Peer Conversations, tonight at 9 p.m. New York time, right here on Bloomberg Television. China has slammed U.S. efforts to boost Taiwan's participation in United Nations organizations. Beijing says the self-ruled island has no right to join the UN a half-century after it was kicked out. U.S. Secretary of State Antony Blinken has called on other countries to join the U.S. in pushing to give Taiwan a greater role at the UN. In the UK, Chancellor of the Exchequer Rishi Sunak says the economy is on course to post the fastest growth rate since 1983. One forecast calls for the economy to grow 6.5% this year. It contracted 10% in 2020. Sunak delivered a budget today that he says will help the UK bounce back from the pandemic. He slashed taxes for pubs and restaurants, cut duties on alcohol, and handed more income to some of the nation's poorest families. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Thank you so much, Mark. Next Tuesday, Virginia voters will elect a new governor, with former Governor Terry McAuliffe still hoping to get a boost from congressional passage of at least some of President Biden's economic agenda. For a read on where we sit right now in the sentiment of voters, both in Virginia and nationwide, we turn now to famed pollster and political strategist Frank Luntz. Frank, thanks for being back with us. Give us a sense, first of all, that question about the linkage potentially between Build Back Better getting passed or not passed and an election like in Virginia. Are they linked?
Well, I'm glad that you're raising the topic because Virginia has always been a key indicator of what happens the following year when we have off-year elections. And it was the key. It told Republicans that they were going to take control in 1994 and then again in 2010. It told Democrats that Republicans were going to have a very, very bad election when Democrats took over. So it's right for us to pay attention to it. I don't think that Democratic passage will have an impact in Virginia. I do think that attitudes towards President Biden and former President Trump matter a great deal. In fact, this is almost a surrogate election in what used to be very much a swing state. Now, the Democrats have the advantage. And McAuliffe is expected to win by a narrow margin. But if he should lose, this will be the single greatest blow to the Biden administration, because Democrats will turn on the White House and say, wait a minute, this is a place, this is a state, and McAuliffe has already been governor. The fact that he can't, with the money advantage, the financial advantage, with the campaign advantage, with the awareness advantage that McAuliffe has, he should be winning the state by 4, 5, 6 points. So even a narrow, a 1 or 2 point McAuliffe victory will send shudders through Congress, through Capitol Hill, and through the White House.
So give us a sense of what the issues are that really matter the most, you think, to Virginia voters. You already said you're not sure that the Build Back Better will make a big difference. Does Biden help or hurt? And what other issues are there? What about things like the environment? What about things like education and so-called critical race theory?
Well, education has been a very divisive issue. The thing is, it doesn't really change voters' minds. If you're against critical race theory, you're a Republican. If you're for it, you're a Democrat. There's not that much swing there. Where there is swing is on the environment. We've been doing a lot of work on climate in advance of COP26, and the business people watching right now need to pay attention. We did a study for Premise, which is the most global polling outfit right now on the face of the earth. And we talked to 60,000 people last week. America still has pull. America still has influence. The question is whether the Biden administration is prepared to use that influence in negotiations, whether they are prepared to push hard for real commitments, for measurable commitments, and if he talks about that now before the Virginia governor's race. I wish I could answer your questions more clearly, but Virginia has always been a swing state, has always been a predictor, and it is no different in 2021.
So one last one here, Frank, if I could, and that is, does President Biden need to have something out of the Congress on climate to go to Glasgow and have credibility?
The truth is, he does. He needs to be able to show that he's leading the country. He needs to be able to show that he has some specifics, because the other countries will turn and say, if you're not willing to make commitments, if you're not willing to pass legislation, why should we? There's a lot at stake next week. The American media is not paying that much attention to it right now. The global community is. I spent a lot of time in other countries over the last 3-4 weeks. Everyone is watching what's happening there. The world's eyes will be on Glasgow, and it will be up to the Biden administration to show that he won't be following, that he, in fact, will be leading.
Yeah, we'll always all be focused on Glasgow next week. Thank you so much, Frank. It's always great to have you with us. That's Frank Luntz. He's the famed pollster and also political strategist. Coming up here, we are going to hear from GM Chair and CEO Mary Barra on the effects of the pandemic and supply chain shortages on her business. This is Balance of Power on Bloomberg Television and on radio.
Bloomberg surveillance to learn how to look at markets, how to look at trends, and how to look younger.
What do you think, John? Botox, or do I really need to get something done?
I think, Tom, if we just change the style up a little bit.
You think so?
Yeah,
you
drop
great.
the bow tie. Drop the bow tie.
What, skinny tie?
Yeah. I always say, this is my line, whenever anyone in America has to go at me about a skinny tie. The older you get, the wider it gets.
Oh, really?
Until it becomes a bow tie.
This is a bow tie.
Until it becomes so fat, you just sort of...
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
You talk about hiring aggressively at the moment. Can you walk me through how challenging that is at the moment? How difficult is it to find the right people?
Well, things have changed. Again, the world has changed under the pandemic, and you all know worldwide, what the challenges with getting people back into the workforce.
And the fourth quarter were dramatically impacted by the Delta variant. And while bookings
bottomed out, and we're clearly on the road to recovery now. A lot of the fourth quarter was impacted, and business offices that were going to open in September has been pushed back to January.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. GM announced its third quarter earnings today, beating expectations across the board, although helped by its financing arm and reimbursement for the cost of its Bolt recall. I talked earlier with GM Chair and CEO Mary Barra about the future of her business, starting with whether vaccine mandates could pose a problem for her.
We continue to encourage our employees to get the vaccine. We continue to provide them the information, from CDC and other like organizations around the globe. And we're going to work to understand how to implement the executive order from the president, but to do so in a way that our employees and our unions agree to. So once we know the details, we'll work the execution plan, but I don't foresee it being an issue for General Motors as we look at our overall labor availability.
You do have obviously a very important relationship with the UAW-CIO. As you talk with them, do you see resistance coming from the union side to vaccine mandates?
Well, I think that's a better question to ask the UAW. We're just working with them to provide information and encourage all of our employees to make the decision with the right information. And that's what we'll continue to do. And then, again, we'll look at what the specifics are of the mandate and figure out how to implement.
At this point, we don't know where we are in the pandemic, but it seems like it's getting better again in the United States. Is it affecting GM operations either on the sales side or in the production side?
Actually, we're the biggest impact that's gating us right now, as we talked about, is semiconductors. But we've seen recovery from the impact in Q3 from some of our supply base that caused a little bit deeper impact. So I'm optimistic that we are through the worst of it. We've shared our safety protocols with our supply base around the world. So that's what gives me confidence that we're going to see a stronger Q4 and then a stronger Q1 and even as we get to the second half of next year, continued improvement.
As you have that gating function, as you refer to it, Mary, with the semiconductors, are you seeing inflation either in the costs you're paying for inputs or the costs you can pass along to consumers?
Well, we definitely are seeing commodity prices increasing, as well as the cost of logistics, which I think is, impacting almost every industry. We're working and managing that right now. And again, because our product portfolio is so strong, I really believe it's the strongest cars, trucks, and crossovers we've had in my 40-year career here at General Motors. And that's what is allowing us to also have very strong pricing, and because we have strong receptivity from the customers.
That was part of my interview with GM Chair and CEO Mary Barra. Coming up, we're going to talk taxes with Barbara Angus of EY. This is Balance of Power on Bloomberg Television and Radio.
Hong Kong lost its top spot as Asia's busiest airport in 2020 when passenger traffic slumped 88% from 2019. The lack of a domestic market and strict COVID rules have made for a slow recovery, and walking through the airport, the majority of F&B outlets and shops do remain closed. Here in the departure hall, long stretches still remain boarded up in areas where you would typically see throngs of passengers waiting to board their flights to destinations across the world. Only 2 lounges do remain open to travelers. One operated operated by the Plaza Premium Group and the other by Cathay Pacific, down from the 12 that are usually open here at the airport.
Unfortunately, when COVID had hit, we had closed a lot of our lounges and airport hospitality services. We're cautiously optimistic with the growth.
COVID certainly has forced a rethink of strategy to be nimble in the face of policy uncertainty during the pandemic era.
Countries, Francine, that are the equivalent, that equal 80% of all the emissions. Those 20 countries, above all, have to step up.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. For Bloomberg First Word News, we go now to Mark Crumpton.
David, thank you. Former U.S. Treasury Secretary Steven Mnuchin says he's opposed to the introduction of new taxes and is warning of what he calls the unintended consequences of a so-called billionaires tax being touted by Democrats. Mnuchin spoke to Bloomberg in Riyadh on the sidelines of Saudi Arabia's flagship investment conference.
Now is the wrong time to raise taxes on anybody, whether it's billionaires or average consumers. The problem with the billionaire tax is, one, it probably won't raise much money since a lot of this money will be given away to foundations, so it won't be taxed. The other issue is it's probably unconstitutional. And the third issue is it creates very, very bad incentives.
Mnuchin added that the levy probably couldn't rake in as much cash as its proponents expect. Belgium is warning Poland not to treat the European Union, quote, like a cash machine to boost its economic fortunes while disregarding its rules. Belgium's prime minister said today his Polish counterpart was, quote, playing with fire. Poland accused the EU of threatening World War III for insisting that Poland respect the independence of the judiciary and EU law. Iran's deputy foreign minister says negotiations to revive that landmark 2015 nuclear deal will resume before the end of November, but it still expects the U.S. to release $10 billion of its assets that were frozen overseas as a gesture of goodwill. The last round of talks derailed in June. Iran says a date for the new talks will be announced next week. The United States has issued its first passport with an X-gender designation, a milestone in the recognition of the rights of people who don't identify as male or female. Officials didn't disclose the identity of the person who received the passport. The U.S. Special Diplomatic Envoy for LGBTQ rights called the move historic and celebratory. The State Department says it expects to be able to offer the option more broadly next year. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Thank you, Mark. For more on that billionaires tax that Mark just reported on, we turn now to Laura Davison. She's Bloomberg Capitol Hill correspondent. So, Laura, I must say, this sort of came out of the blue to me. It seems fairly recent. What is the talk up on Capitol Hill about this proposal coming from Senator Wyden, I guess endorsed by Senator Elizabeth Warren?
Yeah, this is an idea that kind of academics have been talking about for a long, long time of how do you go about taxing the wealthiest Americans because they don't have income, they don't have salaries, they instead have wealth that keeps growing and growing, and the tax code allows it that it's untaxed. The reason this is coming into the conversation now is because Kyrsten Sinema, one of the holdout senators, said that she wouldn't vote for just raising income tax rates. She wants to look at other tax proposals. So this is one that Wyden has been working on for years and finally sped up and released it early this morning. Basically, the idea is that about 700 the richest Americans, those with $1 billion or assets or more, would pay taxes annually on their investment gains. So right now, you don't have to pay any taxes until an asset is sold. This would really upend a lot of longstanding tax principles and say, okay, every year these very wealthy people need to cut a check to the IRS.
And Laura, if the Democrats adhere to their self-imposed deadline, this is really coming at the 11th hour, maybe the 59th minute. As a practical matter, what's the sentiment up on Capitol Hill about receiving some of this? I think I read that the chairman of the House Ways and Means Committee expressed some skepticism.
There is a lot of skepticism up here. The chairman of the Ways and Means Committee has said that he thinks this is coming in the 9th inning. He thinks that it's too late. He also said that he questions whether this is constitutional, and that's a broader question. Will this get struck down in the courts later on? Even on the Senate side, there's lots of hesitance. Senator Joe Manchin, one of those key names we keep hearing, says he thinks the process is that this tax is convoluted. He's coming up with his own idea to tax high net wealth individuals. You also have a lot of senators who are headed into a meeting with Democrats. All Democrats today saying they're looking at this proposal, they're trying to digest it, but they just don't know if they can sign on to it.
Okay, thank you so much. Really appreciate it. That's Bloomberg's Laura Davison from Capitol Hill. Turn now to a true tax expert, one who in the past has actually written the laws, including the Trump tax cut of 2017. We welcome now Barbara Angus. She's global tax policy leader at EY. She earlier served as chief tax counsel at the House Ways and Means Committee. So Barbara, thank you for being back with us. Address the complexity of this proposal. As I understand it, it treats different sorts of assets differently depending on whether it's easy to figure out how much they're worth or hard.
Well, as you've said, this is a new proposal, and legislative language was just released earlier today. And as you well know, tax people like to see the details, and so there are a lot of people in Washington and around the country poring over that legislative text right now. Another issue that I think will be important to both policymakers and the community at large is what are the Joint Committee on Taxation's revenue estimates with respect to these new proposals?
And what about the burden on the IRS? Because the accounts that I've seen suggest that there would have to be an annual appraisal of the assets of these billionaires, as they're called. Does the IRS have anything close to enough resources to address something like that?
I think that is a really important question, David, and certainly thinking about the practical administrative angles of any kind of new proposal like this is a really important part of the process.
Take us through the process, if you could, Barbara, because as I say, this comes in, it seems like at the 11th hour into these negotiations. How long does it normally take when there's this dramatic a proposal coming through to really restructure a good part of the tax laws for the Congress to process it through and really understand what is involved and be able to know whether it wants to vote for or against?
I think it is certainly important. Lawmakers want to know what it is that they are voting on, and they want to take the time to consider the statutory language, the implications, to get some reaction. And so it is important that lawmakers find a way to take the time to really delve into the details here.
Barbara, as I say, you served on the House Ways and Means Committee as chief counsel there. To what extent do the legislators take into account the effects on the economy? You mentioned the effects on revenue. That's one important aspect. How much money would the federal coffers get from this? But at the same time, what are the effects on the economy? Like, there are some people who suggest that maybe it would influence investment decisions, what kinds of assets you invested in.
I think for policymakers on Capitol Hill, the impact on the economy of any tax change is a really important consideration. They've got to think through what the direct effects are, and then the potential indirect effects.
At the same time, Barbara, as I say, you were involved in drafting, as I understand it, the 2017 tax cuts. It appears that the Democrats are having a tough time just reversing those tax cuts or just moving it up to 25% on the corporate rate. Is there a larger lesson there that you learned when you were on Capitol Hill about the difficulty of taking back a tax cut once it's given?
Well, I think certainly there were significant policy considerations behind the decisions that were made in the Tax Cuts and Jobs Act. And to your earlier question about the implications for the economy, that was a very big part of the considerations in developing the Tax Cuts and Jobs Act. The desire to encourage investment and try to grow the economy. And so all of those things need to be factored in when you're making any kind of significant change.
So, Barbara, looking backward at that 2017 act, do we know enough yet? Has it been long enough to know what the effects were? Because there were various claims made about improving the competitiveness of U.S. industry and also moving a lot of business back onshore. Do we know whether that actually panned out?
Well, certainly there have been a lot of reports. There's been a lot of analysis. There were, immediate upticks in the economy, significant positive jobs effects, but not long after the provisions of the Tax Cuts and Jobs Act took effect, we had a completely unprecedented global pandemic and all the economic implications of that. So, economists like to analyze the effects of something by holding all other things equal. And in the real world, it's really impossible to do that. And we had a dramatic change that no one saw coming.
Yeah, it's a really great point. The economy is so complicated, and the pandemic made it all that much more complicated. Thank you so much, Barbara, for being with us again. That's Barbara Angus of EY. Coming up, news out of the Middle East as the EU and Iran say that they want to restart nuclear discussions in November. We talk with former U.S. Ambassador to Israel, Martin Indyk. This is Balance of Power on Bloomberg Television and Radio.
So if someone wants a leader, is it better to find a general or an admiral?
That's like asking me to say, who do you love more, your son or your daughter?
Хорошо подготовлены, насколько это было возможно за столь короткие сроки. Это на самом деле эксперимент, поэтому мне не хочется употреблять такие слова, как страх, боязнь и все прочее. Мне хочется говорить, что это очень волнительно, но одновременно и радостно, потому что, вы же понимаете, как мало людей вообще там были. А у нас есть возможность полететь в космос, и не просто полететь в космос, а сделать там то, что мы умеем по-настоящему хорошо делать на Земле. Это снять кино.
Потому что это не просто очень дело-то. У нас же экспериментальный во многом этот проект. Поэтому мы сейчас столкнемся с кинематографическими нюансами, которые мы могли предвидеть отчасти, какие-то, наверное, не могли предвидеть. То есть, несмотря даже на то, что, опять же, все делились с нами там космическим опытом и так далее. Но это опыт, это первый раз. То есть второй будет проще.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Recent U.S. presidents have sought to shift the focus of foreign policy away from the Middle East and toward Asia, but something always seems to pull them back, as even today the EU announced it would be resuming nuclear talks with Iran. Martin Indyk has spent his career understanding and trying to address problems in the region. He was twice U.S. ambassador to the Middle East. He is now a distinguished fellow at the Council of Foreign Relations and the author of a brand new book, Master of the Game, Henry Kissinger and the Art of Middle East Diplomacy. Welcome now back to Bloomberg. So, Mr. Ambassador, thank you so much for being back with us. I know this has been a labor, I think a labor of love for you for some good long time. You've had amazing access to documents and to people. Give us a précis, if you could, of what you learned from this book about what Henry Kissinger did in the Middle East.
Well, thank you, David. It's great to be back on Balance of Power because that's what this book is about. All about Kissinger and the balance of power that he established in the Middle East. His purpose was to establish a stable order, which he did very successfully after the 1973 Yom Kippur War through various Israeli, Egyptian, Israeli, Syrian agreements that began a peace process in the region, an American-led peace process for an American-dominated region. And the story is how he did it and how he was successful and what we can learn from that, because so much of what has come after it, including my own efforts, have not been successful.
So what can we learn that could be applied today?
Well, it starts with the balance of power. And of course, today, in a situation where the United States is pivoting to Asia and focusing on the rise of China, we have to be cognizant of the fact that we're leaving a vacuum there that will be filled by bad actors like Iran or Russia or China. And so we have to still pay attention to the balance of power. And in this case, we're going to have to kind of rebuild an American-supported rather than dominated order, which is based on a kind of loose alliance between Israel, Sunni Arab states in the Gulf, Egypt, Jordan, so on, to counter and contain Iran, which is the main revisionist power in the region.
Well, exactly, Martin. From what little I understand of it, it's a different balance of power because now Saudi Arabia, I'm not going to say they're aligned because they're not with Israel, but they certainly are not hostile that they were the way they were before. And there's some talk about maybe them actually coming to some sort of terms. And then there's Iran, which is in some ways much more powerful, is it not?
Well, Iran is a kind of strong but weak power, strong ancient civilization, large population, but it doesn't have a very powerful army. It has barely an air force at all. The big concern is the way in which it plays off the divisions in the region between Shias and Sunnis and uses the Shias, which are usually minorities in the Arab world, to advance their influence there. And of course, they're advancing towards the nuclear threshold now with their nuclear program, which has the potential to set off a whole nuclear arms race in the Middle East. So they are definitely the kind of revisionist power that needs to be contained and deterred.
So, Martin, I wonder, it's tempting to say it's not like the good old days. I mean, certainly Henry Kissinger, whatever one thinks of him, was a master at really striking a balance of power, maybe even playing off one side against another, acting behind the scenes through indirection. Do we still have that diplomatic capability today? Or do we have diplomats who are capable of doing that?
Well, when you read the book, you'll see that he had a fairly unique ability as a man of history to conceptualize what needed to be done, to build off the lessons of the European balance of power in the 19th century and recreate that in the Middle East. And he did it very successfully. It's lasted for about 50 years, and he laid the foundations for that. He had a combination of guile, a Machiavellian ability to manipulate the players, speak out of both sides of his mouth, if you like. He was the essence of the diplomat who could take leaders in the region to places that they did not want to go and make them feel like they wanted to go there. The recent round Biden with Macron and the French over this AUKUS alliance submarine deal in Asia, and the way that the French got upset is an example of a lack of diplomatic skill, I would say. They could learn a few lessons from Kissinger in that regard. But the essence, David, was his conception of a balance of power that could establish order, but a peace process as the essential mechanism that would stabilize the order by taking Egypt out of the conflict with Israel and using Syria to legitimize that peace process. Today, as you said, the relationship between Israel and the Arab states is approaching a kind of normalization, exactly as Kissinger predicted it would, that they would become exhausted and come to terms with Israel. And that's something we can get behind and we can support. But we also need to attend to some of the region's conflicts, not necessarily to resolve them, but to ameliorate them. And that includes the Palestinian issue, and we should not ignore that. And Kissinger certainly would not ignore that.
Well, that's fascinating, but so many people, including you, have tried to address that issue with the Palestinians. Is there any eagerness, appetite from the Biden administration to get back involved in that?
No, there's not, and that's understandable, given the state of the situation with the leadership on both sides. An Israeli government has a left-to-right coalition that can't agree on what to do about the Palestinians, and a Palestinian polity which is divided between Hamas, which wants to destroy Israel, and Fatah and the Palestinian Authority that want to make peace with Israel. You've got Abu Mazen, the Palestinian leader, who's in his 14th year of his 4-year term, so he has no legitimacy. You can't get there from here. But that's where Kissinger's recipe is, I think, something that the Biden administration can adopt. His whole approach was not to try to jump to the end game and resolve the conflict. It was a step-by-step, gradual, incremental approach, because he was basically skeptical that the sides were ready to reconcile, that Israel could make the concessions necessary to do so. So he wanted a slow, incremental process to exhaust the Arabs and build Israel's strength so it could make the concessions necessary. Today, it's different. Israel has the strength. The Palestinians don't have the leadership. So that's why we need an incremental, step-by-step process to rebuild confidence, rebuild trust, so that eventually we can get to a final status agreement. The problem with the leaders up to now, and I was involved in that, the 4 presidents that came after, they knew not Kissinger. Right. And we all tried to end the conflict.
Yeah.
And that's when it blew up in our faces.
Sometimes the process itself counts for a lot. Thank you so much to Martin Indyk, author of Master of the Game, Henry Kissinger and the Art of Middle East Diplomacy. Coming up, we hear from Chairman of the Joint Chiefs of Staff, General Mark Milley, on the threat posed by China. This is Balance of Power on Bloomberg Television and Radio.
The past 18 months have reminded us how essential the PC is to work, life, learning, and connecting. And with Windows 11, we have renewed sense of the role Windows plays in the world. It offers personal agency and real choice to users.
Virus is here to stay for quite a bit because has been spread all over the world and has this ability to create mutations and variants.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. General Mark Milley, chairman of the Joint Chiefs of Staff, says China poses the greatest geopolitical threat to the United States. He discusses American security on the latest episode of the David Rubenstein Show, Peer-to-Peer Conversations.
I think it's China, and I've said that publicly many times. I think as we look to the future, and I think we are living in a historical epoch, actually, where we're seeing the rise of a country that is unlike something we've seen probably ever before. And it's one of the great historical pivot points, I think, that we've ever witnessed, which is the rise of China. And from the reforms of 1979 and Deng Xiaoping up till today, which is, I guess that's what, 41, 42 years or so, 4 decades, they've had an incredible economic run. And with that, they've developed a military that's really significant. As we go forward over the next 10, 20, 25 years, there's no question in my mind that the biggest geostrategic challenge to the United States is going to be China. That I have no doubt at all. Russia is important, not unimportant at all. Russia has very significant military capabilities. North Korea, Iran is still there. Terrorists are going to be around for quite a while. But I think China is clearly the most significant geostrategic threat we face.
As we talk today, there have recently been some reports that the Chinese have a hypersonic missile that can theoretically go into space and then come down with a nuclear bomb, escaping our ability to knock it down. Is that something I should be worried about, or all Americans should be worried about?
Well, what you saw, and I don't want to get too much into the classification of what we saw, but what we saw was a very significant event of a test of a hypersonic weapon system. And it is very concerning. I think I saw in some of the newspapers they used the term Sputnik moment. I don't know if it's quite a Sputnik moment, but I think it's very close to that. So it's a very significant technological event that occurred, or test that occurred by the Chinese, and it has all of our attention. And we're paying it, but that's just one weapon system. The Chinese military capabilities are much greater than that. They're expanding rapidly in space, in cyber, and then in the traditional domains of land, sea, and air. And they have gone from a peasant-based infantry army that was very, very large in 1979 to a very capable military that covers all the domains and has global ambitions. So China is very significant on our horizon.
That was General Mark Milley, chairman of the Joint Chiefs of Staff. Don't miss the full conversation on the David Rubenstein Show, Peer-to-Peer Conversations. That will be airing tonight on Bloomberg at 9 p.m. Eastern Time. And check out the Balance of Power newsletter on the terminal and online. Today's top story, Chinese President Xi is skipping global summits to focus on domestic problems. Coming up, Balance of Power will continue on Bloomberg Radio. This is Bloomberg.
energy crisis, there's a lack of drivers. Is there anything that you need to ask authorities to do better, or that your clients want the UK to do better?
I think we're at a moment in time where we're coming out of the pandemic and there are a handful of things going on. I think all over the world there are labor issues that are really a reflection of this transition out of the pandemic. There are supply chain issues. Some of this stuff is transitory. There are some secular trends that we have to watch closely, but I think we're adjusting and dealing with it as anybody else is. And I think leaders here are thinking about it the same way leaders are around the world.
When you look at the UK and of course some of these green investments that the UK and the City of London particularly has been really trying to pitch, you've been extremely involved in carbon offsetting. Can London really spearhead that movement?
Well, I think it's important that governments around the world partner with the private sector to try to get capital directed toward innovation in a way that we can accelerate the climate transition. And I want to emphasize it's clearly a transition.
Monday on Bloomberg Television and Radio.
We are on the verge of a disaster.
Join us live from Glasgow for coverage of the COP26 Climate Change Conference.
People are beginning to build some momentum, I think. The question is, will it be enough?
We'll speak with global leaders, keep you up to date on progress and setbacks, and analyze what it all means to you.
We're going to need to see some real action.
COP26, the UN Climate Change Conference. Special coverage on Bloomberg Television and Radio.
Google is saying it has accelerated innovation in the country and it's planning to appeal the FTC's decision. What's your take on this and how do you plan for further scrutinies?
We are going to see what they make and what changes they are actually bring to this market.
I'm Mark Crumpton with Bloomberg's First Word News. Democrats are trying a new and risky approach to taxation to help pay for President Biden's social agenda. They're proposing a tax that would affect about 700 people, those with at least $1 billion in assets and those who earn at least $100 million 3 years in a row. Meanwhile, a separate tax would require companies that report more than $1 billion in profits to pay at least a 15% tax rate. Secretary of State Antony Blinken says he's seeking a 50% increase in the department's information technology budget. He wants to create a more agile, diverse State Department and focus more on cyberspace and digital policy. Speaking at a Foreign Service Institute event today, Secretary Blinken also said his department will leave, quote, no stone unturned in its investigation of the so-called Havana Syndrome. Julian Assange won't face solitary confinement or supermax prison in Colorado if he's jailed in the United States. That's according to lawyers who are arguing his extradition shouldn't have been blocked by a London judge. Assange has spent the last decade either in a UK prison or in London's embassy as criminal charges over rape and his role in releasing hundreds of thousands of pages of classified documents via WikiLeaks stacked up. Iran isn't naming names, but says a foreign country was behind a cyber attack that paralyzed gas stations worldwide. The strike targeted software that controls a fuel card payment system for state-subsidized gas. Drivers have been left without fuel or have been forced to pay more for gas at stations that are still operational. The attack came weeks ahead of an anniversary of massive protests over fuel prices. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
It is 1 p.m. in New York, 6 p.m. in London, 1 a.m. in Hong Kong. I'm Alex Steele, in for Matt Miller. Welcome to Bloomberg Markets. Here are the top stories that we're following for you from all around the world. Rent the Runway's public debut. Shares of the shareable fashion company popped in its first day of trading. And in just a moment, we'll be joined by the CEO and co-founder, Jennifer Hyman. And we will discuss the launch of Invesco ESG NASDAQ 100 ETF with Anna Paglia, Invesco Global Head of ETFs and Index Strategy, all ahead of COP26. 26. And later on this hour, we go live for Canada after its central bank ended its bond buying stimulus program and accelerated the potential timing of future rate hikes. It's been quite a morning, and I didn't even mention the word earnings as we head into midday here. Let's get a quick check-in here on the markets. The NASDAQ outperforming. We're up by about 0.6 of 1%. But the real move and the real action is in the bond market. I want to highlight Canadian 2-year yields. They're popping now 21 basis points. At one point, they were popping 26 basis points. And that sort of affected everything else in the market. Over in the UK, you're still seeing solid buying across the curve as the UK is going to borrow less from the market. But here in the US, we're kind of following Canada a little bit, 10 or 20 steps behind. You have some selling in the front end, and you have some strong buying in the back end. 30-year yield now down by about 8 basis points. Crude, though, getting real hit here. Iranian nuclear talks could be restarting. That's putting pressure on crude. That's putting pressure on energy stocks as well. Also staying in the bond market, we had $61 billion worth of 5-year notes that were auctioned. The draw is 1.157% versus 1.182% in terms of the yield when it was issued. So always watching for demand signs in terms of how good that takedown is going to be. It looks like the bid to cover was 2.55. Let's go back to one of the top stories here. We're just a few days away from COP26. So ESG is obviously on the mind for many companies. So Invesco is now launching a new version of its ETF, and that's going to weigh companies' ESG performance, but also have lower ESG weighted rankings for big tech companies like Facebook, Amazon, Tesla, and Google. Joining us now, Anna Paglia, a global head of ETFs and index strategies over at Invesco. Anna, thanks for being here in studio. It's a real treat.
Thank you. Thank you for having me, Alex. It's great to be here in studio live.
It is.
That's great.
So what's the thought process behind launching this ETF now? What was the thinking?
So this is really exciting, and it's very much a history in the making because the launch of these new funds today really brings together two of the elements and beliefs that we are very passionate about. On the one hand, it's innovation, obviously. The NASDAQ 100 index and the Invesco QQQ, which is now offered in different countries, in different legal wrappers, has crossed the $200 billion this year, which is a testament to how investors are receptive and are embracing the element of innovation. But then ESG, it is also something we are very committed to and is one of our core beliefs. We believe in the E, the S, and the G, and when we work together with NASDAQ to bring together ESG and innovation, we were incredibly happy to see these products come to life today.
So tell me about the relationship then with tech companies within the ETFs, because typically things that do well on ESG tend to be tech. That may be changing, but in theory, that tends to be the case, and the triple Q is already really heavily, obviously, weighted into tech.
You are absolutely right, and in fact, what you see in these funds is that the correlation with the NASDAQ 100 index and the next-gen index is very high, which is exactly what we wanted to see. So this is not really about excluding a vast majority of companies from the index because, tech companies or healthcare companies, companies that are driven by innovation are already ESG savvy. This is really about rewarding management. And what you will see in these new products is that companies that rate really well for ESG receive a higher weighting in the index.
Will fees be higher because of it? Fees?
Will not be higher. So what we really want to give our clients is optionality. So we believe that it is important to provide investors for the value that they are looking for. So when investors really value ESG, they have the option now to go to the NASDAQ 100 ESG or the NASDAQ 100 if they don't care too much about ESG, but it's really about optionality. It's not about fees. It's not about something being more expensive than the other.
Fair enough. It's always interesting to see, though, how much investors will be willing to pay up for something greener or more ESG. I just want to, before I let you go, I can't let you go without asking you a question about crypto. Invesco has the physically backed cryptocurrency ETF. Others are going the futures route. Do you regret not going the futures route? Like, why did you decide to go sort of the hard physical asset?
I cannot say that I regret not going the futures route because it was intentional. As you know, we had a product in registration, and if we wanted to pursue that, we would have pursued it. We really believe that when you look at the correlation between the value of the ETF and the value of the underlying, the physical asset is probably something that is closer to what we want to bring to our clients.
Anna, thanks a lot. Really appreciate it. Really interesting developments. Anna Paglia of Invesco joining us there.
Thank you.
Well, U.S. and China tensions escalate once again. That's as Washington bars a major Chinese state-owned telecom firm from operating in the U.S. over national security concerns. Now, meanwhile, General Mark Milley says that Chairman of the Joint Chiefs of Staff says China is the greatest geopolitical threat to the country. He spoke with David Rubenstein earlier on peer-to-peer conversations.
I think it's China, and I've said that publicly many times. I think as we look to the future, and I think we are living in a historical epoch, actually, where we're seeing the rise of a country that is unlike something we've seen probably ever before. And it's one of the great historical pivot points, I think, that we've ever witnessed, which is the rise of China. And from the reforms of 1979 and Deng Xiaoping up till today, which is, I guess that's what, 41, 42 years or so, 4 decades, they've had an incredible economic run. And with that, they've developed a military that's really significant. As we go forward over the next 10, 20, 25 years, there's no question in my mind that the biggest geostrategic challenge to the United States is going to be China. That I have no doubt at all. Russia is important, not unimportant at all. Russia has very significant military capabilities. North Korea, Iran is still there. Terrorists are going to be around for quite a while. But I think China is clearly the most significant geostrategic threat we face.
As we talk today, there have recently been some reports that the Chinese have a hypersonic missile that can theoretically go into space and then come down with a nuclear bomb, escaping our ability to knock it down. Is that something I should be worried about, or all Americans should be worried about?
Well, what you saw, and I don't want to get too much into the classification of what we saw, but what we saw was a very significant event of a test of a hypersonic weapon system. And it is very concerning. I think I saw in some of the newspapers they used the term Sputnik moment. I don't know if it's quite a Sputnik moment, but I think it's very close to that. So it's a very significant technological event that occurred, or test that occurred by the Chinese. And it has all of our attention. And we're paying it, but that's just one weapon system. The Chinese military capabilities are much greater than that. They're expanding rapidly in space, in cyber, and then in the traditional domains of land, sea, and air. And they have gone from a peasant-based infantry army that was very, very large in 1979 to a very capable military that covers all the domains and has global ambitions. So China is very significant on our horizon.
That was General Mark Milley, Chairman of the Joint Chiefs of Staff. And don't miss that full conversation on the David Rubenstein Show, peer-to-peer conversations at 9 p.m. tonight in New York. Before we go to break, I want to recap those 5-year auction results. Pretty strong. So you see the 5-year yield extending declines after the auction stopped through. That means at the highest yield that the Treasury sold for in the auction was below the highest yield expected, which just points to pretty strong demand. So yields down by about 3 basis points there as demand really kicks off from the belly all the way out to the end of the curve. Something else that we're watching in the market here, shares of Rent the Runway popping in their first day of trading. We discuss that listing and growth prospects with CEO Jennifer Hyman next. This is Bloomberg.
watch Bloomberg Surveillance to learn how to look at markets, how to look at trends, and how to look younger.
What do you think, John? Botox, or do I really need to get something done?
I think, Tom, if we just change the style up a little bit.
You think so?
Yeah,
you
drop
great.
the bow tie. Drop the bow tie.
What, skinny tie?
Yeah. I always say, this is my line, whenever anyone in America has to go at me about a skinny tie, the older you get, the wider it gets.
Oh, really?
Until it becomes a bow tie.
This is a bow tie.
Until it becomes so fat, you just sort of...
This is Bloomberg Markets. I'm Alex Steele. One stock we're following is shares of Rent the Runway rising in the public debut. The listing finally gives the fashion site a diluted, fully diluted value of more than $1.6 billion. Want to bring in our own Emily Chang for more. Emily, this is quite an achievement, considering that during the pandemic, no one was leaving their house and we were all wearing sweats. And to go from there to here feels like a very big achievement.
Right. The good news for Rent the Runway, Alex, is that women are getting dressed again. And navigating the pandemic for Rent the Runway and CEO Jen Hyman, I know, was an incredible challenge. As you said, we weren't getting out of our pajamas, you know? E-commerce, fashion came to a standstill. Literally no one was on the runway. And so to get to this moment, to be ready to get out there is a huge, huge milestone for them. My understanding is that the company had planned to go public sooner, but of course with the pandemic, things got pushed out. But what they saw is that their subscription business doubled over the course of the last year. People were not just getting dressed again, they were subscribing to Rent the Runway again, and that's good news.
Yeah, good news, particularly in this IPO environment. I wonder where the growth is going to come from next. You talked about doubling subscribers. Clearly, the IPO and the money is going to be used for something. Do we know what yet?
Well, I believe Jen Hyman is joining us now, so that's one of the very questions that I was planning to ask her. Jen Hyman, CEO of Rent the Runway, with us now from the NASDAQ. Jen, gosh, long journey, steering the company through a once-in-a-lifetime pandemic. Nobody was getting out of their pajamas, and yet here we are, your big day at the NASDAQ, and women are getting dressed again. How does it feel?
I have really never felt so proud. It is such a milestone day. And we've gone from one dress in one situation to a whole closet in the cloud that's outfitting women for every situation. And as you know, the mission of this business has always been to disrupt the industry, build the largest shared closet, but also to empower women to feel their best every day. And we really had this kind of historic IPO today, the first ever with a female CEO, founder, COO, and CFO. So it was just such a special thing to be part of this moment, especially after what our team went through last year.
We're looking at your team of power women ringing the bell there with your two daughters. The first company ever to go public with a female CEO, COO, and CFO. What does that milestone mean, and what should other business leaders take away from that?
I think that it's something that I'm so incredibly proud of, but it really shows how much more work there is to be done. I think this is a step in the right direction, but until women-led success isn't a headline in and of itself, I don't think that our work should stop. I mean, we were able to raise more money today in this IPO than we've ever raised in equity dollars in the history of our business over 12 years. And that should tell you something. So I heard you talking before I signed on about what are we going to do with this money? Well, actually being able to raise this level of capital actually gives this business choices. We're going to grow. We're going to bring the business to profitability. We can significantly delever our business, which will change our balance sheet, all with this amount of capital. This is enough so that we can make the choices as to how we continue to drive more subscribers and drive her to use us more than 83 days per year. It's amazing.
So what are some of those choices going to be? Do you plan to expand to new areas like men? How do you drive that next chapter of subscription growth?
Yeah, so one of the ways we drive it is actually out of our current customer base. So we have 2.5 million former customers who have all rented for special occasions for the most part. And they have been this very productive funnel into subscription in the past. So every year, 50% of new subscribers are actually former customers, and 50% are net new to Rent the Runway entirely. And we continue to see this incredibly strong virality of our business. So every customer refers about 10 of their friends for free. And so the business has extremely high growth because of that. Now, the biggest opportunity we have is just flat out brand awareness. Our brand awareness is very low. It's only 20%. And that brand awareness is primarily for us as a special occasion rental business. So what we plan to do is change our marketing dollars and how we invest our marketing dollars into first a subscription first approach. So driving people to try subscription right away as opposed to using our reserve business as the direct funnel. And then what we also intend to do is to spend more money as our mix on brand marketing. We've recently run some brand campaigns that upped our traffic to the site by 15%, and we do a great job at converting people once they come to the site. But fundamentally, customers need to know that we do offer the closet in the cloud, and it gives her 20x her buying power for $135 a month. There's not enough people that know that.
How is Rent the Runway handling the operational demands of the warehouse shipping logistics challenges right now, the supply chain issues? Are you seeing any delivery or apparel setbacks?
So we haven't seen any supply chain issues. And one thing that was fortunate about the pandemic is that our shipment volume was very low. So it gave our leadership time to go into our operation, add really high amounts of new processes, new technology, innovation, more data into our facilities that enable us not just to come back to scale quickly, but to come back to scale with so much more capacity than we've ever had. So the operational infrastructure of our business can currently support 6x today's total subscriber count. And that's because we were given this period during COVID where we were able to innovate because the shipment volume was low.
So you've long had this vision of being the Netflix of the closet, this closet in the cloud, and I'm curious, when you look into the future, how much do you see us buying in terms of apparel versus renting versus subscribing, online versus in-store, and how does it all add up?
Yeah, so the reason why I've stayed so passionate about this business for over a decade is because I believe that the multi-trillion-dollar fashion industry makes no sense. It is We spend trillions of dollars per year on clothing, 50+% of which we do not use. They end up in our closet, we wear it once or twice, we push it to the back of our closet and then throw it into a landfill. So I genuinely believe that 50% of the closet is fair game for the closet in the cloud, because that's really where we're seeing this 3 times or less behavior and then kind of disposal. I also am a huge believer in the secondhand economy. So I'm a huge fan of companies like ThredUp and Poshmark and The RealReal, which enable customers to kind of buy something new that has already been worn before but is still in great condition, have that item for a few months and then resell it. It's kind of like a leasing model. In a sense, like what we're trying to build is like we're the Uber of the closet, of like things that you want to wear a few times for a few days or a few weeks and then rotate. You have now a secondhand economy that's more of a leasing model, and then everything that you want to invest in, that's what you should buy. And I fundamentally think that that's about 30% or less of the closet.
You recently added Gwyneth Paltrow to the board, and I'm curious what she's contributed so far and how you anticipate her helping you achieve this vision.
Yeah, so we just launched a major brand campaign that was one of the first times that we have advertised on VOD and audio and television in many years, and she was a critical part in helping us think about the content, the creative, the brand. She's really a master of bringing brand and content together and doing that in a very organic way. So already she's been super helpful about marketing, and we also know that she has very deep knowledge of the actual fashion industry as well, as both a consumer of it and kind of a representative of it, and having a big e-commerce business herself.
All right. Jen Hyman, CEO and co-founder of Rent the Runway. Huge day for you. We'll continue to follow how the business grows and changes. Thank you so much for joining us. We'll be right back with more of Bloomberg Markets after this quick break. This is Bloomberg.
20 countries, Francine, that are the equivalent, that equal 80% of all the emissions. Those 20 countries, above all, have to step up.
Supply chain team, they became unsung heroes of our pandemic timeframe, where they just came forward with all kinds of creative workarounds, risk management, diversifying our supply chain.
This is Bloomberg Markets. I'm Alex Steele. I want to update you on the markets here. We had that super solid 5-year auction. Demand really coming in there. And you wind up having the 5-year yield down by about 2 basis points on that strong demand. And then from the belly out to the end, you're seeing some strong buying come in. The front end, though, still seeing some selling following Canada's 2-year yield up by 20 basis points. Tech still the outperformer, however, and crude still getting hit, really weighing on those energy stocks as well. A couple pieces of breaking news for you, one concerning SoftBank. So SoftBank's Vision Fund is is borrowing against some of its stake in recent IPO names in order to fund distributions for its LP. So it is taking about $15 billion stake in South Korea's e-commerce giant Coupang and some number of undisclosed shares from its $8.8 billion investment in DoorDash, and then using that to fund distributions to investors. It's done that before, and it shows how SoftBank takes advantage of the IPO market to then kind of lever up and then fund those distributions. One more piece of breaking news for you. Busy 5 seconds. Portugal is likely headed now for yet another snap election after the budget is rejected yet again. So Portugal now likely headed for snap elections. Interesting as we're now headed into the ECB tomorrow as well after the recent rise in yields. So there's a little bit of tension there on the politics side, on the yield side, and then on the inflation side as well. All right, coming up, we're going to get more on reaction of today's Bank of Canada's move after it accelerated the potential timing of those future rate hikes and really participating in a huge move in the short end of the bond market. This is Bloomberg.
The 700th anniversary of Dante Alighieri's death has triggered the work of many institutions and offered a very rich schedule of events. Today in Santa Croce, we present one of these projects that suffered a difficult start because COVID-19 has stopped the project that was shared by the Opera di Santi Croce by the Franciscan community from Florence Municipality and the Fund for Religious Building of the Internal Minister. Today, Felice Limosani's project is finally enjoyable. In the Pazzi Chapel, the marvelous architecture by Filippo Brunelleschi, the most important images from the Divine Comedy created by the French illustrator Gustave Doré. Through these images, we can live the violent emotions of hell, the weight of purgatory, and the sublime joy of paradise.
The digital humanities are a cultural occasion to exploit. Summing up, it's about merging humanistic disciplines with new technologies. I find this to be an innovating and modern tool to update culture. Cultural heritage becomes something to hand over to the new generations and not to be put aside. So it's about using technology, pixels, and binary code with a human and humanizing content.
The growth story in cannabis remains very strong, even after the sort of loosening of the pandemic. There was a worry that there might be wallet spend competition, but so far the cannabis sector seems to be holding up very strong.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I'm Mark Crumpton with Bloomberg's First Word News. The chairman of the U.S. Joint Chiefs of Staff, General Mark Milley, says China is the greatest geopolitical threat to the United States, and he's calling China's recent missile test significant and concerning. General Milley spoke on the latest episode of the David Rubenstein Show, Peer-to-Peer Conversations.
Well, what you saw, and I don't want to get too much into the classification of what we saw, but what we saw was a very significant event of a test of a hypersonic weapon system. And it is very concerning. I think I saw in some of the newspapers they used the term Sputnik moment. I don't know if it's quite a Sputnik moment, but I think it's very close to that.
Don't miss the full conversation with General Mark Milley on the David Rubenstein Show, Peer-to-Peer Conversations, tonight at 9 p.m. in New York, right here on Bloomberg Television. Former U.S. Treasury Secretary Steven Mnuchin says he is opposed to the introduction of new taxes and is warning of what he calls the unintended consequences of a so-called billionaires tax being touted by Democrats. Secretary Mnuchin spoke to Bloomberg in Riyadh on the sidelines of Saudi Arabia's flagship investment conference.
Now is the wrong time to raise taxes on anybody, whether it's billionaires or average consumers. The problem with the billionaire tax is, one, it probably won't raise much money, since a lot of this money will be given away to foundations, so it won't be taxed. The other issue is it's probably unconstitutional. And the third issue is it creates very, very bad incentives.
And Secretary Mnuchin added the levy probably wouldn't rake in as much cash as its proponents expect. Russian President Vladimir Putin has told the state-run company Gazprom to focus on refilling its European gas storage facilities beginning November 8th. That's when the gas producer will have finished its domestic gas re-injection campaign. The move is expected to ease Europe's supply crunch. Global news 24 hours a day on Bloomberg on Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Hi, I'm Amanda Lang. Welcome to Bloomberg Markets.
And I'm Alex Steele in for Matt Miller. We welcome both our Bloomberg and our BNN Bloomberg audiences. Here are the top stories that we are following for you from all around the world. Bank of Canada ends its bond buying stimulus program and accelerates the potential timing of future rate hikes. We give you the economic and market fallout. Plus, we'll talk to the CEO of Hydro-Quebec on its plan to deliver renewable hydroelectricity from Canada to New York City. And GM shares are tumbling despite better than expected earnings this morning. The company now hit by global semiconductor shortage. We're going to dig into all of those details. Amanda?
And Alex, that's just one of the stocks that's trading lower on these markets today. It is an interesting day on the markets because we have many of the subgroups of the S&P 500 in negative territory, but you can see there it is modestly higher and the NASDAQ is the real star. That NASDAQ 100 is now at a record high, and it is being powered by the very names that got this market where it is today. And those are the big tech stocks. Some of them are moving sharply higher today. Microsoft, Alphabet is moving sharply higher as well on the back of earnings. So while while we are seeing some companies selling off on their earnings, we are certainly seeing a strength for others, and that is the case despite the fact that energy and financials, two major decliners across that market. Yields are very much in focus again today, and you can see there on the 10-year, we're back at 153. The flattening of the yield curve globally, of course, a subject of conversation. What does that say about global growth demand and the outlook, as we're hearing from more and more central banks, as we did in Canada today, that they're still moving ahead on a hawkish path? That surprising word from the bank today did have an effect on the loonie, and I do want to jump to that because we did see reaction in the Canadian dollar on the removal of quantitative easing and also a quicker path potentially to rate hikes. No official start to that given, but it could be as soon as next April. More on the Bank of Canada policy shift here. BNN Bloomberg's Greg Bunnell is in Ottawa today. So, Greg, a surprise from the Bank of Canada and certainly a market reaction.
So many of these central bank announcements just sort of go by, but this one feels a little bit monumental, particularly starting with the end of quantitative easing. Bank of Canada Governor Tiff Macklem simply saying, we are on the path to a full recovery. We simply do not need quantitative easing anymore. And then this very clear signal and a much more hawkish signal that rates could start to raise as early as April. He threw it an April to September timeframe, anywhere within that window now. The Bank of Canada, seeing how the economy is developing and the inflation pressures we're seeing as well, could be and may very well be in a position to start hiking rates. It's sort of a catch-up on the Bank of Canada's point of view in terms of what the market was already pricing in, with several economists on Bay Street here in Canada. We're starting to think about them having to act sooner rather than later, but it could be a wake-up call, not only for the markets where you saw the 2-year bond yield in Canada spike, the 5-year spiked pretty hard where we price our fixed mortgages before it came down a little bit, but still a big announcement today that really got the notice of the markets, and it's going to get the notice of households too when you have the Bank of Canada saying these inflation pressures, they're a little stickier than first anticipated. It's going to get actually worse in terms of inflation, at least from the Bank of Canada's point of view, before it gets any better.
Yeah, Greg, I'm curious about the market reactions you were mentioning. So in the front end, you have yields rising, the back end yields falling, and I wonder, does that tell us that we're looking at a stagflation scenario where you have to hike now in some capacity to tame inflation, but then eventually it's going to weigh on growth, and that's why you're still seeing, say, the 30-year at 192?
This is the real danger here, and we've been hearing from guests on the program today too, that the central banks, including ours in Canada, are in a very dangerous position trying to navigate their way out of this. You can't keep money near zero forever if you're not in a crisis anymore, but what if you choke off the economic recovery? The only tool we seem to have, because when we talk about these inflationary pressures, and the Bank of Canada was very clear, it's the global supply chain crisis, it's soaring energy prices. These are factors that are external. The only tool that they have to combat them, if they do get persistent and out of control, is to raise rates. But then you raise an excellent point with the bond market reaction, what we're seeing right now in terms of the short and the long end. What if we get it wrong? What if we choke off the recovery and you end up in that stagflation situation? They're still baking in 5% growth for this year, but they actually cut that by a full percentage point in today's update. That's interesting. All right, Greg, thanks a lot, BNN. Greg Bunnell, thank you. Let's get more on central banks and the economy. I want to bring in Neil Richardson, ADP chief economist. Neil, the market reaction seems quite clear. Are we looking at a taper tantrum and a policy mistake that potentially other central banks will follow?
You know, I think that what's different about this particular situation is how clear the guidance and how transparent the guidance has been to date. In fact, most people feel like the Federal Reserve, at least in the United States, will be tapering soon, maybe as early as this November meeting. And so I don't think we'll see the temper tantrum that we saw a few years back when Ben Bernanke was at the helm, because the expectation has already been laid, and the recognition that the inflation pressures are really due to supply chain bottlenecks in a way that's somewhat unprecedented. And so the uniqueness of the event, as well as the transparency and the communication, I think lays the groundwork for, yes, a market reaction, but not a spike or surge in bond yields, I don't think.
One of the growing questions here, Neela, is whether, of course, global demand is slowing. This flattening of the yield curve showing kind of increasing concern on that front. Does that argue that the risk of central bank hawkishness getting it wrong and actually choking off recovery is rising, or are you discounting that fear?
I'm not discounting anything in this recovery. I do think we have to take all threats seriously because of the unprecedented nature of it. But I do think we have to be cautious of going to any extremes. What we're seeing right now is, yes, there is significant supply bottlenecks, but we're also seeing some resurgent demand that is quite persistent. And if you look at consumers, consumers have been unflappable. Even though confidence surveys have shown some downward sentiment, we're seeing retail spending still stay strong. We're seeing consumer spending in durables out today still stay strong. We see household balance sheets, personal savings rates, all those metrics of households, not just in the United States, but globally, we're seeing strength even through the third quarter and the second half of the year. That does not mean that spending won't slow or that GDP growth will come down a few pegs from the high rocket pace we saw in the first half of the year. But it also doesn't mean that we're looking into the front eye of a recession. I think it's something way in between, in the middle of those two extremes.
Well, Neela, and that's what we're seeing in earnings. Like, companies have pricing power because demand is just that strong. What has shifted, though, is the roll-off of some of the extraordinary fiscal support for individuals during the pandemic. And I don't know if we've fully gotten what the impact of that will be while fiscal stimulus is still stalled out in D.C. here in the U.S. And I wonder, when do we see that margin squeeze? When do we see the consumer retreat?
It's the question everyone's asking. We're not seeing it yet, but it doesn't mean that we don't have a few months of transition. As you note, the government has been front and center in the recovery on the central bank side in terms of keeping this massively liquid market flowing for everybody, but also in all the direct payments, the expanded and generous unemployment insurance benefits, all of those things now fading out or log jammed in Washington, D.C. So for the first time since the pandemic struck, we have an economy that has to move increasingly independently. Right now, we're seeing Main Street be able to take that in stride, but with differences. We're not seeing the resurgence back, the shift back into leisure and hospitality spending. Consumers are still sticking with their preference for goods. We're not seeing those 5 million sidelined workers from the pandemic re-enter the job market in ways that were expected in the early part of the year. And remember, what drives growth long term is an increase in workers and an increase in productivity. Both have come down a notch from earlier gains. So there is something to watch as we move through this transition period to an economy that stands on its feet.
Neela, thanks a lot. Always a pleasure to see you. Neela Richardson of ADP. Thank you very much. All right, coming up next, it is the price of power. We're going to talk to Sophie Bruchel, CEO of Hydro-Quebec. The company is planning to deliver renewable hydroelectricity from Canada to New York City. The question is, does it run into opposition? It's been a long time coming. Details next. This is Bloomberg.
Проходим опасный участок, ответственный. Вот там поднимаете нажимари, шерпа страхует.
Очень много думал о том, что я сделал, и понял, что сделал какую-то нереальную вещь. Не знаю. Я до конца внутри себя даже не могу поверить, что я через это прошел. Состояние, наверное, организм истощен. потому что очень много физической работы. Своим вот этим поступком я хотел сказать, что только через действие в этой жизни достичь можно абсолютно всего.
So if someone wants a leader, is it better to find a general or an admiral?
That's like asking me to say, who do you love more, your son or your daughter?
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Markets. I'm Alex Steele over with Amanda Lang. Breaking news for you guys here. So activist investor Dan Loeb is said to take a $750 million stake in Shell. It is an activist stake. It wants the company to spin off its LNG, renewables, and marketing business into a standalone company. And then you wind up having the legacy energy, oil business in a different company. That would include the upstream refining and chemical operations. This would be a huge shift for some of these energy giants that spent a very long time consolidating and now are trying to transition into being a greener energy company. And in the middle of this transition, the hope to unlock value. So we're watching those shares up by about 2.1% here in the U.S. Well, staying with energy for a moment, the recent crisis has put a real spotlight on the reliability of new energy like wind and hydro. The Canadian utility Hydro-Québec is preparing to begin construction on a project that will deliver renewable hydroelectricity to New York City. Now, I recently talked with Bilal Khan, the senior managing director at Blackstone, who's investing in this plan.
Well, hydropower is perfect because for when the wind's not blowing and the sun's not shining, you've got hydro that's available 24 hours of the day, 7 days of the week, around the clock. So we're thrilled to be part of New York City's cleaner, carbon-free future. The project is 1,250 megawatts, and just to put that into perspective, that's just over 20% of New York City's average daily power use.
But the problem, the plan could see pushback from U.S. rivals that generate power from fossil fuels. Joining us now from Montreal is Sophie Brochu, a CEO of Hydro-Québec. Sophie, thank you for joining.
A pleasure. Good day to you.
Before we get to the issues of building, what happens if the water turns off? What happens if there's a drought? The sun won't shine, maybe the wind won't blow. What happens if there's a drought?
Well, I think it's important to, it's a very good question. You need to understand that Hydro-Québec operates over 40 large reservoirs of hydroelectricity. And so there are cycles, that's for sure. But we are super prudent on the way we operate those reservoirs through the years. To give you an example, right now, behind the dams of Hydro-Québec and the large reservoir, we have over a year of Hydro-Québec's production. So this is how we temper whatever hydroelectricity movement there is, and there are. The other thing is that with climate change, we know that the trend will be favorable for the precipitation up north. We're not taking that into account, but this gives us another level of comfort. But just so you know, we operate extremely prudently through the years.
You have signed this long-term contract with New York. It's a sizable one, but it does require new infrastructure that will cross other states. Maine is already in vocal opposition to this, Sophie. What's the plan if the state of Maine is successful in blocking the infrastructure required?
Okay, just so we're talking something different than New York right now. You're talking about another project that was called upon by Massachusetts, who ran an RFP, went through an overall process. Hydro-Québec won the RFP, went through the whole permitting process, got every permit with its partner, CMP. We started construction, and then came the people you talked about at the opening with those people who produce electricity from fossil fuels. And actually their strategy is quite simple. They stir a pot locally and they try to impede it. They launch several attacks on the project so that they can defer or, in their hope, derail the project. The fact is the population wants it. The states wants it. It's not Maine rejecting the project. There is a referendum being financed by Texas people, actually. They are very aggressive. And as your investors know, their business model has the destiny of an iceberg derivating to the South Seas. They don't like Hydro-Québec and they don't like hydropower because we're there no matter what. They're not afraid of wind and solar because in their mind, wind and solar, when it's not there, the fossil fuels will run. So here we are. We come in. We have a lot of support. We don't have the support of fossil fuel companies, but we will eventually prevail because this is what the population wants. This is what the planet needs. This is what the decision makers are pushing to make happen. And this is where we come humbly, providing the U.S. Northeast with the vast competitive green capacities of hydroelectricity just north of the border.
I guess the real connection, Sophie, though, is the reminder that you can have agreement and you can sign a deal, but there are still infrastructure hurdles in front of you. Have you solved them all? Have you imagined what they might be with the New York contract, which is a long-term contract?
Yes, it is a long-term contract. The line and the Blackstone people would answer those questions more precisely because they are the builder on south of the border. The project has been developed over the last 10 years, has received a lot of inputs from various stakeholders, has all its permit as we stand for construction. So the process now, we are finalizing the discussion with NYSERDA. NYSERDA will take the contract to the PSC. PSC needs to decide upon the contract, and the project is what we call shovel-ready because the permits have been received.
Sophie.
All right, so.
No,
go ahead, Alex.
I'm so sorry. Usually we're so good at this. Sophie, quick question. As you're trying to make everything happen, how are you handling rising costs?
Rising cost of what?
Everything.
Okay, you mean overall in the business?
Yep, labor, input costs, materials, steel.
Okay, yeah, no, this is a real and true question. We are investing about for the next years. We'll be investing just in Quebec about $5 billion a year. So we are very thorough into this. We are securing the supply chains. Labor-wise, we need to prioritize. There is no miracle. I came on your show talking about the revised Bank of Canada perspective on inflation. I am an economist. I'm not a superstar, but for a long time I've been saying inflation will stick around for a long time. And actually, you know what? The climate transition by itself is going to be inflationist. For a few years. So structurally, it's going to be there. We need to be super smart. We need to think differently on how we build projects. And I'll give you a very simple example. One of the costs of operating a system like ours would be to make the surveillance of our transmission line. We have the dams up north and we have the consumption down north in the south. So we have one of the largest transmission systems in North America, if not the largest one. So the inspection of it would have required yesterday people going up on the transmission poles and making visual inspection. Mm-hmm. We're moving to new technologies with drone. And you know what? The biggest value is not about replacing a human body by a drone. The biggest value is not to have to deploy the snow to get to the pylon. So I think the pressure on costs requires us to be super innovative, taking into technology as never before, and be super smart in what we do, and being very savvy with cash management.
Yeah, interesting. Great example. Sophie, great to have you with us. Appreciate it. Sophie Brochu is the CEO of Hydro-Québec. Stay with us.
Fauci and his team shared data about mixing vaccines. The vaccines can be mixed safely, and that's very good for people who got not Moderna vaccine, but want the Moderna vaccine for a booster because it's of a higher dose.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
We've seen recovery from the impact in Q3 from some of our supply base that caused a little bit deeper impact. So I'm optimistic that we are through the worst of it. We've shared our safety protocols with our supply base around the world. So that's what gives me confidence that we're going to see a stronger Q4 and then a stronger Q1. And even as we get to the second half of next year, continued improvement.
This is Bloomberg Markets. I'm Amanda Lang alongside Alex Steele. That, of course, was General Motors CEO Mary Barra speaking earlier today on Bloomberg. We do have a correction to make here. We just talked to Hydro-Quebec CEO. They do not operate 24 thermal plants. That was on the infographics. The company wants to clarify that they operate one plant, which is a peaker, and that is those are small plants, thermal plants in remote communities, and that for the most part, they do not operate in that fashion. They're not connected to the main grid, which is this stuff, Alex, which will be exported to the United States market. So clarification from Hydro-Quebec, and our apologies.
Yes. Thanks for having me. It was nice to sub in. We just heard from Mary Barra there. GM still down by about 4% after those production snarl semiconductor issues. For Amanda Lang, I'm Alex Steele. Have a great Wednesday. This is Bloomberg.
lee lo que dicen la comunidad científica y los territorios que están en lucha. Han profundizado el extractivismo en Argentina con más agronegocio, con más transgénicos, con más agrotóxicos, con más proyectos megamineros. Y ahora, como si fuese poco, han avanzado presentando un proyecto de ley que es la ley de hidrocarburos.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concert Bank of America.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
I'm Mark Crumpton with Bloomberg's First Word News. In the UK, Chancellor of the Exchequer Rishi Sunak is promising to cut taxes on fuel and flying. In his budget speech today, Sunak said he wanted to encourage more people to take short-haul flights within the UK, so he would reduce air passenger duties for those trips. The policies are likely to anger environmental groups. It could also undermine the UK's efforts to show leadership on tackling climate change before the COP26 summit, which begins Sunday in Glasgow, Scotland. Belgium is warning Poland not to treat the European Union, quote, like a cash machine to boost its economic fortunes while disregarding its rules. Belgium's prime minister said today his Polish counterpart was, quote, playing with fire. Poland accuses the EU of threatening World War III for insisting that Poland respect the independence of the judiciary and EU law. Iran's deputy foreign minister says negotiations to revive that landmark 2015 nuclear deal will resume before the end of November, but it still expects the United States to release $10 billion of its assets frozen overseas as a gesture of goodwill. The last round of talks derailed in June. Iran says a date for the new talks will be announced next week. The United States has issued its first passport with an X-gender designation, a milestone in the recognition of the rights of people who don't identify as male or female. Officials didn't disclose the identity of the person who received the passport. The U.S. Special Diplomatic Envoy for LGBTQ rights called the move historic and celebratory. The State Department says it expects to be able to offer the option more broadly next year. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Mark Crumpton. This is Bloomberg.
The most crucial moments in the trading day. This is Bloomberg Markets The Close with Caroline Hyde, Romaine Bostick, and Taylor Briggs.
2 p.m. in New York, 7 p.m. in London. We are live from Bloomberg's World Headquarters. This is Bloomberg Markets The Close. I'm Caroline Hyde.
I'm Taylor Riggs. And I'm Shonali Bassick, in for Romaine Bostick.
And today he misses the mixed markets, guys. Tech on top in equities, while commodities they cool. And there is a flatter yield curve, signaling uncertainty about economic growth. Shonali takes us on the appetite for IPOs. Taylor takes us to the big moves in the global bond markets. We are an ununched kind of day, guys, and we've got you covered. That's while corporate earnings continue. We bring you what's on CEOs' minds with the leaders of Teva Pharmaceuticals and Stifel. And we take a look at
equality, or the lack thereof, in venture capital? How are they supporting underrepresented founders? And are we seeing more diversity within VC's ranks? We'll discuss all that and so much more coming up this hour. But first and foremost, those markets, guys, S&P 500, not so exciting. What is exciting is where yields lie. This is Taylor's bread and butter, the 30-year. The yield collapsing some 9 basis points. The moves over in the UK, in Canada, when you're seeing the short end of the curve rise up and you're seeing the long end really catch a bid here. 9 basis points on the 30-year. We are seeing significant moves. We haven't had these sorts of lows when you look at the 30-year yield since all the way back, well, blasting past 1.94%. We haven't seen these levels since mid-2020. I'm also looking at the UK gilt that saw significant moves, down 12 basis points. This is, we see, of course, Rishi Sunak talking of funding across the government, but notably they look like they're pulling back on issuance over in the United Kingdom. Bloomberg Commodity Index off by some 0.3%. But I mean, bonds are where it's at today, Shanani.
Yeah, absolutely. Bonds are where it's at. And obviously the risk appetite is still in markets. Caroline, we're looking at those IPOs. We're talking to Informatica later. The New York Stock Exchange, John Chuttle joining us. There's huge IPOs still coming up with Global Foundries. And you see that VIX a little bit lower. So perfect appetite for a little bit of risk taking.
And how much of that really folds into the narrative of a NASDAQ 100, Caroline, that continues to extend not only on the fundamentals from the earnings yesterday, but, well, let's be honest. Let's bring it back to bond markets. How much those cash flows certainly get a boost when yields come in as they do. Let's take a look, as we do here, at the 5-year yield. Caroline, you rightly point us to the long end of the yield curve, the 30-year. Let's not forget we had a 5-year bond auction, of course, just happening. It was the highest yielding 5s that we had since the pandemic, really strong after a strong 2-year auction that we had yesterday. Strong non-dealer bidding and higher bid to cover ratio. So that is the trend line upwards leading into this auction. Of course, now as we come back down, nowhere near a 120. We're at a 114 on the day. We changed the board and we go away from some of the bond markets back into the fundamentals. Caroline, back into the earnings picture. I think the comments from Anahan yesterday saying that we won't go negative on the revisions, but you could see some of these revisions slow. And indeed, that is what we see here on a global earnings basis.
Let's dig into where we look at cross asset, where we look in terms of, well, equities, where the money should be put. Chris Mack is with us, Harding Loebner, portfolio manager. Great to have some time with you, Chris. And when you're looking at these sorts of levels and valuations, but when you're looking at earnings in general coming in strong, is it time to be still sticking with equities as an asset class?
Yeah, on a long-term view, from a long-term perspective, absolutely. You have to look at what are the underlying growth opportunities, and you see those opportunities extending over time. And so if you have the right stocks, we certainly think you could be equities over the long haul.
I understand the equities over the long haul. Talk to us, though, about what you're seeing within the yield curve market today. With yields on the 2-year coming up 5 basis points, you're approaching 50 basis points on the 2-year, and then extending a flattening of that yield curve further out. What is that signaling to you? What is that telling you?
Yeah, and I think you have to look at what it's trying to tell us, right? And so you're trying to understand, everyone's trying to figure out what is the post-pandemic economic growth rate going to be, right? And that goes for whether it's a tech company with maybe long duration cash flows and how much of that growth is sustainable, or as far as what the yield curve is telling us. Are we going to be going to an accelerating economic environment? Certainly, you were all mentioning the supply chain challenges. That highlights the underlying strength of the economy. And so from our perspective, you could be in equities provided you have a globally diversified portfolio that's looking for both secular growth in technology, the right companies, as well as some more cyclical growth, for example, the U.S. banks.
Chris, is there any way right now that you're protecting on the downside, given that we are at record highs on the S&P?
Yeah, and that's by being conscious to valuation, looking for where the stocks have priced the upside of the duration of growth, and then looking at where there's an underappreciated opportunity. So a couple of good examples, I would say, of controversies in a way are companies in the e-commerce or social media space, like Etsy, for example, where that stock has rebounded a bit more recently, but there's a lot of debate as to what the sustainable long-term growth is. On the flip side, if you look at a company like Pinterest, which has seen some deceleration in growth, that could be presenting an opportunity, provided you think that deceleration in user growth will not be sustained, and they're continuing to monetize their user base. So ultimately, we're being conscious of what's happening by selling the things that look too expensive to us, where there's little upside, and then reinvesting in the something that's underappreciated, like a Pinterest, for example.
It's interesting that really you're still finding technology the place to be putting your money. And Chris, for many, talk about the realm of technology at this moment, because in some ways, big tech, I'm thinking the FAG names, are seen as a haven, particularly in perhaps an inflationary environment. People feel that they can withstand those sorts of margin pressures and indeed pass them on. But then when you're looking at the growthier names, that's often what's hit the hardest in these sorts of inflationary environments. How much are you thinking that the companies you like, that you point out, Pinterest, and I also like Align, you like Etsy, how much are these companies able to withstand any interest rate hikes, inflation?
Yeah, it really gets back to what do you want to own in an inflationary environment? Companies that have strong bargaining power over the buyer. And so let's just take, for example, Microsoft, which reported yesterday, they are planning 10 to 15% price increases on average across their Office 365 product suite. So that's an example of a company. Maybe it may not necessarily be directly related to all the inflationary pressures, but certainly they are showing that pricing power over the buyer. Another company, the large semiconductor manufacturer, Taiwan Semiconductor, also planning price increases to deal with the tight chip supply situation. So it's just a couple of examples. You don't have to own an energy company. You could own actually technology companies with pricing power, talking about prices go up, which is somewhat unusual in technology when you think about it.
It was interesting. We woke up to news this morning, Credit Suisse, saying that it is still too early for investors to return to China. As you think about investing on a global basis, how are you thinking about APAC ex-China, MSCI ex-China, emerging markets ex-China? Is that what you're thinking?
So we've been long focused on emerging markets. We think that are good quality growth companies within emerging markets. You just need to know where to look. Certainly China's been in the headlines. And outside of China, we have been focused on banks, particularly banks in India, like HDFC is a very well-run bank where penetration of services is quite low. And ultimately, despite all the COVID risks, they've been enduring that quite well without having a large loan losses in that situation. But even in China, you have to be selective, right? You think about, just to highlight that valuation concern that we have, you look at where there's risk to the downside, something like Trip.com, we see there's risk to the downside there in terms of possible regulation and them being less customer friendly, and buying something that's less expensive like Baidu, which is sort of the old tech company that is not gone away, has a core strong business and search that may get rejuvenated from some of the antitrust measures that are being targeted at some of the other companies in that space.
Chris Mack of Harding Loevner, really appreciate your time. Thank you for joining us. And stay with us, because coming up, the earnings, they keep on rolling. Today, we're going to get insight on Stifel's results from the company's CEO, Ron Kruszewski. Plus, we're also going to be speaking earnings with Kåre Schultz, the CEO of Teva Pharmaceutical. And another one, Informatica. They're raising $841 million after pricing its IPO, well, really at the bottom of the expected range. But we're going to speak with Amit Walia, the CEO of that company. All that and so much more coming up. This is Bloomberg.
at technology, how should we be looking at big banks and technology?
Technology is our friend. So it's helping us transform the bank fundamentally. And in fact, we're speaking, I think, as we speak, to our shareholders around what we've done and how we've transformed the bank. We also see technology and technology companies as partners. So some
not
of our
rivals.
We know that there are big parts of what have been our business historically that will be absorbed into convenience platforms. And by convenience platforms, whether that's Amazon or Facebook or Alibaba or Tencent or something like that, those are platforms that are just very convenient for people to conduct their day-to-day financial affairs. And it'd be very difficult for a bank to compete with that. Now, in some cases, I'd say, let's say in Africa, we are setting up a competing platform to the convenience platforms. And we're working with technology companies and mobile telephony companies and others to create a platform of our own. But for the most part, we're going to be playing on somebody else's platform.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Big stock movers, which means it's time for our stock of the hour. Take a look at shares of McDonald's. They're still up about 2.5%, flexing its muscle as the #1 burger chain. All as menu prices, they continue to rise, along with more open stores, and all of that offsetting some of the higher food, some of those higher labor costs. Bloomberg's Kriti Gupta joining us now with more, and we're paying more and we're buying more of it, right?
We absolutely are. Taylor, when I used to have Happy Meals, they were 99 cents. Now they are $3. It's that dynamic that you're starting to see quarter over quarter as well. Prices getting higher, McDonald's really able to absorb them. And it's not just commodity prices, it's not just food prices, it's labor prices. And that's what's really going to be this massive shift in earnings when we start to talk about the commodities, the supply chains. Now we're going to be talking about wages and retaining some of that talent. We want people to help us, especially in the service sector. But McDonald's also really benefiting here from the reopening bid. Remember, we did have this massive drop where no one was going out. We had this big recovery, and they are still thriving off of that. Year-over-year comp sales up 12.7% compared to the 10% estimate. But put that into context, pre-pandemic, it's still much, much higher than the kind of comp sales they were seeing back in 2018, back in 2019. So really thriving. Once again, people still buying those fries, still buying those Egg McMuffins. That's my menu choice anyways. But let's talk about those margins in particular. Beef, chicken, veggies, they are all getting even more expensive. And even with all that, margins were actually higher than they were quarter over quarter, just marginally, 18.9% versus 18.8%, but higher nonetheless.
When was a Happy Meal ever 99 cents? That feels really wrong. Kriti Gupta. Great, thank you so much. Meanwhile, switching gears, we're talking about the lack of equality at the moment in VC. I hosted a panel for the Bloomberg Equality Summit, and it was called Making Waves in Venture Capital. We discussed the need for venture capitalists to support underrepresented founders and why progress is, unfortunately, pretty slow.
I mean, it's definitely more competitive now, for sure. Like we're seeing way more tier ones than Andreessen's and other funds in the world now. But I would say, like broadly, like we don't see a lot of the main funds that the press covers, right? The reality is NEA, for instance, has 2 black founders and there are 400 companies, right? Sequoia, I think, has 1 black founder globally across all their funds. So, like, we're not really competing with a lot of the tier 1 funds. Like, people are obviously trying to change. Maybe they make 1 investment, 2 investments, but like that's not like competition for us that we see. Like, and honestly, because we are agnostic and we invest across the US and now Africa and Latin America, there's only a few funds that we run into like on a deal by deal basis. Typically, like we're co-investing with people maybe in 2 deals, 3 deals max. And so I wouldn't say like there's like consistent funds that we're seeing because this industry is so new, like for diversity focused investing.
Do you think it'll get there, Henri? Why not more? Battening down the hatches of Sequoia and of Andreessen, and are you starting to think that maybe there are more than 2 entrepreneurs are going to be backed by them? There are going to be more actual venture capitalists at those funds?
Yeah, I mean, you hope so. I think, so when I was at Harvard Business School, I did a study with a professor we looked at data over 20 years, and we basically looked at what was the correlation between the race and gender of VC partners to the race and gender of VC-backed founders, right? And so it was like 0.85, right? So it's a very strong correlation between the makeup of who the partners are. And so I think until you get more diverse and women-led partners who have actually check writing capabilities, it's going to be a long haul battle. I think part of it is like venture is very much a relationship game. And you even think about, there was a recent study by Andreessen, the average age of Andreessen founders are 39, right? Like how, like, and you know, I don't know what their percentage of two-time founders, but how many founders of color or women have been given the opportunity to like be in this industry for 10, 15, 20 years at this point. It's still really early, right? And it takes time to kind of get this experience and check the box that a lot of these funds that are tier one funds are looking for. Like, oh, you've started a company before, or you've worked in, you know, whatever startup. And we just haven't had those opportunities, right? And so I think part of it's going to take time. And part of it's going to be, you have to get diverse check writers because there's just such strong correlation between check writers and who gets the checks.
I'm Pierre Jacques there of Harlan Capital, just as part of our conversation with the Bloomberg Equality Summit and my panel, Making Waves in Venture Capital. Coming up, Informatica's public debut. We speak with the CEO, Amit Walia, on the decision to go public after taking the company private back in 2015. That's next. This is Bloomberg.
Television and radio.
We are on the verge of a disaster.
Join us live from Glasgow for coverage of the COP26 Climate Change Conference.
People are beginning to build some momentum, I think. The question is, will it be enough?
We'll speak with global leaders, keep you up to date on progress and setbacks, and analyze what it all means to you.
We're going to need to see some real action.
COP26, the UN Climate Change Conference. Special coverage on Bloomberg Television and Radio.
A market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
By the Delta variant. And while bookings bottomed out and we're clearly on the road to recovery now, a lot of the fourth quarter was impacted, and business offices that were going to open in September has been pushed back to January.
Can't always be about the bond markets, Caroline. So let's look at some of the IPOs. Look, on a long-term basis, there was a big run-up in SPACs, big run-up in IPOs as we take a look at where we were a year ago. This, of course, is the McDonald's chart, which we'll get to that. Really, the point has been that you've seen a come down of some of that big outperformance of some of the big SPACs and IPOs. Though today, Informatica, you're still up 7-8% on the day.
Quite the pop. We'll bring you that chart. It's a beautiful one any moment now. But Amit Walia, meanwhile, is standing by, CEO of Informatica. Of course, you know it as a data management software provider. And Amit, what are we seeing in terms of, well, the desire to go public again for your business? You're wanting to potentially have working capital to put to work. You want to be looking at investment, potentially M&A a little bit. Where do you think you're going to be putting these funds that you've raised?
Sonali, great to be here today. It's a special day for all of Informatica employees, customers, and partners across the globe. To your question, we had a great day today for the company. And what we're doing is to basically take the proceeds. It's a primary raise to draw down debt. And we have great amount of cash flow. We have 25% free cash flow margins to continue to invest in the business. And we're going to just organically keep growing as we've grown before.
Talk to us about that cash flow. Of course, posting a net loss, but in the first half of 2021, it was narrower on a year-over-year basis. What is the pressure for profitability?
You know, Sonali, ours is a very high profitable company. As I said, we are 25% free cash flow margins. Obviously, there's a lot of other one-time things that go into the net income line, but we generate free cash flows.
So, Amit, what about some of the clients you work with, from Kroger to Unilever? What is it that you have been doing for them when it comes to data management, especially in the middle of this massive supply chain crunch we're seeing across the world?
Yeah, no, so Sonali, when we think about our product portfolio, we are the only platform in the world, intelligent data management cloud with 7 best-of-breed products. And what we are helping customers like Kroger or Eli Lilly or Unilever is to drive many transformations. Take Kroger, helping them digitize and manage a just-in-time, real-time inventory so they can stock the right product at the right time in the shelves to make sure they don't have lost revenue. Or help Unilever manage a very complex supply chain across 90 countries, 20 billion plus supply chain spend to, again, make sure it's the most efficient, nimble supply chain, especially in a time like this.
Especially in a time like this, what made you go over the line to decide to list now, Amit? Because obviously valuations are high. People are saying, hey, it's a great time to go and raise money. But there's clearly volatility that we saw, the pricing of your listing coming in perhaps at the bottom end of the range, but then seeing the pop that you have today, do you feel that the whole process was managed well?
Yeah, to me, today is just a day. Look, we've been building a long, enduring business. As I said, we are 1.2 billion of ARR. Our cloud business is growing 40% plus. We have 5,000 plus customers across the globe. We are the leader in all 5 Magic Quadrants. We have a company that's basically firing on all cylinders going forward. And our goal today was to just close out a chapter of being from private back to public and continue growing from here.
But did you say just a day, but I mean, you want the day to be successful, of course. I mean, it is important as to what your valuation is. It is important that it's taken down well by the market. Did you feel that the whole process was as you'd wished it to be?
You know, markets treated us very well today. As I said, today is a day. We are blessed to actually have some great investors come in. And as when we were private, we had great long-term patient investors, and that's the same I'm looking forward going forward. So to me, it's a long-term game that you play, and that's how I'm thinking about it. And today has been a great reception by the market, and I continue to keep driving value for our customers and health from there, our shareholders.
Talk to us about the long-term play of AI. It's all over your website. How important is that as you think about the integration of AI in the product?
Tremendous. So as you said, our AI is called Claire. It's a play on the word clairvoyance. We want our customers to be clairvoyant with data. And that is running on a cloud at a platform scale of 22 trillion transactions a month, helping customers automate things at scale. For example, doing a Google-like search across your entire enterprise data, or creating a social graph of data that Facebook and LinkedIn have done to you and I. So that's how our AI is helping democratize data and making things easy in an enterprise world that have never been able to be done before.
Amit, real quick here, what can we expect next? Obviously, shareholders have something to bite on today. What's coming up for the business?
Well, look, continue to go hyper-invest in the product categories. We have so much to do in this $44 billion TAM in front of us. But as you just said, huge investments at the AI layer. We believe that there is tremendous more automation to be done, and that many more AI-driven data apps that can be built off our platform. So we have a very broad vision. And by the way, never underestimate, Claire can talk to you too in the coming few years. So who knows, that may happen.
Great to have some time with you. As shares currently up almost 8%, it's the Informatica CEO, Amit Walia. Come back again. I'm sure we'll love to have you on your first public earnings as well. Meanwhile, S&P 500, let's have a quick look at what's happening in terms of the greater market, because we are just in the green, up 0.2%. Technology helps rise us higher. Tell you also what's on the higher side, though. Check out those yields on the 30-year, Tay.
Yeah, it is bond price higher, yield lower. Caroline, is worth thinking about the surprise rate decision out of the Bank of Canada, some of the inflationary data that we've gotten from Australia, and your UK hinting supplies going down?
A flattening, global flattening yield curve. This is Bloomberg.
China is a gigantic part of our economic life and will be for a long time, for our lifetimes. And that does not mean that we should be naive in the way that we look at our critical national infrastructure, the way we look at, you mentioned nuclear power, you mentioned 5G technology. Those are all legitimate concerns that any government, many other governments around the world have. But I want to be, I've said this many times, it's worth repeating, I am no Sinophobe, very far from it.
Do you think you're the last Sinophile in the cabinet?
No, I expect there are lots of... look, China is a great country and civilization.
What about wind power? Would you let them buy offshore wind power? That's infrastructure.
I think you'd have to
railways.
You'd have to look at what was you're defining as strategic or critical.
Watch Bloomberg Surveillance to learn how to look at markets, how to look at trends, and how to look younger.
What do you think, John? Botox, or do I really need to get something done?
I think, Tom, if we just change the style up a little bit.
You think so?
Yeah, drop the bow tie. Drop the bow tie.
What, skinny tie?
Yeah. I always say, this is my line, whenever anyone in America has a go at me about a skinny tie, the older you get, the wider it gets.
Oh, really?
Until it becomes a bow tie.
This is a bow tie.
Until it becomes so fat, you just sort of...
You talk about hiring aggressively at the moment. Can you walk me through how challenging that is at the moment? How difficult is it to find the right people?
Well, things have changed. Again, the world has changed under the pandemic, and you all know worldwide, what the challenges with getting people back into the workforce.
This is Bloomberg Markets, the close. Taylor, it's time for your commodities.
Do I get to take it back? Caroline, it's Wednesday. I'll take it back, and then I'll hand it off to you again tomorrow. Take a look at coal. This is actually pretty serious, you guys. Coal plunged overnight in China. You're now down for 7 straight sessions after they said they're going to be cracking down on some of the rising prices and stepping up their oversight. You also saw coal prices over in Europe down to a 2-month low, and a huge demand over here from U.S. utilities, given the big ramp up in demand. So big pressure there. You're off about 13%. Aluminum, copper, nickel, steel also all getting crushed today. You had Mary Barra, right, of GM, hinting that even aluminum, magnesium, right, seeing higher cost inflation. So those are off about 5% or so. Also wanted to take a look at oil dropping on bigger than expected gain in supply. That was here in the U.S., according to the EIA report. Finally, had to put in some positive news for you here. Corn, look, they're up to the upside, right, hitting a 2-month high here. You have some biofuel booms and maybe a dimming outlook for supply. You're on track now for a second straight month of gains. Caroline.
All eyes on what's happening in the commodities space, but we're going to flip back to earnings right now. We're going to talk in the banking sector. Shares of Stifel, they're looking at how they perhaps on the lower side today, just about by 5%. That's after we saw actually growth across the board in terms of revenue and earnings per share, but it missed some estimates for the asset management and services fees. Even so, the company is reporting the second best quarter in its history for revenue and earnings per share. So let's talk about that history. Ron Kruszewski is with us. He's the chairman and CEO of Stifel. Ron, you're a man who's been leading this business for 25 years now. Congratulations. I was just looking at some of the statistics from 700 employees back in 1997 to 8,500, from $110 million in annual revenue to expected to be about $4.5 billion. Significant growth. Had the market just got too excited about the growth that you're showing at the moment and got ahead of itself?
Possibly. Look, our stock was very strong up until earnings. I sort of, markets in the short run are very unpredictable. Our revenues were up 30%. Our net income was up 70%. Our outlook is fantastic. With of course, assuming the markets stay accommodative. So look, you need to take a pause, and that's fine. But as I look back, we've had 25 consecutive years of record revenue. Not a lot of investment banks can say that. So I'll stick with our long-term record. The market will take care of itself.
Ron, it's a question for you. It's a question for a lot of leaders on Wall Street. When things start to moderate, when volatility starts to subside, how do you squeeze out that extra dollar? Where do you find that extra growth?
You're talking about on the investment side?
Yeah, on the trading.
I think it's as things change.
Trading and investing.
Well, look, I mean, for our investors, you just need to stay the course. As always, stay diversified. Don't try to time the market. Running a company, Stifel is a very diversified firm, and so when if rates would increase, that might cause our investment bank to slow, but we would make a lot more in net interest income. So we're a very diversified firm, which is true for us, is also true for investors. It works for both if you stay diversified.
The diversification also includes asset management. You have the big bulge brackets like Morgan Stanley, right? Recently making some inroads in asset management, JP Morgan as well. Where do you see at Stifel the future of asset management?
Well, we're in the asset management business, right? We manage over $400 billion for our clients, and so that is a business that we're very much in. If you're talking about, making asset management like the institutionals, Eaton Vance's, like what Morgan Stanley did, I think that business is a fine business. It's a little pricey from an acquisition perspective, but we're in the asset management business, so. Period.
Ron, how is your client optimism right now? How is your optimism surrounding the US economy? Of course, bank shares are all lower today because we see of what's happening to the yield curve, and suddenly this flattening and borrowing costs coming down on the longer end. That, of course, never spells well for the banking industry on a day-by-day basis. What about month by month for you at the moment? How do you see the US economy continuing to grow?
Well, there's a lot of uncertainty right now. What's going on in Washington and the uncertainty with what comes out both on fiscal and tax policy is the market's beginning to take notice. I thought that they were somewhat complacent to the risks that were posed there. But I think the biggest thing that's happening right now is the tug of war between inflation and inflation expectations, the fact that the Fed is going to start tapering, and really where growth may come from. When you think about it, last year we had a lot of growth, but the deficit was 10% of GDP. That's not going to occur every year. And this year, that's going to be a headwind, that we're not going to have the same deficit spending as we had in the pandemic. So a little bit of a tug of war. I think you have to stay the course. Personally, what we believe here at Stifel is that the PE multiple of the market's going to contract here, which means there's a little bit more downside to valuation than upside in the short run.
So how do you look at your business in light of some of these headwinds that are coming up at the fore? You've agreed recently to buy Vining Sparks. Do you look to more acquisitions ahead, adding more talent, or is it time to hit the pause button a little bit?
I've been CEO for 25 years, and I don't think I've ever hit the pause button because I am optimistic. You asked the question about optimistic, and I'm optimistic about the U.S., about our economy in the long run. Of course, we're going to have cyclical changes in the market, and the markets will go through a recession at some point. And but my perspective is always that the U.S. economy is going to grow. The people that invest in the U.S. economy are the ones that are going to build wealth. And as a CEO, I'm always doing things believing that the world's going to get better. And by the way, if the world comes to an end, I'm not going to be on this show, and you're not even going to be able to criticize me about that. So, but I got to be optimistic.
Well, take the optimism.
What are you going to do? You got to call and say, Ron, that was a bad acquisition.
Talk to us quickly about one more thing here, about some of the labor cost inflation. How much are you having to pay up for young talent?
I think that not just young talent across the board, that's the part of inflation that I don't think is transitory. We are seeing it across the board, and not only in our business, but in every business. And not only do you see wage inflation, but the other thing I was reading about was, and I think you all know this, is you're paying a lot for not as much service. So it's tough to get the service, whether you're going on a vacation or you're going to a restaurant. And I believe that what we've done in terms of incenting people not to work is a reckoning that we're going to have to deal with on the wage side. And in many cases, I'm pleased that wages are going up, but there is an impact on the inflation and on the service side. And every industry, every single industry I know is dealing with labor shortages right now.
Really appreciate your time, your comments, your thoughts here. Stifel Chairman and CEO Ron Kruszewski. And make sure to take a look at what we're following in the market. I want to bring you some breaking news out of Visa. Shares are off a little bit more than 6% now. This as the Justice Department said that they're scrutinizing Visa's relationship with some large financial technology companies. You're looking at Square, Stripe, PayPal Holdings. This is a part of their antitrust investigation of Visa. This is according to Dow Jones, which is reporting this news. Bloomberg has not independently verified this as of yet, but investigators want to know if the deals they had with some of those fintech players kept those payments companies from using other card networks. This is according to people familiar with the matter. You can see Visa and then, of course, some of the others heading lower on that news. Stay with us because still ahead is everyone's favorite time of the week, including mine, Muni Moment. We're going to check in on Washington. We're going to discuss the market implications of President Biden's economic agenda. And we do that with Stephanie Larosiliere, Head of Municipal Business Strategies at Invesco. This is Bloomberg.
When you use Ecosia and click on it, we make money. But now there's a big difference compared to other search engines. We use the money to plant trees all over the world where they are needed most.
Engine number one was able to do on the Exxon fight. It opened a lot of people's eyes to, I guess, the power that smaller investors can have. And I'm curious as to how other people can sort of look at what you did and use that is either a template or maybe just some sort of guide as to how they can sort of approach their relationships with other companies.
We founded the company in Engine Number One on the idea that we take the data, not ratings and rankings of ESG of the past, but we actually take the environmental, the climate, the social, worker data, and we simply use it to look at the valuation of companies and look at it over a long period of time. And so if you think about it that way, you own these companies. Everybody that owns the company, whether you're a big institutional investor or you're a small retail investor, you own the company. You have a voice, you have a vote every year.
Yeah.
And so our approach is to use the vote and engage with these companies over time.
But that's always been the case. I mean, at least in theory.
Countries, Francine, that are the equivalent, that equal 80% of all the emissions. Those 20 countries, above all, have to step up.
So US-China tensions escalate once again as Washington bars a major Chinese state-owned telecom firm from operating in the US over national security concerns. Meanwhile, General Mark Milley, he's chairman of the Joint Chiefs of Staff, says China is the greatest geopolitical threat to the United States. Now, he spoke with David Rubenstein earlier on peer-to-peer conversations.
I think it's China, and I've said that publicly many times. I think as we look to the future, and I think we are living in a historical epoch, actually, where we're seeing the rise of a country that is unlike something we've seen probably ever before. And it's one of the great historical pivot points, I think, that we've ever witnessed, which is the rise of China. And from the reforms of 1979 and Deng Xiaoping up till today, which is, I guess that's what, 41, 42 years or so, 4 decades, they've had an incredible economic run. And with that, they've developed a military that's really significant. As we go forward over the next 10, 20, 25 years, there's no question in my mind that the biggest geostrategic challenge to the United States is going to be China. That I have no doubt at all. Russia is important, not unimportant at all. Russia has very significant military capabilities. North Korea, Iran are still there. Terrorists are going to be around for quite a while. But I think China is clearly the most significant geostrategic threat we face.
As we talk today, there have recently been some reports that the Chinese have a hypersonic missile that can theoretically go into space and then come down with a nuclear bomb, escaping our ability to knock it down. Is that something I should be worried about, or all Americans should be worried about?
Well, what you saw, and I don't want to get too much into the classification of what we saw, but what we saw was a very significant event of a test of a hypersonic weapon system. And it is very concerning. I think I saw in some of the newspapers they used the term Sputnik moment. I don't know if it's quite a Sputnik moment, but I think it's very close to that. So it's a very significant technological event that occurred, or test that occurred by the Chinese. And it has all of our attention. And we're paying it, but that's just one weapon system. The Chinese military capabilities are much greater than that. They're expanding rapidly in space, in cyber, and then in the traditional domains of land, sea, and air. And they have gone from a peasant-based infantry army that was very, very large in 1979 to a very capable military that covers all the domains and has global ambitions. So China is very significant on our horizon.
That was General Mark Milley, chairman of the Joint Chiefs of Staff. And don't miss that full conversation on the David Rubenstein Show, peer-to-peer conversations. It happens tonight, 9 p.m. in New York. We want to stick with Washington, though, and continue to talk about the White House and trying to step up pressure on congressional Democrats to finalize, well, at least the framework for a deal on President Joe Biden's economic agenda. Joining us to discuss the impact on this and municipal bonds in this week's Muni Moment, Stephanie Larosiliere, head of municipal business strategies at Invesco. And Stephanie, it seems like we've been talking about infrastructure for a decade or two. What is the market pricing in, if anything, about any sort of imminent infrastructure deal that we could be looking at?
Well, we have been talking about this way longer than I think we should have been for quite some time. We were talking about it in 2016, and it seemed to be a very important part of that election cycle. But as we all know, nothing happened there. So here we are again. And I think, this time around, it's a very key part of President Biden's, things that he wants to get done at this point. And the market is paying attention. We're in wait and see mode. We believe something is going to get done. It's just a matter of how much is going to get done. At this point in time, it's clear that the bigger number that we were expecting earlier on in the year is just not going to happen. So the market is pricing in something that we believe will be digestible over a longer period of time. We think, muni demand continues to be very strong. And with that, we should continue to see a very nice appetite, even if we do see additional bonds come to market on the back of the infrastructure deal.
And talk to us about some of those supply and demand dynamics with an expectation of more issuance, at least within the Treasury market. I'm taking a look at yields falling 9, 10, 11 basis points across the curve. How do you see those supply and demand dynamics playing out, at least within the muni market?
Yeah, so we've had nearly 80 weeks of positive flows into municipal muni funds and into municipal mutual funds, and that is a spectacular number. We're on track right now to, have in the books the second largest year in terms of the pace of the flows we've seen in the market since we started keeping track in 1992. What we have seen as of late, though, is muni rates starting to trend up with Treasury rates, and while it is something that the market has needed for some time, there is some pain getting there. And I'll say, our longer part of the market, the high yield muni part of the market, has been affected. We're definitely seeing some market timing, if you will, I think, from investors in that part of the market that are wondering if the punch bowl is going away and what is going to happen to municipal bonds, if we do continue to see rates rise. But I definitely think Treasury rates are range bound. We don't expect to see Treasuries going to a place where it will significantly impact munis. Fundamentals are strong, and that's the important part when it comes to municipals, I think, in this period of time and for some time to come.
Always appreciate your time. Wish we had more. Stephanie Laracillier, head of municipal business strategies at Invesco, and we interrupt for further big breaking news. Look, the billionaires tax proposal we are hearing is out of that Biden plan. This is according to Democrat Neal, but the 15% global minimum tax, of course, still in the plan. The big headline for our audience, of course, the billionaires tax proposal is out of that plan. We knew that it was only estimated to apply to about 700 people. It was trying to calculate paper gains within wealth. Private held assets we knew would be pretty hard to value. So at least for now, looking like that billionaires tax proposal off the table. We'll continue to bring you more of this breaking news as it comes. This is Bloomberg.
The energy crisis, there's a lack of drivers. Is there anything that you need to ask authorities to do better, or that your clients want the UK to do better?
I think we're at a moment in time where we're coming out of the pandemic and there are a handful of things going on. I think all over the world there are labor issues that are really a reflection of this transition out of the pandemic. There are supply chain issues. Some of this stuff is transitory. There are some secular trends that we have to watch closely. But I think we're adjusting and dealing with it as anybody else is. And I think leaders here are thinking about it the same way leaders are around the world.
When you look at the UK and, of course, some of these green investments that the UK and the City of London particularly has been really trying to pitch, you've been extremely involved in carbon offsetting. Can London really spearhead that movement?
Well, I think it's important that governments around the world partner with the private sector to try to get capital directed toward innovation in a way that we can accelerate the climate transition. And I want to emphasize it's clearly a transition.
This virus is here to stay for quite a bit because it has been spread all over the world and has this ability to create mutations and variants.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Now, the proposal to tax unrealized gains of billionaires in the United States seems to be off the agenda now as part of President Joe Biden's economic agenda. Remember, that's the tax and spend policy that's likely to total about just shy of $2 trillion. House Ways and Means Chairman Richard Neal seems to be telling us this at the moment. So the unrealized gains taxation for billionaires' assets off, but it seems as though that 15% corporate tax rate is still on. Let's discuss corporations right now. Let's discuss the earnings that continue to come thick and fast. Teva Pharmaceutical, Israeli-based company, third quarter earnings, and we did see perhaps revenue coming a little, falling some 2% overall, and it looks as though in large part that's due to the North America segment. Let's ask the CEO. Kaya Schultz is with us. Mr. Schultz, talk to us about what's happening in terms of the issue with the North America segment? Where's pulling you back in terms of revenue? And where?
That in North America, we are seeing growth in our two key products, Ajovy and Austedo, but we're also seeing a decline in our old product, Copaxone. And the mix of that has led to a very small decline in revenues in North America. And overall, you could say our revenue is down 2 to 3% compared to a year ago. And that's really an effect of the still lingering COVID-19 effects. What has happened is that in Europe, total volumes have come down during COVID, and they're only now rebounding. And we can see in the third quarter that it's a lot better in Europe, and we can see now in the fourth quarter that that improvement continues as all the lockdowns have basically been lifted. In the US, our new products, Ajovy for prevention of migraine and Austedo for chorea and Huntington's disease and tardive dyskinesia, they've had a negative effect due to the specialists having closed their clinics for a while. So people going to the psychiatrist specialty clinic, there has been less people going, and therefore this is a new product, Austedo, and there's been less new scripts written. So it's not that the product is not growing, it's growing very nicely, but it's growing a little less than we were expecting. Also, all in all, you could say we were hoping for maybe $100 million more of revenue in the third quarter than what we actually got. But we think we can see things are normalizing. We think that the patients will be back with the doctors and that the sales reps will be back in the doctor's office here in the fourth quarter, both in Europe and in the US.
What do you see, if any, as some of the pressure from the generics drug business and the impact on your business?
Actually, we had a pretty stable generic and biosimilar business in North America and also in Europe. So we are quite happy with that. We did see a slowdown in volumes, and that's what I described before. When the lockdown started in Europe and US, then we really saw a drop in volumes. But we're seeing that picking up again. And relative to some of our competitors, we see a more stable pricing environment. So all in all, we are happy about the environment in North America. We would like to see a few more approvals from the FDA a little faster on the complex generic side, but that's the only thing where we would really like to see an improvement.
Yeah, speaking of improvements, what do you really need to see when it comes to kind of the broader environment in terms of pandemic restrictions, people going back to see their doctors? I mean, when do things start to turn around as far as, you know, people getting what they need for care?
Yeah, when we track it by basically tracking how many patients are going to visit their doctor. And we could see it was massively down in the first quarter and the second quarter. And for instance, in psychiatrist offices, we can see that we're approaching the normal level that we had before COVID, so in 2019. And I'm optimistic that here in the fourth quarter, we'll get very close to that level. And the same thing goes for other specialists.
Let's talk about your bonds, because in amongst your earnings, you've also said that you're planning to raise some $4 billion in bonds tied to ESG, environmental, social governance efforts by the company. In fact, it's looking to access medicines in lower middle income countries. So you sell this debt. How is that going to make it easier for those in weaker countries from an economic perspective have the ability to buy your drugs?
Yeah, so we are just a small thing. We are selling this debt to retire other debt. So it's a debt neutral exercise. So we are selling bonds 5, 7, 8 years out, and then we're using that to pay down debt for the next 1, 2, 3, 4 years. And that's simply because some of the maturities we have on a yearly basis, they are higher than our operational cash flow of around $2.5 billion per year. But getting back to your question, these bonds are sustainability-linked bonds, and they are sort of based on our commitment to the environment and our commitment to access to affordable medicine. And the reason why we can do this is because we are the largest manufacturer of medicine in the world, so we serve millions of patients every day. And we would like to strengthen that in lower and middle-income countries. So what we're committing to here is to get our products approved. And when I talk products, I talk about the essential medicines that have been defined by WHO. So these are very affordable generic medicines that are very important for healthcare systems in poor countries. So we are committing to increase those products and the access to these products significantly in these countries. And we are also committing to increase the volumes, either through donations or through sales at very low prices, so that the healthcare system in these low and middle income countries can improve. And that's unique for us. We're the first generic company to issue this kind of sustainability-linked bonds, and we're very proud about it.
Cor Schultz, Teva Pharmaceutical CEO, really appreciate your time. Thank you for joining us on a busy earnings day. It's also a busy breaking news day as well. We are hearing that billionaire's tax and that proposal is out of the negotiations when it comes to the economic agenda, when it comes to some of the revenue agenda that Congress was looking at. We know, again, that this billionaire's tax, hard to say how it would work if you tax unrealized gains. Do you do that for unrealized losses? Privately held assets as well might have been hard to value, estimated to apply to just about 700 people, but at least for now it does look like that is out. Let's do more on this with our Bloomberg Washington reporter Laura Davison. And Laura, what are you hearing?
So Richard Neal, he just came out off the House floor. He was talking with colleagues, heard a lot of angst from them, and they decided that this is not workable. Joe Manchin over on the Senate side has said that the billionaire's tax is something he can't vote for, and that this is now off the table. They're looking at an alternative to tax high net wealth individuals. This is a millionaire's surtax. This would be a 3% tax that's tacked on for millions above $10 million and higher. This is still all in flux. They are literally writing the bill as we speak. There's a lot of back and forth between the House and the Senate, back and forth between the White House to come up with a deal. The goal is to come up with something in the next 24 to 36 hours. That's a really ambitious timeline, but we'll see if they can do it.
See if they can do it, Laura. Who are, as you said, the skeptics have been Joe Manchin and the like on the billionaires tax. Who would be not inclined to see the surtax, for example, the surcharge going on the wealthy as well? Is it the same people that come to the head, and are we going to be able to appease them are we going to see some appeasement of them in some way?
It's a real question if Kyrsten Sinema, one of the holdouts in the Senate, will support this idea. She's been against raising rates on the highest earners. We'll see if this surtax idea would be able to win her over. Richie Neal said he has spoken with her about this idea, but he hasn't gotten, some sort of endorsement from her. We'll see. She's been more open to tax ideas in just the past 24 hours. Yesterday, she came out in support of this 15% corporate minimum tax. That's something else that's currently being hashed out, Neal says. Also, on the international side, it looks like that 15% global minimum tax will be in the bill.
Really interesting. Over the next 24 hours or so, what else can we expect by means of negotiation? What else is on the verge of getting cut, if anything at all?
The real deal is kind of coming down, looking at several hot button issues, things like paid family leave, how much money will go to Medicare, and also SALT, the state and local tax deduction. That's another area that has not yet been resolved. Several lawmakers say they won't vote for the bill unless it expands a super valuable tax break. It's been one of the last things left unresolved, but very, very important to New York and New Jersey.
Inherently, does Biden have the votes for reconciliation, Laura, do you think?
That's really the question. They've been making a lot of progress. Everyone in the Capitol said they've had momentum, but, they have to get every single Democratic senator to vote for this, and they also have to pay for it. So that's really the key right now of what can Sinema and Manchin agree to fund this bill.
I think a one shot for the time being. Laura Davison, great to get that breakdown. Let's turn it over to the world outside business as well with Mark Crumpton with the First Word News.
Well, thank you. Republicans were sharply critical of U.S. Attorney General Merrick Garland today during a hearing on matters ranging from asking the FBI to help address violent threats against local school officials to how the Justice Department is responding to terrorist dangers and border security. Senate Judiciary Committee Chairman, Iowa Republican Chuck Grassley, accused Attorney General Garland of politicizing the department, saying, quote, "It looks like the Department of Justice is running you," end quote. Iran isn't naming names, but says a foreign country was likely behind a cyber attack that paralyzed gas stations nationwide. The strike targeted software that controls a fuel card payment system for state-subsidized gas. Drivers in Iran have been left without fuel or have been forced to pay more for gas at stations that are still operational. The attack came weeks ahead of the anniversary of massive protests over fuel prices. Former Citigroup Vice Chairman Ray McGuire is calling out banks for lack of representation for women and minorities. McGuire, who ran for mayor of New York City earlier this year, spoke with my colleague Shonali Basak at the Bloomberg Equality Summit. The proposal that was floated at the Bloomberg Equality Summit, compensation and incentives could be tied to diversity goals. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
The most crucial moments in the trading day. This is Bloomberg Markets The Close with Caroline Hyde, Romaine Bostick, and Taylor Briggs.
Less than an hour to go. We are counting you down to the close.
Have we taken a commercial break yet? No. We keep going, and we are going to even further record highs. It's another day where there's a lot of green, but a lot of red as well on the screen. We have energy flipping lower. We have seen that higher yesterday, but it is the biggest loser today. Financials also as well, maybe something to do with that yield curve. Consumer stocks leading the way ahead of another big day of earnings, Taylor.
Well, and really interesting that you mentioned the consumer stocks, because I know that's something we've all been watching about, or some of these IPOs like Rent the Runway. Unfortunately, Shonali, you know this better than anyone. You're down about 4% on the day. They IPO'd at $21 a share, opened at $23. You are now back below that opening IPO price. So certainly looking at shares of Rent the Runway. Take a look at GM as well. The CEO, of course, Mary Barra, saying that chip shortage, that could last until 2022. So despite some good earnings, you are seeing some pressure on that stock as well. Hertz, this is incredible, Caroline. Not only was this company in bankruptcy, less than a year ago, but they came out with that big deal that they were buying 100,000 Teslas. And then they said they have now an exclusive agreement with Uber drivers. So if they want to rent EVs, they can do it from Hertz at more favorable rates. So it was boosting the stock earlier today. You're off about 0.9%. You want to talk about earnings? Let's do it with Coca-Cola. We are all now going back out to restaurants. At least that's what Coca-Cola is seeing.
Wow. Managing to help us in our drinking habits, whether it be your soda likes or dislikes. But what's happening in terms of likes and dislikes of the valuation of the market right now? Because we could be in for a tough month or so. The end of 2021 is likely to be rocky. That's what Sarah Malik over at Nuveen was telling us a little bit earlier. Just have a listen.
Markets are going to become more challenged going forward. We have a couple of rate hikes priced in by the markets. The yield curve is flattening. So what we have to rely on is hard economic data. And as long as that translates to mid-single digit earnings growth, which is what we expect, that should be supportive for the markets. But given where valuations of the markets are right now, we think it's more likely the market takes a breather from here, because for the rest of 2021, drama in DC, hard to find that catalyst to take the markets higher, because we think we just saw two main ones this month in October.
And we are living that drama in DC today on the show with all that breaking news regarding the billionaires tax. What's out, what's in, what does it mean for the market? What does it mean, of course, amid a flattening yield curve? Let's do it all with Cheryl Pate. She is a portfolio manager at Angel Oak Capital. And Cheryl, as you look at this market, the valuations, the question of volatility here on out into 2021, how are you managing to look through that in this moment?
Yeah, no, I certainly agree that it will be volatile, particularly through year end. We're waiting on the tapering formal announcement, and we've got moves happening on the yield curve daily, sort of reversing each other. Where we're really focusing is on the fundamentals. We have been very positively biased towards financials. I think it is an early cycle segment still, and we've been encouraged by what we've seen in earnings so far. There are certainly green shoots that are emerging in terms of core loan growth. Spending trends are positive. Commercial loan growth is starting to pick up in terms of unfunded commitments. So we've been encouraged by what we're seeing, and we think that will continue to accelerate from here.
And Cheryl, of course, you rightly point out that the yield curve steepens one day and then it flattens the next, and bond yields keep moving every day a different direction. But bear with me, if you will, on days like today, you have a 2-year back up to 50 basis points and a 30-year back below 2%. What cues are you taking from that, if any?
Yeah, I think it does speak to what we're expecting in terms of volatility when we look at the economic data and inflation in particular. I think we've got a sort of a fine line on supply chain issues and core goods inflation and how quickly could that resolve itself. Certainly, I think it's something that persists through mid-year next year. On the other side of that, we do have more persistent inflation clearly in terms of wages and housing So it is going to be a very data-driven time in the market, I believe.
So a lot of people shrugging off some of these inflation fears when you take a look at the markets overall, but what are the big risks that still exist that could start to drive things a little lower?
Yeah, I really think that, to us, the big risk is that we are not in transitory inflation and that we are going to see more durable inflation coming from areas that we expect will normalize over the next several months. We still clearly have an issue in terms of transportation and getting that supply to consumers and businesses. And I think that is really sort of one of the key risks that we're focused on, that sort of transitory for longer, and how does that play into the overall, Fed policy?
How does that play into your overall portfolio as well, Cheryl? What does it mean that you stay clear of? What does it mean that you look for opportunities in?
We've certainly been cautious on longer duration stocks. Clearly tech is doing well today, but over sort of a medium term, I think that's where we're a little bit more cautious, and we've been more positively biased towards shorter duration, namely financials. I think you've got a lot of overarching fundamental drivers like increasing M&A. It's been a very big time for card acquisition, and you're seeing a lot of transition that is really positively inflecting in terms of earnings growth expectations outside of rate environment.
Are you thinking ex-US?
No, I think we're mostly focused domestically, and I think that's where the risk, when we look at, for example, consumer finance, much more positively biased towards someone like an American Express that benefits from the releveraging of the U.S. consumer as some of these excess savings weigh down. Contrast that against Visa, for example, which clearly disappointed last night in terms of expectations for normalized international and sort of getting back up to run rate in 23, which I think is a little disappointing to the market. So I do have a positive bias towards the U.S. here.
More than 15 years of experience, coming in from Morgan Stanley in 2017 and now running many a portfolio over at Angel Oak Capital. Great to have your time. Cheryl Pate, portfolio manager, of course, over there. Meanwhile, coming up, keeping a close eye on these markets, we're going to get more voices for you. Nancy Davis, founder and CIO of Quadratic Capital Management, gives us her take on the volatility. Plus, we're going to catch up with John Tuttle, vice chair of the New York Stock Exchange, thanks to Shanali. His insight on the launch of the first Bitcoin ETF and the current IPO landscape. And another big day of earnings after the bell. We'll bring you the latest results for eBay, for Ford. All that and so much more coming up. You've got to stick with us. This is Bloomberg.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
supply chain team, they became unsung heroes of our pandemic timeframe, where they just came forward with all kinds of creative workarounds, risk management, diversifying our supply chain.
"47 minutes until this market closes, and we are moving between gains and losses on the S&P 500. We're now back down about 0.2%. We had been higher to the tune of a similar amount. This as we see caution creep in to the bond market. Certainly, this yield curve flattening, this fact that we're seeing a buying at the long end, you're seeing selling off in the short-term debt. That's as we see Canada, the Canadians move in terms of their central bank policy. That pushes up yields on the front end of the curve over there. We look also at the UK, which looks like it's curtailing some of its supply into 2022. That pulls down the longer end. It's a global story. It's a global yield curves flattening story as we see gilts off by 12 basis points over there. Commodities, we actually see take a bit of a breather today. Metals, aluminium and the like actually cooling after we see China ramp back up in terms of coal production, and therefore we can see production of aluminium just pick up a little bit. Let's move on and have a look at what's happening with big tech, because that's actually what had been helping the markets drive higher. The NASDAQ, as you'll see, currently up some 0.3%. So your outperformer as we get some of the numbers out of Alphabet and the like doing better than expected. But the Russell 2000, a significant underperformer. Cyclicals, we're worried about this economic growth story. We're also worrying about the metal story as we see that basic metal index off by 3.3%. And as you look at the long end, we're also seeing a 30-year yield at 1.94%. Don't see that too much now. Meanwhile, let's talk about how options are reflecting all of this nervousness. Are we still feeling bullish in equities? Are we just worried in the bond market as usual? Let's have a little look at how the day's options trading is going. Abigail Doolittle, we welcome her back. And let's talk about the ways to hedge this continued rally that we've seen in equities. Are people looking to do it? Are they getting cautious in that respect?
Well, it's sort of interesting, Caroline, because relative to the VIX and the VXN and the RVX is actually above 20, but relative to the VIX, almost at 15. So not a lot of hedging there. But a more nuanced strategy, of course, barbelling relative to having a relatively safe asset on one side and then something riskier on the other side. To talk more about this, let's bring in Arneem Holzer of EAB Investment Group. Great to have you with us, as always, Arneem. And you have some interesting ideas relative to tail risks and barbell portfolios. Talk to us about what your thoughts are right now as a multi-asset and macro PM.
Thanks for having me. First of all, we see it as advantage for two reasons. And number one, I don't think anyone has a perfect crystal ball at understanding exactly how the supply chain issues and inflation is going to play out. We still haven't seen corporations really invest to meet the higher price levels, and we're not even sure about what the budget fiscal plans are going to be. So we think in this environment, we're seeing an increase in the right side and the left side opportunities, and with volatility relatively low, we do see an opportunity to play upside in things like long silver, some of the emerging markets plays, which it might be early, but they're relatively cheap. But at the same time,
weeks ago, everybody was talking about how the fourth quarter it was going to be hedging with the SPY and the QQQs. You're saying that that's still the case if you think that there's some sort of bearish outcome around the macro. Is that true?
I do. And I think if you look at some of the technical factors, one, the VIX curve is still very steep. We think that's telling you that there are real factors out there that could be headwinds. Two, a lot of the safety assets that we follow are actually not really dropping very much. We're flat on the month in a safety asset index that we manage, and the equity market's well up over 6% for the month. If you look at value and growth, even though you think that this was a big growth month, the reality is that the difference in those performances isn't as big as you think. So we think the underlying investors are actually a little bit more cautious. Even though retail call buying has been strong, what we see in terms of the factor performance is not as differentiated towards growth as you would believe. So we do think that left side does make sense to defend here, to hedge.
And very quickly, Arneem, in about 20 seconds or so, in terms of the wide gap between, say, the VIX at just above 15 and the RVX for the small cap index, which has been stuck in a range all year above a 20, what do you make of that?
Well, remember, so much is based on the way the capital markets are looking at the actual the yield curve. And we have a very synthetic action because global growth has really not stolen away demand for treasuries yet. So when you see what happened today with gilts, it has a tendency to give U.S. treasuries a bigger demand than you might fundamentally really rationalize. So we don't think that that's a permanent. We think that the room under the curve is going to increase. That's going to be good for financials, particularly insurance companies who love that room under the curve. And so we would be value-oriented, even though we're somewhat concerned about tech and the growth impact. We would be really looking at insurance companies and financials, but being a little bit more concerned about overall equity performance.
Arneem Holzer of EAB Investment Group, thanks so much, as always, for joining us for Options Insight today. Caroline, back to you.
Yeah, thank you very much indeed, Abigail. And we continue to look at what's happening in terms of, well, the tax negotiations over on Capitol Hill. And at the moment, we know that perhaps the billionaires tax had been sort of taken a step back as it stands. Overall, we're also continuing to see what does indeed make it in. Billionaires tax proposal is out of the Biden plan. We, of course, know that's coming from the Democrat Neal. But now we look to see what actually does indeed make it in. And we understand that the continuation is still not dead, apparently, to the Senate Finance Chairman Wyden is saying the billionaires tax is not dead, him being, of course, one of the key members who had been negotiating it. So maybe, just maybe, that unsold asset that a billionaire holds could still get taxed, Taylor.
We will keep you posted, as we always do. In the meantime, I want to bring you another cool thing that we're doing in Business Flash is really focused on some of the supply chain challenges. Caroline's coming off of an incredible supply chain show last Thursday. She did it with Romaine out in the port of Long Beach. So let's continue that theme. Google, of course, this week saying that it does expect some supply chain challenges as it rolls out the new Pixel 6 series of smartphones. Sales of its parent Alphabet topped estimates, but YouTube and cloud computing divisions, well, they disappointed. Meanwhile, Microsoft's quarterly revenue climbed 22% in its cloud computing business. It beat forecasts, but it's the Xbox business that has been held back by the chip supply chain snags, which it expects to persist into next year. And AMD seeing those supply chain constraints that are weighing on PC shipments continuing into the first half of next year. It gave a stronger forecast indicating market share gains, particularly in servers, despite the tight supply. Sense a theme? We'll continue it. It's our supply chain pain, Caroline, and it continues.
And it continues across sector, across country, and certainly affects you and I. Meanwhile, still ahead, top US General Mark Milley is raising the alarm about a very concerning development in the escalating competition between Washington and Beijing. I mean, that too can't be helpful for a supply chain. We bring you the conversation with David Rubenstein, co-founder of the Carlyle Group and host of Peer to Peer. This is Bloomberg.
So if someone wants a leader, is it better to find a general or an admiral?
That's like asking me to say, who do you love more, your son or your daughter?
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Do you see Deutsche Bank ready to pay more and pay out more in terms of bonuses too for staff to have that strong talent that I'm sure you want?
Well, look, it's a war for talent. It has been, in other cycles before. It is now. We're finding that we're competitive in that war for talent.
The growth story in cannabis remains very strong, even after the sort of loosening of the pandemic. There was a worry that there might be wallet spend competition, but so far the cannabis sector seems to be holding up very strong.
General Mark Milley, Chairman of the Joint Chiefs of Staff, sees China as the most significant geostrategic threat we face as a nation. He sat down with David Rubenstein, co-founder of the Carlyle Group. The David Rubenstein Show, peer-to-peer conversations. Take a listen.
I think it's China, and I've said that publicly many times. I think as we look to the future, and I think we are living in a historical epoch, actually, where we're seeing the rise of a country that is unlike something we've seen probably ever before. And it's one of the great historical pivot points, I think, that we've ever witnessed, which is the rise of China. And from the reforms of 1979 and Deng Xiaoping up till today, which is, I guess that's what, 41, 42 years or so, 4 decades, they've had an incredible economic run. And with that, they've developed a military that's really significant. As we go forward over the next 10, 20, 25 years, there's no question in my mind that the biggest geostrategic challenge to the United States is going to be China. That I have no doubt at all. Russia is important, not unimportant at all. Russia has very significant military capabilities. North Korea, Iran is still there. Terrorists are going to be around for quite a while. But I think China is clearly the most significant geostrategic threat we face.
As we talk today, there have recently been some reports that the Chinese have a hypersonic missile that can theoretically go into space and then come down with a nuclear bomb, escaping our ability to knock it down. Is that something I should be worried about, or all Americans should be worried about?
Well, what you saw, and I don't want to get too much into the classification of what we saw, but what we saw was a very significant event of a test of a hypersonic weapon system. And it is very concerning. I think I saw in some of the newspapers they used the term Sputnik moment. I don't know if it's quite a Sputnik moment, but I think it's very close to that. So it's a very significant technological event that occurred, or test that occurred by the Chinese, and it has all of our attention, and we're paying it. But that's just one weapon system. The Chinese military capabilities are much greater than that. They're expanding rapidly in space, in cyber, and then in the traditional domains of land, sea, and air. And they have gone from a peasant-based infantry army that was very, very large in 1979 to a very capable military that covers all the domains and has global ambitions. So China is very significant on our horizon.
But can I presume that the United States has thought of doing a hypersonic missile as well, and that we are not caught completely flat-footed in our ability to maybe produce something like that ourselves?
We are clearly experimenting and testing and developing technologies to include hypersonics, artificial intelligence, robotics, and a whole wide range. Now, if you take a step back, what we're in history-wise, is we're in one of the most significant changes in what I call the character of war. But today, with the introduction of precision munitions, the ability to see all over the world, artificial intelligence, robotics, hypersonics, all of these things together, this is an enormous change in the character of war, and we're going to have to adjust our military going forward.
General Mark Milley there, Chairman of the Joint Chiefs of Staff, with David Rubenstein, co-founder of Carlyle Group. The David Rubenstein Show, peer-to-peer conversations. Don't miss it, 9 p.m. Eastern tonight. Meanwhile, we take you back to the markets. And what's on the downside at the moment? We are seeing the S&P 500 fall. It had been up about 0.2% when we started the show at about 2 p.m. We're now off by 0.2%. So clearly the mood music changing a little bit. We're being battered around by perhaps what's happening on Capitol Hill as well, Taylor.
Yeah, on Capitol Hill, and dare I bring it back to the bond market, you're now pricing in 2 rate hikes from Federal Reserve as we think that they're announced taper next week. 50 basis points as we climb higher on the 2-year. Bonds on the long end really catching a bid. Maybe this is telling us something. This is Bloomberg.
Hong Kong lost its top spot as Asia's busiest airport in 2020 when passenger traffic slumped 88% from 2019. The lack of a domestic market and strict COVID rules have made for a slow recovery, and walking through the airport, the majority of F&B outlets and shops do remain closed. Here in the departure hall, long stretches still remain boarded up in areas where you would typically see throngs of passengers waiting to board their flights to destinations across the world. Only 2 lounges do remain open to travelers, one operated by the Plaza Premium Group and the other by Cathay Pacific, down from the 12 that are usually open here at the airport.
Unfortunately, when COVID had hit, we had closed a lot of our lounges and airport hospitality services. We're cautiously optimistic with the growth.
COVID certainly has forced a rethink of strategy to be nimble in the face of policy uncertainty during the pandemic era.
When you look at technology, how should we be looking at big banks and technology?
Technology is our friend. So it's helping us transform the bank fundamentally. And in fact, we're speaking, I think, as we speak, to our shareholders around what we've done and how we've transformed the bank. We also see technology and technology companies as partners. So some
not
of our
rivals.
We know that there are big parts of what have been our business historically that will be absorbed into convenience platforms. And by convenience platforms, whether that's Amazon or Facebook or Alibaba or Tencent or something like that, those are platforms that are just very convenient for people to conduct their day-to-day financial affairs. And it'd be very difficult for a bank to compete with that. Now, in some cases, I'd say, let's say in Africa, we are setting up a competing platform to the convenience platforms. And we're working with technology companies and mobile telephony companies and others to create a platform of our own. But for the most part, we're going to be playing on somebody else's platform.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
The most crucial moments in the trading day. This is Bloomberg Markets The Close with Caroline Hyde, Romaine Bostick, and Taylor Briggs.
Counting you down to the close. Less than 30 minutes to go.
And we were looking at record highs, but definitely down to the lows of the session now.
My, what a half an hour makes. We have flipped the script and most sectors now in the red. We have energy, financials, materials leading the way with energy down almost 3% on the day. A little bit of green in consumer stocks, but again, we are risk off.
Yeah, it's really interesting that you talked about the risk off feeling, because sometimes crypto is seen as, is it a safe haven? Is it not? What's so interesting is we're taking a look at shares of Coinbase and then Robinhood, of course, sort of this classic second derivative effect, if you will, given some of the earnings reports that we got out of Robinhood and some concerns about that crypto trading. So those shares are down here now off about 11%. Spotify's another fun one. Look, they said that the advertising business is booming thanks to podcasts. One of these days we'll get a podcast. Take a look at McDonald's too. We've talked a lot about this, right? The higher prices, and I guess we're all buying more of it. Do you do a 10-piece chicken McNugget?
10 pieces? Do they do a plant-based one for you?
Well, I haven't been to McDonald's in a while. I'm more of a Taco Bell girl. You know that.
Yeah. Her allegiances lie with Taco Bell. Meanwhile, we have no allegiances when it comes to crypto, where we feel we're currently falling off of those record highs. Remember, Taylor was just talking us through what's happening with some of the stocks related to crypto. I'm looking at how far we came, of course. We fell by some 50%. In July, we bounced off of those lows. We managed to ramp up once again to hit new record highs just but last week. This was all the mood music surrounding, of course, those futures, Bitcoin futures ETFs that were coming to the market. Now, perhaps some profit taking coming. We're off by about 11%. We're at 58,300 is where we trade on a Bitcoin, Shanali.
Yeah, absolutely, Caroline. And we have a great person to talk about this. It's the vice chairman of the New York Stock Exchange, John Tuttle, where the BITO, the Bro Shares ETF, had listed just over a week ago. John, you know, there was a lot of exuberance with this launch and a lot of volatility in crypto itself. How are investors talking about this asset class and the derivatives of it as more items really come to list?
Well, it's great to be with you. Cryptocurrency certainly has attracted the interest of investors, and particularly over the past week or so, we are proud to launch the first Bitcoin ETF here on the New York Stock Exchange. And it's already setting records. I think there's over close to 1.3 billion of AUM has already been attracted to the product. So a lot of investors are excited, it sounds like, to have that option available to invest in. And a crypto-related project that we seeded, launched, and invested in, backed, just went public last week and seems to have been getting a warm reception from investors as well. So broadly speaking, the market seems to be excited by the fact they have more investment options.
Yeah, it's funny. I just took a look at Bakkt, and that's up more than 21% today, still on the rise, even as we're seeing this market flip. So is this a hedge? Is it not a hedge? Is this the future of finance? What are you thinking?
Well, look, there's going to be more innovation in the capital markets in the next 10 years than there has been in the preceding 20 years. How that shakes out remains to be seen. But what we're excited about is we've tried to be at the front edge of that every single time. So whether it's launching new products on the New York Stock Exchange like the direct listing, the primary direct listing, or launching new companies like Bakkt and others, we're excited to be part of that evolution and that innovation.
Talk to us about market sentiment elsewhere, particularly about these new companies coming to the market. I'm looking at Rent the Runway. If my pricing is right, it's now down by 16% on the day. We're seeing IPOs coming in at being priced at the lower end of the range, as we saw with Informatica. We've had WeWork, Robinhood, for example, still relatively new to the market, getting a bit beaten up after its earnings. Where are we in terms of the desire to get into these newly listed companies?
Well, there continues to be a robust pipeline of companies looking to come to the capital markets. I'm hopeful that investors, whether they be institutional investors or individual investors, are valuing these companies on their fundamentals and their business plans. But that said, we're seeing a lot of activity from across sectors and from across geographies, and we're going to continue to through the end of this year and into 2022. It's going to be led by technology, healthcare, and consumer. And we're going to see companies coming to market not only from the United States, of course, but also from South America, particularly Brazil, parts of Europe, and other parts of Southeast Asia outside of China.
Yeah, why isn't China on that list?
Well, there's obviously discussions going on in Washington and in Beijing with regard to how these companies should be regulated and how policymakers should be thinking about our capital markets. The message from our end is the U.S. capital markets are the deepest pool of liquidity, the broadest investor base, and they're built on confidence. As policymakers and legislators plan our policies and legislation, they need to carefully weigh the difference between investor access and investor protection. Investor access, making sure that individual investors saving for their retirement or their children's education have the opportunity to participate in the market, but also investor protection, making sure that all companies listing in the United States are meeting certain standards around disclosure and governance.
John, with the market flipping as it is, we're still hovering near all-time highs. We had a high yesterday. Is there a sense that you should go public now before things get really choppy later on?
So the conditions for going public have been right for a while now. If you think about it, volatility has been low and relatively stable. Interest rates low and relatively stable. The indexes are flirting with the record highs, which means these companies that are thinking about going public, when they look at their public company comparables, they're trading high. And so what we've seen is a warm reception from investors for most companies that have been coming out in those weeks, months, and quarters following their listing. And so we, again, have a strong pipeline of companies looking to go between now and the end of the year and in that first half of 2022.
So, strong pipeline. I mean, how big are we talking here? Are we going to see the offerings get bigger and bigger? Or are we going to see more kind of, I hate to call it more boring, but the SPAC listings that you just don't see that same kind of, road show and pop on the first day?
Well, it's really going to depend on the company, of course. Some companies are going to have larger offering size. As a general trend, what we've seen over the past few years is that when companies come to market, the offering size continues to increase. What that is as a percentage to their market cap, how much of those companies, from a percentage standpoint, they're floating, is going to be on a company-by-company basis, sector-by-sector basis as well.
We want to John Tuttle thank him, the vice chairman of the New York Stock Exchange. We can see the honking, hear the honking in the background of where you are, but plenty of real market action going on where you are. Thank you for talking us through it. Of course, we're currently counting you down to the closing bell as we speak, and markets sort of rolling over at this time. The S&P 500 on the downside, ran the runway off by more than 15%. Shonali, what do you make of some of the sort of loss of momentum when it comes to the risk taking in the market?
I mean, it's truly amazing. They were positive on the day, and when the market turned, they turned even further. So what started as a perfect day to go public really changed on a dime.
Interesting, though, what we're seeing in the bond markets. I mean, you're now up 6 basis points on the 2-year, so you're at 50 basis points as the market is trying to figure out what we think about a taper announcement that we might get in the coming weeks. You go further out on the long end of the yield curve, you're back down to a 195, below 2% on the 30-year. It is a flattening kind of day. Where is Romain when we talk about the belly of the curve?
Belly of the curve. Hopefully having a nice relax and feeding his belly. This is Bloomberg.
The 700th anniversary of Dante Alighieri's death has triggered the work of many institutions and offered a very rich schedule of events. Today in Santa Croce, we present one of these projects that suffered a difficult start because COVID-19 has stopped the project that was shared by the Opera di Santi Croce by the Franciscan community from Florence Municipality and the Fund for Religious Building of the Internal Minister. Today, Felice Limosani's project is finally enjoyable. In the Pazzi Chapel, the marvelous architecture by Filippo Brunelleschi, the most important images from the Divine Comedy created by the French illustrator Gustave Doré. Through these images we can live the violent emotions of hell, the weight of purgatory and the sublime joy of paradise.
The digital humanities are a cultural occasion to exploit. Summing up, it's about merging humanistic disciplines with new technologies. I find this to be an innovating and modern tool to update culture. Cultural heritage becomes something to hand over to the new generations and not to be put aside, so it's about using technology, pixels, and binary code with a human and humanizing content.
Minutes until this market closes, and big tech not doing quite enough to offset the march lower in the S&P 500, but the Nasdaq remains in the green thanks to Microsoft, Tesla, Google. Some of these companies, of course, that we've seen have strong positive news either about some orders or indeed about some of their earnings. On the downside, Pfizer, one of the worst performers. The Russell 2000, also your worst performer when you're looking at some of the key benchmarks. We're worried about economic growth. You're seeing that in the flattening yield curve. You're seeing that in a sell-off in cyclicals. Industrial metals as well, off by 3.3%. Aluminium on the lower side. We're seeing China ramp up coal production once again. That means maybe we'll get more production in terms of aluminium. Maybe that supply side constraint easing off a little bit. 30-year yield, as we see, down 8 basis points. The moves in the UK, phenomenal. Let's do all of this about risk sentiment in particular with Nancy Davis. She's founder and chief investment officer of Quadratic Capital Management. She also manages the portfolio, of course, of Quadratic's iVol ETF, $3.5 billion in assets. Nancy, talk us through about volatility in this market. Many had been thinking the month end would see a rebalancing. Equities have so outperformed that, particularly since earnings season came upon us about 10 days ago, we see a rebalancing and we see perhaps the selling pressure, the taking of profits. Is that going to lead to more volatility?
Volatility generally across asset classes is pretty low. So I do think there is, when volatility becomes very low, it's almost like a coiled spring. So you could actually see quite a bit of volatility because it's priced very cheaply, and people are expecting growth in equity markets. People are very complacent in bond markets that inflation will prove to be transitory. So yeah, I definitely think when everyone gets calm, usually the opposite happens.
Is that what we're seeing within the bond market as well? You're up 6 basis points on the 2-year, down 9-10 basis points on the 30-year.
Well, the yield curve has been flattening. So we've had actually the biggest global flattening around the world. All yield curves are flattening, and especially in the United States, it's been the biggest forward flattening in the yield curve since the financial crisis, since 2008. So the bond markets are definitely saying, they're either incredibly complacent about inflation or they're expecting a very, very hawkish Federal Reserve. I personally think the rates market is a little bit over-aggressive with their number of hikes. If you look at the 2-year choose 10s forward out, say 3 years. So that's, since Romaine's here, we have to talk about the belly. So the 3-year forward choose 10s curve is the belly. And the belly is 20 basis points right now. So the difference between the 2-year and the 10-year, if the Fed hikes 5 times, the market is telling you the 10-year will only move 20 basis points. I think that's pretty crazy.
Well, Nancy, you mentioned also, and everyone's been watching, that this has been a global phenomenon, this global flattening. So is this a relative value question when it comes to trading?
Definitely everything is relative value. It's a global economy, capital flows around the world. So I think generally what markets are saying is markets are de-risking right now into equities and going into long-dated duration and considering it a safe haven. The question is, if there is actually inflation that's not transitory and it sticks around, that group of investors could be really surprised because markets are quite complacent with long-dated interest rates so incredibly low.
Nancy, we're about to go to break. What is the doll on the next to your table right now?
Oh, that's from Game of Thrones. That's a Daenerys on her dragon. So yes, this is me supposedly.
Amazing, amazing. We love that sort of insight. Nancy's going to be sticking with us as we march towards this market close. Nancy Davis of Quadratic Capital Management. Game of Thrones, clearly a fan. Meanwhile, we've got a dueling going on in the markets because the S&P 500 underwater by 0.25%. Big tech on the higher side, but it is all about bonds, Taylor.
It is all about bonds. It is the flattening of the yield curve that is underway. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, You can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Проходим опасный участок, ответственный. Там поднимаете на жумаре, шерпа страхует.
Очень много думал о том, что я сделал, и понял, что сделал какую-то нереальную вещь. Не знаю. Я до конца внутри себя даже не могу поверить, что я через это прошел. Состояние, наверное, организм истощен, потому что очень много физической работы. Своим этим поступком я хотел сказать, что только через действие в этой жизни достичь можно абсолютно всего.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
So Fauci and his team shared data about mixing vaccines. The vaccines can be mixed safely, and that's very good for people who got not Moderna vaccine, but want the Moderna vaccine for a booster because it's of a higher dose.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Countdown to the Close. I'm Caroline Hyde.
I'm Taylor Riggs. And I'm Sonali Basak. Romain Bostic is off today.
Meanwhile, he misses a NASDAQ 100 that hit a record earlier in trading. In fact, we basically topped out on the market as this show went to air. 2 p.m. We see the NASDAQ 100 hit that high. Of course, Microsoft, Google, Tesla, Amazon, all doing very well on the higher side. What takes us lower? Well, in the tech space, it's the likes of PayPal, it's the likes of Fiserv. But interestingly, the Russell 2000, this worry about economic growth that we see in the bond market is playing out in cyclicals today, Taylor.
And you're seeing it a little bit within the tech markets as well, coming off of big earnings yesterday. It's the relative outperformers. You see here the NASDAQ 100 up about 0.4%, but that is well off the highs of the session as everything is sort of rolled over. So in the last hour, you've seen, of course, the 30-year yield. I mean, we're all now below 2% across the curve as we continue to keep our eyes on a flattening that is hurting the financials today, as they are one of the worst performers on the day. Let's still do this with Nancy Davis, founder and CIO of Quadratic Capital Management and portfolio manager for Quadratic's IVOL ETF. So, Nancy, we've talked a lot about, well, the volatility that's continued. What do you do then in times like these?
It's all about diversification. I think investors really need to be thinking about how they can add different things to diversify away from, not having the portfolio all be correlated with each other all at the same time. And so I think many investors are looking for non-correlated assets, looking at other asset classes. I think that's one of the reasons IVOL has been popular with investors, especially this year, is it's at least historically had very low correlations to common asset classes.
Well, speaking of correlation here, I mean, do you think investors are right to be flocking to safety as much as they are?
Well, I don't think government bonds are safe. I guess that's a big, if we have inflation, owning, to your point, the 30-year, because it's rallying so much, could be quite risky because it is very, very long duration. So it's very sensitive to changes in interest rates. If interest rates continue to go lower, owning long-dated bonds will be great, but it's really a question of where interest rates are going to be in the future.
Okay, what are you feeling you were great when you were talking about what the bond market is currently factoring in here, and that it would only move some 20 basis points if we saw, 5 rate hikes by the Fed. What do you think the market is missing when it comes to interest rate pressure, when it comes to inflationary pressure?
So this huge flattening that we've had in the forward yield curve has really been hit on both sides. So we've had long dated yields. Think about, when we started Q2, the 10-year was around 174, 175. We've had 5 CPI prints in the 5 handle since then, and 10-year yields are lower. At the same time, you have a huge amount of hikes that have been priced in the front curve. So it's kind of like a seesaw when you have long-dated yields lower and short-dated yields move higher because of the anticipation of Fed hikes. That's where the forward flattening has come in. I think it's personally pretty overdone because I can't really see an environment where the Fed hikes more than 5 times before the end of 2023. Plus tapers, plus we're going into midterms in 22.
We want to dig a little bit deeper into all these market actions. Some great thoughts coming from Nancy, of course, when it comes to what the market factors in terms of tapering, in terms of rate hikes. What's the market factoring in right here, right now, in terms of stock moves and earnings, Taylor?
Let's take a look at it. One of those that we are looking at closely after bell are shares of Ford. We're going to be interested to hear what Ford has to say, given that we heard from GM this morning and, of course, highlighting some of those supply chain issues that we still see well into 2022. So it shares of Ford, of course, that are also falling in sympathy. You're down a little bit more than 2%. Look at auto revenue, $32.4 billion, and adjusted EPS of 27 cents. Those will be the numbers that we are looking at. Let's change up the board. And Nancy, let me bring you back in here because we're talking about those inflationary concerns and the impact on growth. I'm taking a look at 5-year break-evens. We have data going back to 2000, and this is the highest that, frankly, we have ever seen. You're now looking at a 5-year break-even of about 2.9%. Do you believe that first of all, that these numbers are accurate? And if so, is that inflationary environment going to start to impact the economy?
It's a really good point. Break-evens have moved up quite a bit. And just to decompose what is a break-even, it's a difference between treasuries with inflation protection and regular treasury bonds. So it's a measure of CPI inflation. And I think it's really key to point out that break-evens are just CPI inflation. CPI is just one index. It's almost like if you talk about, the Russell or the Dow Jones or the S&P, it's the consumer price index. And the index is composed of a huge component of owner-occupied rent. And the combination of higher rent and higher energy prices, I think, is what has driven CPI much higher. But if you look at the term premium, the yield curve, which is largely a result of investors' expectations for inflation in the future, it's telling a very different story. The yield curve just has experienced the biggest forward flattening since the financial crisis. The rates market is not saying that there's going to be a lot of inflation in the future. People are definitely in the camp of inflation is transitory.
Nancy, when we say anything is the worst since the financial crisis, it's always a little scary. So, when do we start to reverse course a little bit here?
Well, I think it's a question of, if the Fed tapers more, likely those hikes will come out of the curve because I think everybody's sort of waiting for the taper to start. So I do think if we had an equity pullback, that would likely steepen the curve because the Fed rate hikes, 5 of them have been priced in before 23. And that seems like a lot to me, especially with the taper and midterms. And, 5 hikes is quite a bit. I don't think the Fed's going to hike more than 5 times, said another way.
You think? Nancy, one area you think is interesting to play right now in 30 seconds.
I do think the rates market is really interesting, especially that difference between short and long dated rates at term premium, because the rates market has really discounted future inflation. The rates market is saying inflation is going to be transitory, and I always think it's a good opportunity to buy things when they're low, when they're not priced high. And that's one market that's not priced high.
Finding relative value, Nancy Davis and her awesome Game of Thrones doll to her side. We thank you, founder and CIO of Quadratic Capital Management and portfolio manager for Quadratic's IVOL ETF. Love a bit of straight talking. Meanwhile, we look straight at this market and we do see worries being factored in by the bond market. We do see significant un-unch kind of day, Taylor.
I know, it's my kind of day. What's interesting is technology is even now struggling to hold on to the gains. The NASDAQ is mostly unch on the day. So despite the lower bond yields that we were seeing, not giving that boost, Shanali, that we'd previously seen to the tech sector.
Yeah, absolutely. And so much for that Bitcoin hedge, right? That's also down on the day as well. And to Nancy Davis's point, why buy bonds?
Meanwhile, we move closer to the closing bell in the equities and bonds. We're going to move to the bell and beyond. Stick with us for the coverage right here.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
About 2 minutes away from the end of the trading day. Caroline Hyde, Taylor Riggs, Shanali Bassett counting you down to the closing bell. To take us beyond that bell with our global simulcast, Carol Massa, Tim Stenovic, bringing together our Bloomberg TV, radio and YouTube audiences. And we take them through what has been a pretty volatile day. We are moving towards, well, really risk aversion towards the end of trade, Carol, whether you see it initially in the bond market and spilling into the equity market.
Yeah, look at what's happened in the last hour or so. We have hit lows when it comes to the equity markets, really taking a leg down in just the last few minutes of trading. Talking with our Vince Signorella, who is on our global macro squawk desk, saying maybe there's some trepidation, about the GDP report tomorrow. Maybe a downside miss could be something that markets aren't ready for. Maybe it's that, but it's really pretty dramatic, Tim.
Yeah, and early in the day, it was very earnings driven. And may I remind you that we are not even close to being done with earnings season yet. We got Apple and Amazon tomorrow, and today we have Ford, Twilio, eBay, and more just after the bell.
And I think as we talk about earnings, Tim, another driver that we saw that was interesting was the 5-year bond auction that was very strong after yesterday's 2-year bond auction. That's when you saw 2-year yields really now climb up to about 50 basis points. And this was the highest yielding 5s that we had going back throughout the entire pandemic. So this gives us a pretty good indication of where people think yields are going to be if we ever get the taper announcement, Shanali, from the Federal Reserve.
Yeah, I have to hand it to you, Taylor. A lot of the story today was about that global flattening of the yield curve, those 30 years that flocked to safety. And, you know, that jarring move in the S&P separately was really noticeable and sent a lot of stocks a lot lower.
It's a global story. Remember what happened over in the UK? We saw significant moves in UK gilts on the back of perhaps less supply next year. We saw the Canadian policy response coming in and pushing up the yield curve on the front end as they look towards perhaps a dialing back of their support. We look at the S&P 500 and the ringing of the bell, down by 22 points, down by 0.5%, the lows of the day. So clearly, suddenly the mood music ramped lower in the last hour of trade, and we closed down at 4,551, spot 68. So that's a 23-point move. The Dow also underwater by 0.7%, 265 points lower, 35,491. The Nasdaq just clings to gains. We're basically up less than a point, 15,235. So not even Tesla, Microsoft, Google could help in that respect. And small caps were your underperformer of the day. Let's just zoom out and see where Russell 2000 was at, down by 1.9%, Carol.
Yeah, straight line down. Just taking a look at the broader market, the S&P 500, most names in that average today ended in the red. 422 names to be exact, down 82 higher, 1 unchanged. So no doubt about it, Taylor, we saw a lot more red here, certainly at the close.
Well, and you're right that not only a lot of the names, but a lot of the sectors in the red as well. Take a look at our sector index that we do for our radio audience every day. It's the sector winners, it's the sector losers, and unfortunately within the winners, half those are actually losers. Those are all still in the red. Let me take you through a few of the gainers that we have. It's media and it's autos. How much of this can continue to be? I know we were talking about Hertz and Tesla, even though some of the autos like GM, as we await Ford as well, a little bit lower on the day given the chip shortage. Let's migrate down to that bottom of the screen. This is interesting. It's banks and it is energy. And dare I say it, more of that flattening of the yield curve, Carol, which does not bode well for the financials and maybe concerns about those global growth concerns. It hits energy.
Yeah, really good point. Let's get to, though, there were some gainers. McDonald's among them, up 2.7% by the close today, jumping. Food and consumer goods companies, we saw it. They were able to pass price increases through. We saw it with Coca-Cola. We saw it with McDonald's. And that stock also boosting comparable sales, almost 10% above Wall Street expectations. Want to mention Enphase. Oh, my God, up almost 25% in today's session. Top in the S&P 500, sending its solar peers higher as well after Enphase's sunny third quarter sales and fourth quarter sales forecast topping estimates. See what I did there? And got to talk about an IPO. Rent the Runway. It actually was higher. I know.
Busted.
Don't tell Romaine.
Busted.
We will tell Romaine.
It was up 18% going into the show. I was busy in my show, so I couldn't update it. It ended up down 9%, but it upsized its IPO price, shares at the top of a marketed range. I want to see how it trades tomorrow.
Wow, volatile day for Rent the Runway. Hey, let's talk Robinhood because it closed down 10% below its July IPO price. Third quarter revenue, we learned from the company yesterday, it came in short of expectations. Cryptocurrency transactions, the big story, though, plunging from the previous quarter. Comments from the company's CFO, Jason Warnock, did not help, saying that we don't expect our growth to be linear. We think it's going to ebb and flow. We're going to depend on market volatility and market conditions. I want to talk Twitter, too. Shares finishing the day down more than 10%. Another earnings story. It's the second worst performer in the S&P 500 today. The biggest drop in 6 months, down for 6 days in a row. Third quarter revenue and fourth quarter sales outlook fell short of Wall Street estimates. Price targets were lowered at Evercore ISI, Jefferies, and JP Morgan. Finally, GM, General Motors, finishing the day down 5.4%. Adjusted earnings came in above estimates. Full year guidance saying that come in at the high end of the forecast, but it's about chips. Shares erased gains after the company indicated a chip shortfall has curbed production, Caroline, for months and won't end anytime soon. Mary Barra, the company's CEO, telling our colleague David Weston, quote, it's going to linger into next year. And right now our feeling is that we'll be in a much better shape in the second half of 2022.
We're going to talk supply chain issues, eBay coming out after the bell as well, and they're perhaps a company that's going to benefit from it all. But I'm looking across asset right now, and looking commodities seem to be a bit of a sea of red. Actually, oil taking a tumble off by 3%, down at $82 is where we trade for WTI crude. But we saw metals also take a leg lower. This on the back of China, whether or not we see them ramp back up coal production in the face, of course, of their focus on slightly cleaner energy production. But they ramp up coal, that means aluminium might be able to be produced a little bit faster. So we saw metals just down on a supply side kind of issue here. Also, we look at oil as we look towards UK and Iran once again opening talks. Could we see supply side come back on tap a little bit? So pressure in commodity space. Flip it over to what's happening in your FX space. And we had a story of, well, Canada, a hawkish surprise. The loonie, the Canadian dollar doing well. That's as their short-end yields also pushed up higher. Swedish krona also advancing that somewhat. And interesting that what we heard out of the UK, which really saw phenomenal moves in bond markets worldwide. Look at what happened to UK debt. We saw yields screech lower in United Kingdom, 30-year, look, off by 18 basis points as they say we're going to be issuing less debt from a government perspective next year.
Yeah, 5 seconds before we're awaiting some big earnings to cross the bell. In the meantime, it is a yield curve flattening. Of course, that's what we are getting with yields coming up 6 basis points, 5 basis points on the 2-year, and really coming down to a 153 on the 10-year. Carol, down to a 194 down on the 30-year. You're down 9 basis points on the day.
All right, let's get to it. Ford out with their earnings right now after the close here. Stock still unchanged here, but raising its 2021 year guidance, says financial flexibility enables the company. Waiting for some numbers here to cross the Bloomberg. Stock now just up about 0.7%, but raising its guidance. I mean, one of the big issues, and this is coming off of General Motors, obviously it's chips, their ability to access chips. Computers are so crucial, of course, to cars today. So whether or not that kind of slow down their production, and also the pivot to electric vehicles, Caroline, that becomes a big thing. The stock now up about 1% in the after hours.
Meanwhile, we look to eBay, of course, a company that might well do rather well in supply chain pain as we try to find furniture that we can't find new. We go onto eBay to try and source instead, and perhaps some of the price points go higher. We're currently up just 0.1% after hours. They're talking about third quarter net revenue coming in at $2.5 billion, basically in line with where the market had expected. Gross merchandise volume coming in stronger,
19.5 billion. Now, this after they had, perhaps the headwinds that we were all going back out, wanting to travel, wanting to experience services rather than buying once again. We do see an adjusted earnings per share coming in ahead of expectations at 90 cents on continued operations. Active buyers, slightly shy of where had been hoped, 154 million. The market wanted 166 million. But they do also see the fourth quarter adjusted earnings per share going in at 97 to $1.01. The estimate from a 99 cents. Basically, they're coming in line, and the market have priced it in, Taylor. And Carol, I know that you're continuing to look at forward, increasing the guidance for the full year now, adjusted EBIT between $10.5 billion and $11.5 billion, and reinstating a resumption of that stock dividend, of course, that we knew that we were following.
Well, and Ford was expected to come in better than General Motors, and check it out, because it is up more than 4% in the after hours. As you said, Taylor, right to the important stuff, boosting its year outlook. Third quarter adjusted EPS of 51 cents a share, a mega outperformance. 27 cents was what the street was looking for, announcing the resumption of its stock dividend in the fourth quarter. And what's interesting, raising its year, as we said, 2021 guidance. But this is a stock that has been on a tear. It's up almost 80% this year. And nonetheless, investors very enthusiastic here in the after hours, Tim.
President and CEO Jim Farley saying, quote, "This is the most exciting Ford lineup I've seen, but what matters is that customers love our new products and services, and we are just getting started. The trajectory of our business gives us huge confidence in Ford Plus, and we are obsessively turning the plan's promise into reality." Shonali.
Yeah, absolutely. A lot of trends we're seeing in this earnings season. You have eBay touting its advertising portfolio, its expanded advertising portfolio. We've been talking about it all week with the big tech giants, working on promoted listings. Again, they're down a little bit in aftermarket. They were a little light on some metrics, though, beating on net revenue. To Caroline's point, priced in. But, we'll see how this continues on tomorrow. It is a risk-off day.
This is a company, remember, that's also doing pretty well on trading of, well, whether or not it wants to get into crypto, but certainly trading cards, the way that all collectible items, they've been doing well in sneakers, in cards. They introduced price guide and collection for trading cards, new features designed to provide, those enthusiasts that they really want to lock in, being able to track the value of their card portfolios. Apparently, they've got, to date, close to 4 million cards have been purchased on and off eBay, and they've seen in terms of customer collection. So this is a real area of growth for them. So too is some of the technology that you were just saying, authenticity being a key part of that, also managing payments and managing their advertising. Yeah, a smaller sort of tech company that we've been following is Twilio. The horse race of earnings comes out, but we do want to bring you a change at the top of management. The COO, Chief Operating Officer, George Hu, is set to resign. They have named a new COO. Chip Handler, Cosima Chip Chandler will be the new COO as we take a look again at what looks like an improvement on the third quarter earnings, an improvement on the forward guidance with fourth quarter earnings as we see sort of the big tech beat and a raise trickle down into smaller tech.
All right, so we've got that stock, Twilio, up almost 4%. We've got eBay down about 3.6% and Ford rallying up about 5%. I'm going through the press release. Here's some more of the headlines. The company saying semiconductor availability remains a challenge, talking about maybe concerns, external ambiguities for 2022 could include the interplay between semiconductor-related constraints in vehicle volumes and pricing, which are expected to remain dynamic, likely inflationary effects on direct and indirect costs, including for materials and freight. For example, commodity costs are expected to be up $3 billion to $3.5 billion for the full year 2021, could increase another $1.5 billion in 2022, Tim.
Hey, I wonder if analysts and investors will ask any questions about the big Hertz Tesla news that we got earlier this week. Are they going to be saying, hey, what are you doing at Ford to make sure that you're continuing to provide fleets for rental car companies when Tesla really reached a more than $1 trillion valuation on that news earlier this week, Caroline?
I'm just thinking, of course, who's at the helm of Hertz right now? Interim CEO, but Mark Fields used to be over there at Ford, and I'm sure he'd probably want to maybe take a bit more business towards his old employer. But at the moment, we do have some key winners and laggards. We're going to be digging in much more to the Ford story. eBay currently sliding some 4% after the sales forecasted lag some estimates, guys.
Yep, eBay down. We've got Twilio down a little bit, and we've got Ford definitely rallying big time in the after hours. That's going to do it for our comprehensive market coverage, our cross-platform coverage on radio, TV, and on YouTube. We'll catch you again, same time, same place, tomorrow.
More markets coverage coming up right here. We're going to be breaking down all those earnings for you, getting expert analysis on eBay, on Ford. You don't want to miss it. That's the Bloomberg.
is a gigantic part of our economic life and will be for a long time, for our lifetimes. But that does not mean that we should be naive in the way that we look at our critical national infrastructure, the way we look at, you mentioned nuclear power, you mentioned 5G technology. Those are all legitimate concerns that any government, many other governments around the world have. But I've said this many times, it's worth repeating. I am no Sinophobe, very far from it. I think.
Do you think you're the last Sinophile in the cabinet?
No, I expect there are lots of. Look, China is a great country and civilization.
What about wind power? Would you let them buy offshore wind power? That's infrastructure.
I think you'd have to
railways.
You'd have to look at. You'd have to look at what was you're defining as strategic or critical.
Monday on Bloomberg Television and Radio.
We are on the verge of a disaster.
Join us live from Glasgow for coverage of the COP26 Climate Change Conference.
People are beginning to build some momentum, I think. The question is, will it be enough?
We'll speak with global leaders, keep you up to date on progress and setbacks, and analyze what it all means to you.
We're going to need to see some real action.
COP26, the UN Climate Change Conference. Special coverage on Bloomberg Television and Radio.
Into eBay, because it looks as though their third quarter active buyers falling slightly shy of where the market had wanted it. The market wanted to see 166 million active buyers, and they come in with 154 million. Basically, their third quarter revenue came in line, but it's their forward-looking revenue of 257 billion to 2.62 billion was also shy of expectations, and the adjusted earnings per share perhaps coming in with a lower band where the expectation had been. What does this signal in terms of the growth there of the business? Poonam Gaur's with us, senior US retail analyst for Bloomberg Intelligence. It's worth remembering shares are down after hours, but they've rallied hard this year. But are now people worrying about the continued growth in e-commerce as we all get out there and start to have experiences again?
No, I don't think it's really that. I think it's more on the active buyer spend front. As you mentioned, active buyers were down versus consensus, but that's a strategy that eBay has intentionally put in place as they want to raise the quality of buyers that they have. So the focus for us is really the spend per buyer. So if we just look at the trend at the start of the year, it was about $142 per buyer, and it's dropped to $126. So that's our question heading into the earnings call is, what do we see from here onwards? Can we raise that again? What will it take to raise the spend per buyer as they intentionally lose buyers because they're focusing on more strategic buyers?
You also talk about going forward, coming up, fourth quarter comps are always difficult, but this looks even lighter than what analysts were looking for. Explain the fourth quarter seasonality.
Yeah, the fourth quarter, the comps are definitely weaker than what everyone had expected. But keep in mind that last year, sales grew 30% in the fourth quarter. That was the highest increase in the year. So they are up against tougher comparisons. In terms of, the growth being down, what other companies may be reporting, it's a different issue for eBay because they don't have as much of a supply chain issue because it is a second-hand marketplace. So therefore, inventory already exists, right? It just has to be put on the platform. So I think the issues maybe a little different, and we'll have to dig in at the call to see what they say about why the growth is lighter than what we would have expected.
Is eBay selling a story that's believable when it comes to regaining any potentially lost market share here, or is that trajectory what's concerning investors?
No, I think they're doing everything right. They're moving in the right direction. They have a new team put into place. Since December, they've launched a new CEO, a CFO, as well as a people's officer. They've added authentication. They've finished the managed payments transition. And they're really investing more in promoted listings, which I think is key here. So promoted listings were almost free to the seller, but now with every click, they're going to get paid. And it's in test mode right now. But I think, as it progresses and drives better revenues, the take rate will jump from where it is today.
Really appreciate the quick, swift insight analysis. Poonam Goyal, senior U.S. retail analyst for Bloomberg Intelligence. We also have to get back to Ford. I know that we're going to do a lot of this on What Did You Miss? Big company, of course, here. And some of the key headlines, third quarter bottom line, adjusted EPS of 51 cents a share. Estimates were 27 cents. And boosting that full year outlook as they take a look at a resumption of a stock dividend. Third quarter automotive revenue that blows it out of the water, $33.2 billion. Versus estimates of $31.56 billion. Let's do all of this and more with Bloomberg's Gabby Coppola. And a headline as well that not only selling the current inventory, but a chip shortage. Does it look like it's easing?
I think that Farley, seems a lot more bullish on chips than I would say Mary Barra was on the GM call this morning. And we kind of knew that going in that, Ford felt like they had kind of been over the worst of it. They took it earlier in the year. They had a hard time with the factory chip fire in Japan. But now they seem to be in a better position with chips, which means they can fully take advantage of the kind of demand environment that we're seeing now, which is where there's not enough cars. There's tons of demand. So car prices are very high and demand is very strong, and the automakers are making great money on the trucks and SUVs that they're selling. They don't have to, spend a lot of money on incentives and discounts to lure consumers. Consumers are kind of clamoring for these cars.
They're clamoring for them. They're also clamoring for electric vehicles, Gabby. And how much are we likely to see sort of the pressure on getting something to market somewhat faster, particularly over the news of Tesla and Hertz this week?
I think they are definitely have been feeling the pressure. I think ever since Tesla's market cap started to balloon, Detroit realized they better get serious about electric vehicles, and they're doing that. I mean, Ford's already got the electric Ford Mustang out on the market. There also have been talked a lot about the Ford Lightning, which is an electric version of the Ford F-150. So they've got the product. The issue, again, comes down to chips. If they can get the chips, they can make the cars. And CEO Jim Farley just mentioned that in Ford's earnings release. He said, we've got demand and, we're well positioned for chips. He likes to use this phrase, spring loaded. We got it. We're ready. He sounds like a man who's got his chips and he's feeling a little bit bullish. But I don't want to overstate it. I mean, this crisis is not over. Everyone I talk to sees it dragging on into 2022. But it does come down to if you've got chips, you can gain market share. And that is an advantage for Ford right now, it seems.
Exactly what Mary Barra was talking about, sort of how long this could last a little bit earlier with David Weston. Gabby Coppola, always great to have her expertise on these things. Meanwhile, we're going to dig deeper into Ford, into GM. The results with Brian Johnson, Barclays analyst, in a moment. But now we take you outside the world of business for a moment. The First Word News is with Mark Crumpton.
Caroline, thank you. House Ways and Means Committee Chairman Richard Neal says the proposal to tax the unrealized gains of billionaires' assets is now out of President Biden's economic agenda. Chairman Neal's comments came after Democratic Senator Joe Manchin earlier said he's not yet on board with the proposed billionaire income tax and instead is offering his own proposal to expand a minimum tax on top-earning households. Republicans were sharply critical of Attorney General Merrick Garland today during a hearing on matters ranging from asking the FBI to help address violent threats against local school officials to how the Justice Department is responding to terrorist dangers and border security. Senate Judiciary Committee Chairman, Iowa Republican Chuck Grassley accused Attorney General Garland of criticizing politicizing the department, saying, quote, "It looks like the Department of Justice is running you." Former Citigroup Vice Chairman Ray McGuire is calling out banks for lack of representation for women and minorities. McGuire, who ran for mayor here in New York City earlier this year, spoke with my colleague Shonali Basak at the Bloomberg Equality Summit.
Look at the representation, the demographic, racial, gender representation in the financial services industry writ large. It still has enormous work to do. The private sector has to get involved. Private sector can't sit on the sideline. Acquiescence and complicitness is not acceptable in a world where we're facing two existential crises, climate and wealth gap. And the private sector cannot abdicate its responsibility.
And one proposal that was floated at the Bloomberg Equality Summit, compensation and incentives could be tied to diversity goals. New Mexico authorities are asking the FBI to analyze the bullet fired by actor Alec Baldwin that killed a cinematographer on the set of his film last week and wounded the director. At a press conference today, Santa Fe County Sheriff Adon Mendoza said the projectile was one of 600 pieces of evidence collected.
Well, obviously, I think the industry has had a record recently of being safe. I think there was some complacency on this set, and I think there are some safety issues that need to be addressed by the industry and possibly by the state of New Mexico, but I'll leave that up to the industry and the state to determine what those need to be.
The production of Rust has been beset by workplace disputes from the start in early October. Hours before the shooting, several camera crew members walked off the set amid discord over working conditions, including safety procedures. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Bloomberg Surveillance to learn how to look at markets, how to look at trends, and how to look younger.
What do you think, John? Botox, or do I really need to get something done?
I think, Tom, if we just change the style up a little bit.
You think so?
Yeah,
you
drop
great.
The bow tie. Drop the bow tie.
What, skinny tie?
Yeah. I always say, this is my line, whenever anyone in America has to go at me about a skinny tie, the older you get, the wider it gets.
Oh, really?
Until it becomes a bow tie.
This is a bow tie.
Until it becomes so fat, you just sort of...
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Let's take a look at shares of Robinhood, and we're so lucky that we got Sonali Bostic on set with us to talk about this, as she really has been all week, because Robinhood, it did plunge today. Take a look at this. You're down 9%. This is about 24 hours ago. They'd missed expectations on that third quarter earnings report. It was sort of a big blow by both the company, and then, of course, we found out today Cathie Wood, and she's been into this stock, and then she bought over, $32 million ahead of yesterday's earnings. Sonali, you've been following Cathie Wood, crypto, big tech, ARK, you name it. What did you make of this?
Yeah, so interesting. We know that Cathie Wood, through a pair of ETFs, had bought, but $32 million is not a whole lot of money. The big issue is that she bought before that almost 10% plunge. The question is, how long does she hold from here? I want to also point out that in those ETFs, there are some other major names. So Coinbase, for example, is a big part of some of these funds that she bought also Robinhood with. Square is actually 10%, according to Bloomberg data, of the ARK's fintech ETF. ETF. And remember, Square also took a big hit today because of that Dow Jones report that we saw with Visa as well. So a couple of big names converging with similar issues, though Robinhood is certainly a story after such a massive plunge from its $70 a share high in August.
Talk to us about the longer term perspective here, though, because that is what Cathie Wood has, sort of a long term focus on where the real wins will be. And she's always been very transparent about the day-to-day moves on what is underlying her ETFs. Robinhood, does it inherently bounce back? What's some of the analysis coming out today?
You know, one interesting kind of statistic is that Dogecoin comprised more than 62% of the firm's second quarter transaction revenue in crypto.
60%.
It's amazing how much Dogecoin was. And now consumers are asking for Shiba Inu coins. And Robinhood is saying that they need to be careful. They need to think about safety. They need to think about regulations. So as Robinhood starts to rein it in, how does it keep on offering what its young customers want? And of course, there's that payment for order flow issue, which is just a big overhang over the entire company.
Yeah, fascinating. We love talking. Do we still have more time? I think we have to go, unfortunately, there. Sonali, we love having you with us. And stay with us, because it's not only going to be Robinhood and reining in some of the excesses there, but you want to talk about excesses or the lack thereof, Caroline. It might be in the chip shortage. What do you mean?
Yeah, I mean, and we're going to be digging into this as we go from Bloomberg Markets to close coverage. We're going to dig into what you missed coming up next. And Ford, GM, all of this is basically dictated by the global chip shortage, whether they can move into EVs quickly enough, whether or not they can be competing with the likes of Tesla, whether or not they can be pumping out the actual cars that they want to make at the moment. Brian Johnson's with us, of course, of Barclays. He's going to be digging into both those earnings.
Yeah, Professor Willie Shih of Harvard Business School as well joining us. The divergence continues between Ford and GM and, well, maybe Tesla. This is Bloomberg.
The past 18 months have reminded us how essential the PC is to work, life, learning, and connecting. And with Windows 11, we have renewed sense of the role Windows plays in the world. It offers personal agency and real choice to users.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
In the fourth quarter were dramatically impacted by the Delta variant. And while bookings bottomed out and we're clearly on the road to recovery now, a lot of the fourth quarter was impacted in business offices that were going to open in September. That's been pushed back to January.
From Bloomberg's World Headquarters in New York, I'm Caroline Hyde.
I'm Taylor Riggs.
And I'm Sonali Basak. Romaine Bostick is out today.
And what's he missing? Well, the earnings that keep on coming. We had eBay and, of course, we had Ford. And the earnings parade continues after hours. The automaker Ford is where we really want to focus in on because it shares rising in late trading after reporting earnings that beat estimates, boosting its forecast, even though it still continues to point out, well, the issue of availability for semiconductors. It remains a challenge. But that shortages, apparently, for Ford are easing. Their numbers come on the same day where GM said said it expects the shortage to last actually until the next year. In fact, that weighed on GM's shares. We're going to dig into the supply chain effect in autos. Taylor, we start with the earnings from Ford and actually pretty upbeat.
Yeah, really interesting, Caroline. Let's first start by recapping the third quarter here. Of course, automotive revenue, $33.2 billion ahead of estimates. Third quarter adjusted EPS, 51 cents a share, well ahead of estimates. And of course, boosting that full year outlook where full year adjusted EBITDA was now $10.5 to $11.5 billion. Earlier, it was as low as $9 billion. So really seeing some positivity. Of course, the semiconductor availability does remain a challenge, but this is a company that has the inventory and as much control as they can. Though, of course, we're also just getting these headlines that Ford saying the chip shortage could extend into 2023. So how does this company continue to navigate all of these issues? Why don't we ask the expert, Barclays analyst Brian Johnson. Brian, what do you make of the chip shortage and how Ford is able to navigate it?
You know, it's obviously a pressure across the global industry. I think the key thing to keep in mind in terms of today's results is Ford was frankly more hit in second quarter. It was particularly exposed to the Renesas plant in Japan that had a fire. GM was more exposed this quarter with Malaysia finishing plants being down. So I would almost, for the two OEMs, even though we like both of them, put the two quarters together. And Ford definitely came out of its trough on chip production. But I think both of them would share the view commonly held in the industry that it's going to be tight chips and frankly tight supply chains well into 22, if not 23.
What levers does Ford have to weather this storm, perhaps a little better than some of its peers, especially as it goes through this very challenging transition into electric?
Well, the key one it has, of course, is pricing power. It's got the newest pickup truck in the market, the F-150. It looked like it lost a little bit share earlier in the year because of its supply constraints, but likely come back strong. Has a strong product lineup with the new Bronco, the new Bronco Sport, the Maverick coming up. So really, before you even get to EVs, it's got a strong product cadence of differentiated product that, combined with tight inventories industry-wide, it can really move the needle on price.
And it's lucky that it can, because I'm looking at a headline saying that Ford sees its commodity costs up $3 to $3.5 billion in 2021, $1.5 billion in 2022. Those sorts of issues, we see it with the metals, what's happening in the supply chain with China into what they use to fabricate these cars. It's not just chips, it's across the board. Those sorts of increases in costs, you think they can fully pass on?
As long as the chip supply and other supplies remain tight, they can pass it on. Now, there is an issue for the industry that if commodities stay elevated, but there's enough chips and metals to make the vehicles, could pricing come down in the showrooms? And that's where I get back to the idea of brand differentiation and differentiated product, because if you're one of 14 lookalike over utility vehicles, it's going to be hard to hold on the pricing that has it. I would support the idea of transitory inflation. But if you talk about an iconic truck like the Bronco or the F-150, there's only two other pickup truck makers. All of them want pricing. It's going to be easier to hold on those price gains, even as commodities remain high.
As commodities remain high, supply chains remain clogged up. I mean, as we said, the chip shortage is like to extend into 2023, so says Ford. GM, Mary Barra was on a little bit earlier with our own David Weston talking about, well, how they're managing all these supply constraints. Just have a quick listen, John.
We've seen recovery from the impact in Q3 from some of our supply base that caused a little bit deeper impact. So I'm optimistic that we are through the worst of it. We've shared our safety protocols with our supply base around the world. So that's what gives me confidence that we're going to see a stronger Q4 and then a stronger Q1. And even as we get to the second half of next year, continued improvement.
Brian, you look at Ford, you look at GM as well. Did you make positive from what you heard from Mary Barra earlier?
I think it's very consistent with the caution that the chip shortages could linger well into next year. And We just don't know the unknown unknowns of other supply chain constraints. We flagged magnesium and hence aluminum coming out of China. We now think it's going to affect Europe much more than North America. But Ford uses, with the F-150, largely aluminum. We do expect that to be question number one, if not part of Ford's script in a few minutes about how they hope to guarantee those supplies.
What are the strengths?
But the silver lining is, of course, the showroom pricing.
Okay, yeah. Talk to us about that pricing as well, and particularly the strength maybe overseas.
Yeah, I mean, pricing isn't quite as strong overseas as we think it is in North America. But in North America, as you look at the record ATPs they're getting, the days of $5,000 off, 0% financing, and dealers having to kick in extra out of their pocket are long gone, at least this year in the auto industry, and last year, frankly, as well, with the COVID disruptions.
From the consumer side of things, Brian, I mean, how much are prices really supposed to edge higher here, given that these chip issues are going to last a while?
You'd have to look vehicle by vehicle, but it's easily up if you talk about a pickup truck, 8,000 to 10,000 year over year. In addition, and unfortunately, there are dealers who extract additional markup beyond that. That's actually an opportunity for the OEMs to recapture some of that. Interest rates are obviously low, plus the trade-in values with used car prices going up are very strong. So consumers are probably not seeing a big increase in the monthly payments they're making on these very expensive trucks, assuming they're coming into the showroom with a trade-in that's worth significantly more, up 39%, I think, year over year, according to the latest auction results.
It's always worth remembering these are companies that are seeing significant falls in their profitability. It's just that they're doing better than many had factored in. Barclays analyst Brian Johnson, really great to have your take across both of these companies. We leave you to go and jump on those analyst calls. Meanwhile, we've got some more breaking news. And this is, again, a story of supply chain when it comes to the labor force. Starbucks, of course, you know it as the biggest coffee chain in the world. They're saying that they will increase the amount that they're paying to their laborers to $17, nearly $17 from $14 as it stands. That's the lift in average hourly pay. That's going to happen in the summer. This is a plan that will kick in across the United States. So, of course, this is all as we have a stubborn labor shortage here in the US and companies looking to raise wages to entice them in. Currently, Starbucks not moving after hours. But all of this discussion continues to just pivot around the world of supply chain, the issue of reopening. And, of course, that is felt hardest when it comes to the chip sector and, indeed, the auto industry on the back of that. We're going to talk about how quickly or not, as the case may be, we can rectify things. So Willie Shih, he's the Professor of Management Practice at the Harvard Business School. Stick with us. This is Bloomberg.
хорошо подготовлены, насколько это было возможно за столь короткие сроки. Это на самом деле эксперимент. Поэтому мне не хочется употреблять такие слова, как страх, боязнь и все прочее. Мне хочется говорить, что это очень волнительно, но одновременно и радостно, потому что, вы же понимаете, как мало людей вообще там были. А у нас есть возможность полететь в космос, и не просто полететь в космос, а сделать там то, что мы умеем по-настоящему хорошо делать на Земле. Это снять кино.
тоже это не просто очень дело-то. У нас же экспериментальный во многом этот проект, поэтому мы сейчас столкнемся с кинематографическими нюансами, которые мы могли предвидеть отчасти, какие-то, наверное, не могли предвидеть, то есть несмотря даже на то, что, опять же, все делились с нами там космическим опытом и так далее, но это опыт, это первый раз, то есть второй будет проще.
Last week, of course, we brought you very special coverage of the supply chain crisis, live from the port of Long Beach in California, where a record number of cargo ships are waiting to unload. We talked in particular about the impact of the chip shortage on the auto industry with Jessica Caldwell from Edmunds.com. Have a listen.
Used car prices have really skyrocketed, and new car prices have gone up as well. Basically, if you're in the car market, you're going to see a much higher price than you would have just a few years ago. And there really isn't relief in the immediate term, because we know we have the microchip shortage on the new car side that's going to prevent a lot of people from buying new vehicles, and that's trickling to the used car side, because anyone that's looking for relief from the new car market going into used, those prices are high too. So it really is tough out there for car shoppers.
Now we want to dig into what's tough out there for car shoppers, what's tough out there for car makers. Well, Willie Shih, Professor of Management Practice at the Harvard Business School, who knows the chip sector like no other. Willie, we talk here from Mary Barra saying, look, this is going to go on until 2022. We see from Ford, they think it's going to go on until 2023. What makes it get better by that point?
Well, Caroline, I think the problem is, as one of your previous guests said, it's going to depend on the model, because I only need to be short one chip and I can't assemble a vehicle. Now, I think one of the things that's making the shortage worse right now is that people are ordering a little extra just in case. Okay, so, there's still shortages. As I said, you still only have to be short one chip to not be able to assemble a vehicle, but everybody has all this extra inventory, and that extra inventory is kind of exacerbating the shortage. If you look at some of the numbers that have come out, TSMC said earlier this year they were increasing microcontroller output in the first half of the year by 30%, and for the full year they anticipated 60%. Well, those chips are going somewhere, right? So you say, what's going on with the shortage? It's like, I think a lot of it is in those little stockpiles in various places just in case.
And we know the industry is so cyclical, at least when it comes to pricing. What are you noticing about the pricing power? And then once you increase capacity 60%, and of course it takes some time to roll that out, but once you do that, if it's more than demand, what is the pricing power and how does that shift?
Well, right now, the chip makers have all announced price increases for next year, like typically around 20%. Now, I should point out, especially in cases like the automotive sector, the chips that they use, those tend to be on older technologies, and the chip makers are always very careful about increasing capacity there, because that's the last thing they want to have is excess capacity in what are really kind of a commodity sector, right? So, in fact, probably what has exacerbated this shortage has been kind of a shortage of investment coming up to the pandemic, right? So capacity was already pretty tight. Now they have the pricing power. If they increase all that output, you got to wonder at some point somebody's got to use all these chips. I think the bet is the demand will continue going up, and so it'll absorb that capacity. But there's also a risk of excess capacity and softness down the road when this shortage gets alleviated. I think a lot of people are afraid of that. That's historically been the pattern.
I'm wondering who the winners and losers are in this game here, because, we're waiting on a massive IPO pricing tonight with Global Foundries. I don't think the chip business has been this exciting for a long time. And so, who wins at the end of the day from some of these constraints?
Well, Global Foundries, you have to admit, the timing of that IPO is about as good as it can get. So, good news for them. I think some of the established makers who really have been the go-to suppliers like TSMC, they continue, to be able to command price because they have a lot of capabilities that others don't. You have to look for who are going to be the marginal producers if there's eventually a surplus capacity. Those are the guys who are going to get squeezed.
Interesting. Okay, so Willie, more longer term, when you see global foundries, for example, coming to the market, when you see the excitement in onshoring, does that remain a long-term game, do you think, that the US will remain a producer of chips well past what is the 2020s chip crisis?
Well, that's certainly the bet that a lot of people are making now, especially there's so much emphasis on trying to, for example, Intel is upping their investment. Global Foundries has announced more investment. The rumor has that Samsung wants to expand in the U.S. as well. So, the bet is that rising demand from all these applications like, cloud data centers, digitization everywhere. The bet is that demand will continue to rise. Okay, and right now is a great environment for people to go after subsidies because I think the U.S. government, well, depending on the fate of the CHIPS Act, right? There's talk about extensive subsidies. So if you want to build a plant in the U.S., this would be a good time to try to compete for those subsidies. Now, longer term, you have to bet on the growth. You have to believe in the growth here.
How long, though, does it take that to ramp up? And if you invest in manufacturers here in the U.S., does it ramp up enough in time?
Well, yeah, so that's usually the problem. Okay, now, for example, if you're looking at automotive chips, they're using older technology. Now, Global Foundries would be well positioned to capture that. Intel has been talking about converting their plant in Ireland to serve that automotive market. Those are more trailing edge technologies that have been around for some time, and that'll be very susceptible to excess capacity. So people have to be careful there. On the leading edge technologies, the things that TSMC is really leading in, supplying companies like Apple, Qualcomm, MediaTek, NVIDIA, and companies like that, it's all about capabilities. Yeah. Now, the question will be, the U.S. government and many people in the U.S. want to see more of those leading edge capabilities in the United States. Your question really is, how long will it take those capabilities to develop? That's a much longer term play than just building another fab or another factory, because not only do you have to get the equipment, you have to get the capabilities and the process in, and you got to get a lot of practice. So, if the question is how long will it take for Intel to catch up, that could be, 5+ years or longer.
Willie, very quickly, you've been at Harvard Business School since 2007. You were almost 3 decades in the industry before that. Is this the most exciting that chips have ever been?
It's pretty exciting. I mean, I think if you follow the chip industry, as long as I have had any connection with it, it's always been an exciting industry just because, the spectacular increases in performance we see. Back in the mid-90s, I used to sell computers, that cost $32 million then. Now you have that power in your phone, right? So it's an amazing industry.
Spoken like a real professor, Caroline. The chip industry is always exciting. Willie Shih of the Harvard Business School, really appreciate your time. Thank you. And coming up, while drivers, they might be ready to make the jump to EVs, dealers across the U.S., they're still having trouble getting them off the lot. And we're going to explain why next. This is Bloomberg.
The 700th anniversary of Dante Alighieri's death has triggered the work of many institutions and offered a very rich schedule of events. Today in Santa Croce, we present one of these projects that suffered a difficult start because COVID-19 has stopped the project that was shared by the Opera di Santa Croce by the Franciscan community. from Florence Municipality and the Fund for Religious Building of the Internal Minister. Today, Felice Limosani's project is finally enjoyable. In the Pazzi Chapel, the marvelous architecture by Filippo Brunelleschi, the most important images from the Divine Comedy created by the French illustrator Gustave Doré. Through these images we can live the violent emotions of hell, the weight of purgatory and the sublime joy of paradise.
The digital humanities are a cultural occasion to exploit. Summing up, it's about merging humanistic disciplines with new technologies. I find this to be an innovating and modern tool to update culture. Cultural heritage becomes something to hand over to the new generations and not to be put aside. So it's about using technology, pixels, and binary code with a human and humanizing content.
Countries, Francine, that are the equivalent, that equal 80% of all the emissions. Those 20 countries, above all, have to step up.
So earlier this week, Hertz, just 4 months out of bankruptcy, made a huge move, ordering 100,000 Teslas in the first step of a pretty ambitious plan to electrify its rental car fleet. Now, the order sent Tesla shares soaring. You know it, the automaker is now valued in excess of $1 trillion for the first time. And just today, fresh off the blockbuster order, Hertz reached an exclusive agreement to supply Uber drivers with these EVs and signed up with Carvana to dispose of rental cars it no longer wants. Well, hey, there might be a little bit more inventory, therefore, on second-hand cars now if they're going to be putting their old Hertzes on there.
Yeah, and it starts pretty much right away. The program starts on November 1st, Caroline, and they can rent any of 50,000 Teslas from Hertz instead. So even though it might be hard to buy an EV, maybe you want to rent one.
There was some interesting commentary, though, some jokes about the user error. Cars are so complicated now that if you're trying to rent a Tesla or rent it...
I can hardly unlock them.
Same.
Then there's the insurance.
There's a button for the parking thing. I used to just pull up the parking thing. Now there's hidden buttons everywhere. You can't even open up there's no gas station on the Tesla, but you can barely even find the buttons. You had to figure out how to use them. Let's discuss more about user error, right? Let's do it in our EV segment next with Bloomberg's Hannah Elliott. She wrote a really interesting piece this week, and it is turning out to be one of the biggest hurdles to get Americans to buy EVs. It's actually training salespeople. Hannah joining us now from Los Angeles. Hannah, what are the hurdles for the salespeople?
Well, it's a really good question, and what I'm hearing from dealers and the people helping dealers sell electric cars is that it's much different and much harder to sell an EV than a regular internal combustion car. It's more like back when iPhones were first coming out and cell phones, and we all were trying to deal with this completely new technology on a completely new platform. And it's just like you said, we didn't even know how to turn the thing on or charge it. It's kind of like that with electric vehicles. We are having to relearn habits, and the biggest habit with a car, of course, is fueling it. So we're having to relearn actual daily lifestyle habits to even make the thing run to begin with. And what I'm hearing too is a lot of the people selling EVs have never actually owned or really driven one. So it's a lot more difficult to sell something you've never driven.
So what are the dealers doing? I mean, they're getting all their new sales recruits to actually just get in a Tesla at least, learn how to turn it on, learn how to drive it, enjoy it, because they're kind of fun.
Yeah, exactly. The whole idea is, hey, get in the thing, explore. A lot of dealers are bringing in outside help, special special teachers and trainers from places like Inside EVs and Charge Enterprises that really sit down with the dealers and teach them, okay, this is how you download the app to find charging stations. This is the difference between a level 2 charging station and a DC fast charger. These are the rebates that the car might be qualified for in our state, in our city. All of these things take some time to go through. They're not just intuitive, they're not just easy. So dealerships are bringing in outside help to really give seminars with their salespeople to lead them through the step-by-step. I've even heard they're making special hang tags to hang on the rear view mirror of these new electric vehicles that sort of give the salespeople a little cheat sheet so they can remember, okay, this car qualifies for this rebate and we'll get this tax credit. So it's a big lift on a lot of different fronts.
Amazing story. Amazing, once again, friction in trying to just sell your latest goods. Even if you can get the chips to make them, you then got to get the people to be able to use the chips inside the cars. Hannah Elliott, it's a great piece. We thank you for joining from LA. I mean, great insight coming from Hannah. Amazing just how much we continue to talk about some of the blockers to this industry. Yes, Ford is up after hours. Yes, they're doing better than expected, but their profits are being eroded right now. We've got to remember.
Yeah, and really interesting commentary about the chip shortage. The Ford CEO, I think, saying that it lasts through 2023, but they do expect it to ease somewhat by 2022. I thankfully am not in the market for a car, but I hear, as Romaine would say, the dealerships are empty.
Yeah, and they don't apparently know how to teach people how to buy EVs. But, you know, beyond that, keeping an eye on Global Foundries tonight, guys. I can't be more excited for this IPO. It's massive, $2.6 billion.
Keep an eye on that pricing. Keep an eye on how it trades tomorrow. But that does it from What You Missed.
Bloomberg Technology, it's up next.
Have a great evening. This is Bloomberg.
van en contramano de lo que dicen la comunidad científica y los territorios que están en lucha. Han profundizado el extractivismo en Argentina con más agronegocio, con más transgénicos, con más agrotóxicos, con más proyectos mega mineros. Y ahora, como si fuese poco, han avanzado presentando un proyecto de ley que es la ley de hidrocarburos.
So if someone wants a leader, is it better to find a general or an admiral?
That's like asking me to say, who do you love more, your son or your daughter?
This virus is here to stay for quite a bit because it has been spread all over the world and has this ability to create mutations and variants.
is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
From the heart of where innovation, money, and power collide, in Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Rent the Runway goes public. We're going to hear from co-founder and CEO Jennifer Hyman about the future of the closet in the cloud and how the company is navigating supply chain challenges from warehouse to wardrobe. Plus, Instacart taking on Amazon. The grocery delivery upstart wants to arm grocers with the shopping cart technology of the future. I caught up with CEO Fidji Simo in her first 90 days on the job in an exclusive interview. Plus, how stores are navigating food shortages and barren shelves. And Twitter shares tank on earnings despite ad revenue holding up fairly well. I'll speak with CFO Ned Siegel about how Twitter plans to work even harder to be part of your daily ritual. We'll get to all of that in a moment, but first let's get to our Kriti Gupta and U.S. stocks falling from all-time highs. Kriti, walk us through the day.
Emily, we started in the green, ended the day at session lows, and it was really that tech trade that you saw underperform at the end of the day, especially when it comes to those subsectors. You saw the Golden Dragon Index down 0.7%, really not catching that investor bid that was so strong last week. In addition, NASDAQ Biotech and the SOX Index also lower on the day. I really want to zoom in, though, on, of course, the tech trade, because we know big tech led the way higher. They also led the way lower. You mentioned those record highs. You saw an immediate bounce back after that. So around 2 o'clock, maybe around 1:30-ish, you did see the NASDAQ 100 hit all-time highs before coming and dropping. And once again, all about liquidating those positions when it comes to those big tech stocks. And it was once again your Facebooks, your Apples, your Amazons that drove that entire trade down and dragged the S&P 500 lower as well. We can't continue a market's head without hitting Bitcoin, of course, because not only was risk sentiment a little bit sour in the stock market, it was in the crypto market as well. And this really shows you dropping below 60,000, completely natural, as we did just hit those record highs. So you are seeing a little bit of a pullback. But take a look at this. Not by far a big pullback relative to the rest of the year, Emily. Let's see if it can rebound tomorrow.
All right, let's see. Kriti, thanks so much. I want to stick with crypto's Wild West the last few days. I'm joined now by our Bloomberg News crypto editor, Stacey Marie Ishmael. So as Kriti said there, Stacey Marie, up above 60, now down below. What's going on here?
Well, I mean, also very much as she said, we've definitely seen a lot of liquidation, some profit taking, and, folks just exhibiting a little bit of caution. There has been a lot of news. There's been an increasing amount of speculation about what's going to come next on the regulatory front. So we are absolutely seeing people decide, I'm just going to sit this one out and see what potentially happens next week.
You've also got more Bitcoin-related ETFs out. Is this because there's not a spot ETF yet? And when does that happen?
Well, the when does that happen is the million-dollar question. I think one of the things that folks are hoping is that the wave of approvals for futures-backed ETFs is going to signal at least a more conciliatory regulatory approach that will allow those spot ETFs to happen. We haven't seen any evidence, though, that there is a softening of Gensler's attitude towards Bitcoin spot ETFs relative to futures. That is something that we are looking at very, very closely. In the meantime, what we are seeing is an uptick in filings of other kinds of futures-backed Bitcoin ETFs, including leveraged and derivatives-focused ones.
Meantime, Robinhood's crypto transaction revenue plunged last quarter, 78%. I spoke to the CFO, Jason Warnick, after the show yesterday, who told me that sequential decline was really, he says, about coming off the record highs of Q2 for crypto and Doge trading. That brought in millions of customers. It just normalized, he said, and came off those highs. Is that a Robinhood issue, or is that a broader crypto industry trading issue? Just less people trading?
It's true, and I think it's a combination, right? You definitely had an overall market decline in crypto trading. Piper Sandler put out a note on Robinhood in which they noticed that, there was definitely a 35% or about a 35% decline in overall crypto trading volume, but that was still way less than the overall decline that Robinhood experienced specifically. And, you would have seen in the past couple of days, there's been a chorus of retail investors calling for Robinhood to list the meme coin of the moment, Shiba Inu, and so far they have resisted those calls.
All right, I got to ask you about SHIB. What's happening there?
Well, it's certainly on a record-breaking rally towards some number or another. One of the things that's interesting about this, and our colleague Joe Wiesenthal had a markets newsletter this morning talking about the kind of the generational shift from Doge being the coin of the moment to Shiba Inu being the one that folks are interested in right now. I think that people are really interested in this idea of, one, it's a momentum trade, right? If you think it's going to keep going up, folks are like, well, it's going to keep going up, and we've certainly seen that kind of commentary from retail investors. But there are also folks who are trying to argue, no, this is something that's more developed than just a trade. We're looking to see what kind of infrastructure is happening here. Are there going to be NFTs and other things associated with this? But we are certainly taking the position that in the way that this has gone up, in the same way that we've seen Bitcoin come down from some of the highs, we're fully prepared to see similar downward pressure on SHIB in the coming weeks.
All right, we'll see what tomorrow brings. Stacey Marie Ishmael, Bloomberg News, thanks so much.
My pleasure.
Meantime, Facebook could have a new name in the next 24 hours. The social network's Virtual Connect event kicks off Thursday, where the company is widely expected to reveal a new moniker that signals its metaverse ambitions. Will it be enough to spin the